commodity. But let's focus on India's External Affairs Minister S. Jaishankar met with the US Secretary of State Marco Rubio on the sidelines of the 80th United Nations General Assembly. This comes days after the US President Donald Trump unveiled a $100,000 fee for new H-1B visas. This also marks their first in-person meeting since Trump administration imposed steep new tariffs on India, including 50% levy tied to Russian oil imports. The two leaders discussed trade, energy, pharmaceuticals, critical minerals, with both sides stressing the need for sustained engagement. Let's move on and talk about those GST rate cuts that have kicked in, right? The Finance Minister Nirmala Sitharaman visited Lakshmi Nagar market in New Delhi and interacted with shopkeepers and consumers to mark the commencement of the new GST regime. Prices of kitchen staples, medicines, electronics, automobiles and others are set to get cheaper. CNBC-TV18 Shilpa Ranipeta brings a report on the impact of new GST rate rationalization on the common man.
Well, the biggest benefit this time from the GST 2.0 is on household expenditure, because most of our daily essentials and food items have now come under the 5% GST, or they're not going to be taxed at all. So I'm here to take a look at how cheaper my cart is going to get. So my ghee, for instance, this is now going to be almost 40 rupees cheaper than before. Whether it's my paneer, that will now have no tax on it, no GST on it. Even my coffee is going to be about 30 rupees cheaper than before. My shampoo also 55 rupees cheaper than before. And I'm also picking up some juice. This juice is going to be 8 rupees cheaper than before. And even my Maggi, this pack will not only be cheaper from about 120 to now 116, but the pack size is also increased to about 600 grams.
जो बजट में पूरा फायदा ही मिलेगा ना, मतलब 18% का 5% होगा तो 12% तो फायदा ही मिले ना, तो उससे पूरा बचत हो सकते है ना।
पहले तो ज्यादा खर्चा होता था, अभी कम हो जाएगा, तो उससे दिवाली में भी फायदा हो जाएगा। आने वाले ये दिवाली दशहरा उसमें भी फायदा हो जाएगा। अभी दिवाली तो अच्छी ही जाएगी सबकी।
But here's the thing, you might still see a lot of products on the shelves that have older MRPs. This is because the inventory that was made before the GST cuts is still out there in the market, and that will take some time to be cleared out. But here's the thing, GST is applied on the date of supply. So even though the product shows a higher MRP, companies are passing this on through discounts and trade schemes that are available at your kirana stores or even your supermarkets. So while the product might show a higher MRP, at the counter, you will actually pay the lower price, reflecting the cut from the GST reduction. Industry players say that the biggest beneficiaries will be the middle class. Now, say there is a household which has household annual expenditures of about 25,000. They could see benefits of up to 2,500 rupees. And from an FMCG industry point of view, after several quarters of subdued demand due to high inflation, companies are now betting on the GST-led affordability along with the festive push to really lift growth and boost consumption once again. In Mumbai, Shilpa Ranipeta.
That was an interesting report there on the benefits of GST rate rationalization that will come in for the common man. But with that, we're absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in, leaving the Nifty implied open as of now with a very muted start that is indicated for the Indian markets. Thank you so much for tuning in. Up next, Bazaar Morning Call.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's Tuesday morning, getting into the week. Yesterday, of course, was a down day, second down day after Friday's little bit of profit booking. What does today hold? That's a big question. I'm Prashant. With me, my colleagues Nigel and Rima. And I think, Rima, green is an indication?
Yes.
Green, we've got 2 days of pullback. Normal after a 1,000-point rally. But let's see today. S&P, Nasdaq, Dow continue to power on. Fresh highs.
That's right. I'll go with Rima. The color of the day for Navratri is red. So I think we should, maybe it should be a green day.
Well, let's hope so, because last night US markets have hit another record high. I mean, you know, US and India both have been they were kind of sort of step in step, right? Lock in step till at least the year before last, and divergent paths since 2024. Let's take it from the top. So US indices hit fresh record highs. Once again, I think it should be the 30th, at least close to the 30th record high, fresh high in 2025 so far. S&P up 0.4%, Nasdaq 0.7%. And it's all about tech stocks, right? I mean, it's fueled by one name after another. And I'm being forced to, I don't usually talk about individual names and what they did, but it's consequential. NVIDIA 4% after it said it would invest about $100 billion in OpenAI to fund an enormous data center build out. That is NVIDIA for you. Apple 4%, and analysts essentially saying that the iPhone 17 upgrade cycle is being underestimated by the street. I'm an iPhone, I don't want to reveal, but a couple of steps behind iPhone 17. Oracle was up 6%, and this after White House. There was a Bloomberg report, and Bloomberg said that White House has confirmed to them that Oracle essentially will secure TikTok's US algorithm to facilitate a sale to American investors. Oracle is part of that group, apparently, and Oracle was up 6%. So you got NVIDIA, Apple, Oracle, at least the large tech companies, tech stocks, which did very, very well. So it's really large cap, mega cap, technology led. Lots of Fed commentary on interest rates. Most of it, and I'm not going to go into the detail, I'm just going to put out the outlier. Most of it was cautious. So some 4 or 5 Fed governors, some voting members and others, not all spoke. And most were cautious in terms of whether this is the beginning of an easing cycle, except one. And I think that one, I sort of hinted at that yesterday as well. This is, of course, President Trump's confidant, Fed Stephen Miran, who's, of course, come on the board of governors now. He said that interest rates should be much lower to prevent damaging the economy. It should be closer to the mid 2% area, and a neutral rate of interest rates has been pushed much lower. So, this was expected. But he was also perhaps the only one during that last week's FOMC meeting who voted for a 50 basis point cut. Others were all at 25. This is just last week, a few days ago. Tonight, that is, focus will be on the September PMI numbers and, of course, Fed Chair Powell's speech. So we'll hear from him again. I'm not sure whether we will hear something new. Just to tie in the levels and, close that out. Nifty yesterday closed below the 40-hourly exponential moving average in the final hour of trade. Remember, yesterday the market sold off, recovered fully, almost into the green, and then there was the second wave of selling. But we didn't stay at the lows. The market did rebound about 70, 80 points. So support is 25,151, which is yesterday's low, and then 25,133. So those are two immediate support levels. Resistance is the high of 25,449, and then the upper end of the rising channel, which is 25,620. And the Nifty Bank yesterday closed marginally below the 40-hourly exponential average, like the Nifty. And here the supports are 55,215 and 55,027. So that's the roundup as far as levels are concerned. GIFT Nifty indicating a 20-odd point lower kind of a start. Yesterday, of course, the broader market was under a little bit of pain. I mean, market breadth, etc., was negative. We'll pick up on some of these things as trades opens up today. But how are the F&O stats looking? Nigel has walked across he's got those for us. Nigel, good morning.
Well, as you mentioned, Prashant, overnight, global Q is stable. You like that. And also today is going to be a big day because it's Tuesday, and that's why you'll have the Nifty weekly expiry that will play out. Now, in yesterday's trade, the overall volumes are relatively lower in terms of institutional participation. The FIs, though, they sold while the DIs bought. However, after a while, you had the institutions put that together. There was a net sell number coming in from the institutions on the whole. And that's why we did see some kind of profit taking on the index. But in the F&O market, well, there was some unwinding, some lightening of position. And this is for the second day running that we're seeing that, both on the Nifty and to a larger extent on the Nifty Bank. And that perfectly ties in with what the FIs did in the F&O market itself. So they did unwind, they did cover some kind of short positioning. If you look at index futures, they covered close to around 1,900 short contracts or thereabouts. The short positioning, though, continues to remain aggressive at around 87%. In absolute terms, it's more than 1.4 lakh contracts on the short side. So the FIs, yes, they've lightened positions a little bit, but they're still net short. Moving to stock futures, well, out there as well, they added more shorts than longs in the ratio of close to around 2 shorts for every 1 long position. And now they're writing calls aggressively as well. And that's precisely what we saw in yesterday's trading session. More than 8 calls were written for every 1 put. And because of this aggressive call writing, you have the PCR that's come down. A few sessions ago, it went dancing away to around 1.35. Because of the aggressive call writing, now it's come down to around 0.72. Remember, we have seen when this PCR moves around 0.65 or thereabouts, that's when you see a bit of a bounce. So we're closer to the lower end of the range. And the calls that were written comes up for you on the screen. 25,300 call, 25,200 call. Between that, 2 crore shares getting added, and these expire today. So aggressive call writing is what we have seen in yesterday's trade. I'll tell you what, if the markets can get their momentum, these guys will be in trouble. So they are playing on eating into this premium just for today. So we'll have to keep an eye on that. On the put side, 25,200 put, though, saw a fair bit of open interest build up in trade yesterday. So levels. Yesterday's low, well, that becomes the near-term support. 20, 30 points lower as well. You don't want this level to break decisively. And on the upside, yesterday we went to 25,331 and we saw a bit of a resistance out there. But that's the mark you're looking at. On the Nifty Bank, which is the last constituent, it sold off in the last hour of trade actually. But otherwise, it was holding steady. You want to see a higher high. The last few days, it's been making lower highs. So that's the mark. Today, you'll want that level to get taken out. And the tech index got hit yesterday, but Nasdaq was quite stable overnight. Sometimes there is that correlation that plays out. Let's see whether or not we can see a bounce after the kind of selling that we saw yesterday. And finally, in terms of stocks that I'm looking at, we alert you on closing bell about potential stocks that are moving in and out of the F&O ban. RBL, well, that's the one that's come into the F&O ban. The big positioning being added out there. So I'll keep an eye out on that stock. The shorts are getting a little bit nervous on that one. While Angel One is the one after a few trading sessions that's come out of the F&O ban. We're alerted about you about both these two in yesterday's trade itself.
Nigel, why I'm going to go with green? I was just thinking, because this festive cheer is showing up in the auto sales numbers.
Yes, indeed.
Right? Hyundai delivered 11,000 sales yesterday. Its best single-day performance in 5 years. Maruti did even better. 30,000 sales delivered yesterday and very large inquiries. Sudarshan will talk more about it. And also today is going to be a busy day on the IPO front. 4 IPOs open out for subscription. We'll get chatting with one of them, Anand Rathi, on the show later on Bazaar. But let's also get you the equity calls for the day. Sanjeev Prasad of Kotak Institutional Equities expects stabilizing earnings, strong growth in earnings in FY27 and a steady macro to provide a high floor to the market. But rich valuations across sectors and stocks in global headwinds will act as a low ceiling to the market. Therefore, markets may offer modest returns over the next 12 to 15 months, with growth in earnings being partly offset by lower multiples. All right, let's move on then and get a handle on the global cues and the impact on India. Mark Matthews of Bank Julius Baer & Co. is now with us on the show. Mark, first, weigh in on what's happening in the US market. Is there way too much exuberance that's being priced in? Look at the S&P 500, 17% up so far year to date. Last year it was up 24%. The year before that it was up close to about 23%. And while AI is propping up, even in this NVIDIA OpenAI deal, we're talking about $100 billion of an investment. Of that, the cash component is only going to be $10 billion. The rest of it is going to be about future sales coming in from OpenAI as they buy NVIDIA chips. So, is there just too much excitement?
It's hard to quantify this. You may recall in 1995, Alan Greenspan warned about irrational exuberance. I might have got the year wrong. It was around then. And of course, we had the dot-com bull market literally after he said it, that lasted up until 2000. So there is exuberance. There are signs of a bubble. You mentioned OpenAI. The CEO, Sam Altman, said last month he sees kind of bubble-like market. But just to use NVIDIA as an example, because you also mentioned that, and it is the bellwether for this technology-led bull market today, NVIDIA trades at somewhere, I think, around the low 30s next year's earnings. So it's sort of in between 32 to 35 times next year's earnings. And that is very expensive, of course, relative to the long-term price-earnings ratio of the S&P 500, which is around 15 times. But is it a bubble? I don't think so. I think a bubble is something you start talking about above 40, maybe even above 50 times PE. So exuberance, yes, but this is something that I think can continue to persist if we look at past bull markets like this, most notably the dot-com bubble, where the top 5 technology stocks peaked at something like 55 times their next year's earnings in the year 2000.
Yeah. So NVIDIA, low 30s P multiple, right, Mark, you're saying? Morning.
Yes, 12-month forward PE is probably around 33
And growth
times.
at what, 25% odd?
NVIDIA's growth, I don't know the latest numbers. I suspect it's in the high 20s. Yeah. For the Mag 7, the growth in the most recent quarter was in the mid 20s. It is going to come down into the teens over the next 12 months.
You know, don't you think, Mark, more than P multiples, right, as a metric, perhaps it is this massive spending which is underway, which, and if there is any slowdown from some of these hyperscalers, etc., because of a variety of reasons. I mean, for example, on ChatGPT 5, there have been lots of, some criticism that it's not up to what it was built to be. There has been, there have been research papers showing that incremental benefits are not what is expected for all the spending which is going on. So return on investment is the big one, which has always been the case. You think that at the margin is the risk? Because, I mean, here in India, 30p multiple is very very reasonable. 50 is doable. And only when you get to 70, 80, 100, and there are many here, you get into the euphoric, exuberant kind of band. So just wanted your thoughts there, Mark.
Well, the first time that this was highlighted, the idea that they're spending more than they will recoup was in June last year when Goldman Sachs published a report stating exactly that the spend on AI will not be met with an adequate return. And of course, the market has gone up a lot since then. So it had a wobble last summer on that idea. But the earnings growth of the Mag 7 has been so good that the market is willing to give them the benefit of the doubt. And I don't know the answer, honestly, whether this it will be kind of like Amazon, say, 15, 20 years ago, was trading on much, much higher valuations, but it grew into those through the exponential growth of its e-commerce and its cloud business. Will it be like that, or will it be a big disappointment? I don't know. I think only time will tell. But I think what we are seeing is already the benefits of AI flowing into the broader corporate sector in a rise in revenue per worker. And it's been happening for a couple of years now. I suspect it is related to AI to some degree. And you saw similar rises in revenues per worker with the introduction of PCs in the 80s and the internet in the 90s, cloud computing in the 2000s. So I think it is going to be very good for productivity in corporate America. But at what price do you pay for that? That's the big question. I would just say that, as I mentioned earlier, around 30 times is still not a price that you would consider absurd.
Hi, Mark. Good to see you. Well, the US markets have been running on steroids, actually. Nothing to stop it. But there are some near-term risks. And last week, the Senate rejected the Republican as well as the Democratic proposals to at least temporarily fund the federal government. Can lawmakers strike a deal prior to September 30th, or are we bracing for a bit of a shutdown? History suggests that normally they get past it. But do you think that could be a near-term risk?
I don't think so, really, because if you look back at other government shutdowns, I don't remember the last time they had one. It was around 12 or 13 years ago. You have some small disruption, but eventually, they agree to extension of the debt ceiling and things come back online. I suppose the only risk people are thinking about this time is if a shutdown prevents the federal government bodies that do release data from releasing that data in a timely manner, like the labor market data and the inflation data, then the Federal Reserve wouldn't be able to make decisions because it doesn't have the data. So that's something I've read that is a concern, but I suspect it won't end up being anything material.
Very quickly, before we let you go, the dot plot suggests that maybe, in fact, we get 2 more rate cuts this year. Do you think we do?
Yes, we are penciling in 2. And I think the Fed wants to get ahead of the curve. They've clearly indicated the priority is the labor market rather than inflation. And in the labor market, you have very little firing, but you also have very little hiring. So if for whatever reason the firing was to go up, the unemployment rate would rise quickly, and they don't want to have that happen.
Okay, Mark, thank you very much for joining in on the shutdown bid. We've had so many scares in the past, right? But last minute, there's always been a bipartisan deal which has been stitched together, and that government shutdown has been avoided. Mark, great chatting with you this morning. Thank you once again. Let's tell our viewers the interactions that we've lined up on the show today. So first up, coming up at 8:35, don't miss the CNBC-TV18 big exclusive. The chairman and CEO of JP Morgan, Jamie Dimon, on India-US ties and the US economy. At 9 a.m., we will be joined by Ajit Kumar of JM Financial for a discussion in the banking sector, the stocks which look good. At 9:20, we go back to the JP Morgan conference and invite Rajiv Batra. He will be our market master for the day. 9:35, on a corporate corner, Neeraj Akhoury, the MD of Shree Cement, will join in to talk about the impact of the GST cuts on their business and if there has been a sales pickup. And following that, we will be chatting with Pradeep Gupta, Chairman Managing Director, Anand Rathi Share and Stock Brokers, whose 750 crore IPO opens today. And towards the end of the show, in our special segment, it's the economy. Lata will get chatting with economists Jahangir Aziz and Luis Organis of JP Morgan on global and Asian economies, currencies and commodities. All things macro.
Time to slip in a quick break. Got a lot of stock-specific action, a special top 10 segment. For the time being, I give you a sneak peek into the list. Maruti, Hyundai, Defense Stocks, KC International, Brigade Enterprises, RVNL, Birla Corp, JK Lakshmi Cement, Shilpa Medicare, as well as JBM Auto. Could be that sort of a day. Most of these should react in the green. None of them in our top 10 segment will react to negative news flow. Take that break, come back, get into further detail on all of these names.
Welcome back. Yesterday, markets gave up close to about 0.5%. Over the last 2 days, we've corrected about 250 points on the Nifty, but this comes on the back of a near 1,000-point rally. As we speak, the Nifty is at 25,200. And the GIFT Nifty is suggesting a flattish start. The picture across Asia is a bit mixed. On the way up, you've got the Taiwanese, Korean markets surging, perhaps given the AI optimism, and the entire ecosystem is doing well. And many of these stocks are up and about. But Hang Seng is a bit under pressure, but there is a typhoon there, which is also hurting business. But let's get to the individual stocks then. This is our CNBC-TV18's list of top stocks for the day. Our entire research team is standing by. And first up, it's about autos and the record sales done by Maruti and Hyundai yesterday. A very auspicious start to the Navratri season for them.
So the comments from these auto companies reminds me of a dialogue from a movie, Uri Surgical Strike. How is the Josh? It's high, sir, and that's what reflecting from the comments from Maruti. It's saying that the inquiries are coming. It's like it has never seen in the last 35 years, and it remains very high. And there is a probability that it might even run out of inventory in some of the variants. So on the first day of Navratri, it has recorded 80,000 inquiries and has delivered more than 25,000 cars, and saying that very soon it's likely to deliver even 30,000 cars. And since at 18th of September, the day it had announced the additional discounts and the pass on of GST cut, it's been seeing 75,000 bookings. And on a daily basis, the bookings have been 15,000. That's almost 50% higher than the on the normal days that company has been seeing. And the most positive part is the response that company has been getting for the entry-level segment, where the booking has been growing by 50%. So the comment from Maruti will also be positive for in the bike segment. The companies like Hero Moto, TVS, and Bajaj Auto, if Maruti is getting a huge response for entry-level segment. Hyundai has also said that on day one it has recorded around 11,000 dealer bookings, and it's the highest single-day performance that company has seen in the last 5 years, and believes that this kind of performance may continue even going forward in the festive season.
All right, sir. Thanks a lot for that. I'll keep an eye on you when we leave in the evening from the parking lot. Sud in new wheels. Josh may be high, Sud. Always on your case. All right, let's hop across to Ria. She's standing by to tell us about the defense-related names. Morning, Ria.
Well, good morning, Nigel. A lot of important commentary coming in from the Defence Secretary yesterday. In terms of capex, he has said that in value terms, we are expecting rupees 25 to 30 billion at a minimum per year in capex terms for defence. And the current plan is to spend around 75% of this capex within India as a part of indigenization efforts. On the budget, he has said that last year, for the first time, we exhausted our defence budgets, and this year the plan is to repeat the same. And in fact, this year we've already hit around 3/4 of contracts of last year, and this year we're going to cross around 2 lakh crores. He has also said that he is confident that the Finance Ministry will be able to provide a 10% increase over the current budget, and in the medium term they are going to ask for at least 17 to 18% of an increment every year. Lastly, in terms of the current capability and the roadmap ahead, we are planning to release the RFP for the Made in India drones quite soon. The total value for this will be around rupees 30,000 crores, and in fact the Air Force has also pointed out certain capability gaps, and going forward the Defence Secretary has highlighted that we are going to look at some capability multipliers like refuel aircraft and as well as airborne warning and control systems. So on the back of this, the entire defence pack is expected to be in focus today.
All right, Ria, thank you very much for that. So it's an important story. And by the way, we're going to play out sound bites so that the chat with the Defence Secretary in a bit from now as well. More stocks with news flow. Vamakshi has got those. She's joining us. Vamakshi, morning.
Good morning. Let me first start off with KEC. Several order wins for the company. They've won orders worth almost 3,240 odd crores, and this is largely in the international T&D business of theirs. And within those orders, they've managed to secure the largest ever EPC order till date. Now, given these orders, year to date, the order book has now increased to 11,700 crores for the company. Bodes well for KEC, going with the green for this counter. Brigade Enterprises is the next counter that we're watching out for. They've signed a JDA agreement, which is essentially a joint development agreement to develop a residential project in South Bengaluru. Now, this project is expected to have a gross development value of around 1,200 crores. Again, bodes well for this counter, green for Brigade Enterprises, and lastly, green for RVNL as well. And that is because the company has emerged as an L1, that is the lowest bidder for a project from Southern Railway, and this project is worth 145 crores.
Okay, all right. Thanks a lot for that, Vama. Well, let's focus on a couple of cement names. Some mild positives is what we did get overnight. So, Birla Corp first up, they've been declared the preferred bidder for Gudda Rampur limestone and manganese block in Telangana. The premium that's locked is at around 57%. Do note that the company doesn't have any kind of cement unit in this particular region, which is Telangana. But why is it good? It secures raw material supply and it's positive. In case they plan on setting up a unit over there, then for the longer term expansion plan, it bodes well. So going with a tinge of green on Birla. Moving to JK Lakshmi Cement, they've commissioned a 1.35 million ton grinding unit at Surat. They've also completed the debottlenecking at Sirohi, and that's what they had promised earlier as well. Now, with this commissioning as well as debottlenecking, they moved from around 16.5 million tons of capacity to around 18 million tons of capacity. And as they've been saying for the last many quarters, the target is ultimately to move to around 30 million tons. So going with green on this one. But let's go to Vinny. Vinny in pink today. She's here to tell us about Shilpa Medicare as well as JBM Auto. Morning, Vinny.
Hi, Nigel. Good morning. So, yes, keeping an eye on both these names. Now, Shilpa Medicare, positive news flow after they've received initial authorization from European Medicine Agency. This is for the drug Rivaro Zacpan, which is in the European market. The market size of this drug is around $2.5 billion. This is mainly used for preventing blood clots. So, positive drug approval coming in here, a big market size for Shilpa Medicare, and that is why green is what we could see. JBM Auto, this one also we are expecting green here after JB Electric Vehicles and Al Habtoor Motors have forged a strategic partnership to provide e-buses and e-electric vehicles in UAE. Now, obviously, Al Habtoor Motors will be an exclusive importer and distributor for JBM Electric's buses in UAE. So, positive there as well.
Thank you very much for that. Zensar Tech has also clarified to the exchanges about the potential impact on account of the H-1B visa. No numbers shared about how many visas they've sponsored, but they do say we do not foresee any significant impact on the financials or operations given our lower dependency on H-1B visa. Let's see whether IT can bounce back after yesterday's cut. Here's a quick recap then of the top stocks. Stocks with positive news flow are Maruti, Suzuki, Hyundai Motors, and watch whether it rubs off on the rest of the auto pack, even though they haven't declared what the sales numbers look like for yesterday. Defense names should be on your radar. KEC International, Brigade Enterprises, RVNL, Birla Corp, JK Lakshmi Cement, Shilpa Medicare, JBM Auto. No stock, at least on our radar as of now, is likely to open in the red. All right, let's now talk about commodities and currencies. Manisha is now joining in for a complete roundup. Manisha. Oops, we've lost that line, but I think gold continues to scale new highs yet again.
Yes.
Yeah, it's
yes,
another high. Night. It's another high.
And I think $750 per ounce. And
silver continues to stay at
elevated levels.
At 14-year high. So we'll try and reconnect with Manisha to find out. Gold is, as you can see, at highs. But let's move on then and getting back to the big IT story that shook the markets over the weekend. Though we got the clarifications, IT stocks were under pressure yesterday. Industry body NASSCOM says that the impact of the H-1B visa fee hike has been softer than what was initially feared of the weekend. In what was their first response in the issue, NASSCOM President Rajesh Nambiar told CNBC-TV18 that Indian IT companies have reduced their dependence on H-1B visas by over 30% in the last few years. Listen in.
Over the years, I think most of the IT companies, IT services company, IT tech companies have reduced the dependency on H-1B over a period of time. So that which means that today we are looking at a much smaller issue compared to what we would have probably looked at maybe 4 years ago or 5 years ago. Good news is that this comes into effect only from the next year, which is 2026, new set of visas. So there's a little bit of a breather for companies to sort of enhance the skilling options that we have. From the last lottery, if you go back and look at from the Indian origin companies, because there are also companies which might have headquartered elsewhere, but clearly Indian origin in many ways. So those were the companies had roughly about 15,000 or so, which was issued in 2025. This was much lower compared to what it used to be. So we came down 30% over the last 5-6 years in terms of the number of H-1Bs, applied by these organizations.
Well, interesting comments there. Now, let's talk about the IT stocks yesterday, right? I mean, they all sold off 3-4% and didn't really recover by the end. There was some recovery, but not much. What did volumes, delivery stats, etc. look like? Hormuz is here with exactly that. Hormuz, over to you.
Good morning, Prashant. And yes, it was IT that dragged the indices lower yesterday as well, right? And it was the biggest single-day fall for the IT index since the month of April. From the tariff tantrum days is when this was the biggest fall for the IT index, almost 3% lower. The companies cumulatively lost close to 90,000 crore in market cap, more than half of which came from the fall seen in TCS and Infosys, which contributed to over 50,000 crore of that fall. Now, starting off with TCS, now if you take a look at the volumes yesterday, they were lower in comparison to Friday's volumes, and even on the 20-day average front, they were slightly higher compared to that. But if you take a look at the delivery volumes as well, even that volumes were lower than Friday's, and even then they were higher in comparison to the 20-day average for TCS, among the biggest contributors to the Nifty downside. Now, for Infosys as well, in this case though, the difference being the fact that volumes on Infosys have been increasing significantly over the last 4 trading sessions. Now, last week we had close to around 50 lakh shares on around last Wednesday, and come Monday, which was yesterday's trading session, we had almost triple of that volumes, which was close to 1.5 crore shares that changed hands in yesterday's trading session. The 20-day average here is only 80 lakh shares, and even on the delivery front, we had close to 1 crore shares that changed hands yesterday compared to another 90 lakh that changed hands last Friday, and the 20-day average here is just around about 50 lakh shares for Infosys. So fall on high volumes and an equally high number of shares marked for delivery as well. Among the top losers yesterday was Tech Mahindra. At one point, the stock was down almost 6%, although it recovered from the lows of the day. Take a look at Tech Mahindra's volumes. Even they were double in comparison to they were double in comparison to Friday, and more than triple in comparison to their 20-day average, almost 4x on that front. On the delivery front as well, close to 30 lakh shares marked for delivery, and the 20-day average here is only 9 lakh shares, so almost triple of the 20-day average on the delivery front as well for Tech Mahindra. You take a look at some of the other broader market names, be it Persistent, be it Coforge, all of them traded above their 20-day average. But the only standout here is Oracle Financial, the only IT name yesterday that ended in the green. Not significantly, but it did end in the green. But here the volumes are not only less than the 20-day average, but even on the delivery front, the volumes are significantly lower when it compares to the 20-day average for Oracle Financial. So IT stocks falling on significant volumes even on the delivery front as well, but the one that gained did not have as significantly high volumes as such.
Thank you. Hormuz, even Info Edge closed up with a gain of about 3%. And I don't know if the market is making the correlation that if fewer of Indian techies go abroad on H-1B visas, if that is no longer the carrot which, perhaps they will look for jobs back home in India. And that could bode well for a Naukri business. But that's IT stocks and the delivery numbers and the volume numbers. Get into a break. On the other side, we'll get chatting with Amnish Agarwal of PL Capital for some fundamental stock talk. We'll also get you that exclusive conversation with the chairman and CEO of JP Morgan, Jamie Dimon.
Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. Well, let's get in Amnish Agarwal, Director Institutional Research at PL Capital, who joins us on the show. Hi, Amnish. Thanks a lot for joining in. Amnish, the auto stocks, they are bracing for better times. However, the stocks have run up in the last 1 month or so since the time our Prime Minister indicated that there could be some rationalization on the GST rate. But the sales numbers are looking blockbuster just for the first day itself. Hyundai, Maruti, and that trend could continue as well. What's your view on the auto pack and what do you like?
Okay. You see, as far as your auto is concerned, I think it is a very big reset. For example, all the stuff which was at 28, coming down to 18, I think this reset is big. So, for example, tractors, they are down to just 5. And even for the bigger SUVs, or you can say the sedans above 4 meter, there has been a few percentage points reduction. This is a big positive. And the second thing is that from the last month and a half, the people were actually holding on to their purchases. Now, I would say for the immediate term, there will be, you can say, very, very strong uptick in demand. And usually what we have seen is that when such a big rationalization happens, the rub-off effect of that can actually last maybe even for the next 3 to 4 quarters. So I think the numbers will continue to be good and the auto stocks will continue to, you can say, look interesting. But having said that, there is some sort of, you can say, run-up which has already happened. So from the current level, one need to be very, very selective. Say, maybe you can say the PVs, they should do well. All the 3 front line led by, I think, M&M is, I think, one stock which has gained on all fronts. So M&M is one. Then even Maruti and Hyundai, these 2 stocks should gain. Among two-wheelers, I think TVS and Bajaj, they look interesting to us.
Look interesting means you can buy at these levels, because you also alluded to the fact that stocks have already run up. At this juncture, what can someone buy?
You see, the main thing is I would say that one needs to be very careful at the current juncture, because many of these stocks, they have risen by even 40-50% in the last couple of months, since August 15 in particular. So I would say slightly cautious at these levels. But having said that, on any declines, maybe I don't rule out, say, 5 to 10% reduction in many of these stocks, and many of them have already seen some sort of a reaction. But on lower levels, all these frontline stocks, they continue to look good to us.
Okay, so buy frontline auto stocks 5 to 10% lower in the event of a correction. Yesterday, we got a correction in many of these IT names. Hexaware down 7, Zensar down 5.5%. Emphasis, LTI, Mindtree, Coforge sunk by close to 4.5%. Persistence saw a gash of 4%. Any of these stocks are buys for you?
You see, for example, if you look at, say, IT companies, whether it is, you can say, Persistent or, say, for example, Infy, some of these stocks, you can say we are having a positive view on them. But having said that, I think the yesterday's correction was more related to the reset which has happened, because for example, raising the H1B visa fees is something which is a new phenomena which has now come. And once it comes in, then there could be, say, more adjustments going forward. Will it be, you can say, a game changer that the growth rates are going to significantly go down? And that is, I would say, not the case. But having said that, it adds another bit of uncertainty to a sector where the growth itself was challenging. So to that extent, I would say at these levels, the dividend yields have become further attractive. But yes, how the entire scenario pans out, I think the sector is actually at the crossroads. But yes, whether you can say it is Persistent or some of these frontline, they now offer very good dividend yields and all. But definitely, any big run-up is not something which we are looking at.
Amish, 4 IPOs open today. One is Sichasai Technologies, 813 crore of an issue size. Anand Rathi 745. Solar World Energy is looking to raise 490. And Jaro Institute 450. So busy day. But have you analyzed any of these IPOs? And do you have a subscribe or avoid rating on any?
You see, I have not personally looked at any of these, because the IPO rush is so much that it has become really, really hard to catch up with the numbers in this.
Okay, we will slip into a break. Amnish, to stay on. On the other side, we'll get you that exclusive conversation with the Chairman and CEO of JP Morgan, Jamie Dimon.
Welcome back. You're with us here on Bazaar Morning Call. US should be India's best friend. That's the word coming in from JP Morgan's Chairman and CEO Jamie Dimon while speaking to me, with me, and sitting down with me for a chat or a conversation on the sidelines of JP Morgan's annual India Investor Conference. Jamie Dimon said that he is optimistic of a resolution between India and US as far as the trade deal is concerned. We spoke about a range of issues. The H-1B visa issue, he says, well, that caught everyone off guard, but it's another thing which he believes will be resolved in a favorable way. Listen in to a portion of that conversation.
The president and your prime minister clearly like each other, so which I think is good. I don't know what derailed it. I do think the Ukraine, Russian oil has been part of it, so I would take the president at his word on that. I'm still optimistic. In fact, I think Scott Bessent or the president recently said, no, we're going to get something done with India, and I hope we do. I think it'd be very important.
How will this work out? Because, I think the Indian side has been very clear. I'm not asking you exactly what happens, but there has to be an off-ramp, right? Yeah. To knock those 25% off and then maybe work down the remaining 25% as well.
I'm not involved in negotiations. I don't know. Yeah. I do think they want to do something on the American side, and I think they want to do something on the Indian side. Yeah. And so I'm hoping that they resolve it intelligently. I think it'd be good for both parties. And I think, India is a great friend of America. It should be. I know it's non-aligned, and it should stay non-aligned, but with their non-alignment, we should be their best friend.
And before coming in, I was watching CNBC, the squawk, and there was H-1B, which was the big talking point headline. And it's kind of now sort of going into services as well, which so far it was not. It was mostly about goods. So is it expanding, or you think this is also all part of negotiation and it will finally settle down?
I think it'll finally settle down. That caught everyone off guard. And so we had a lot of phone calls over the weekend. What does it mean? And from what I understand, it means new H-1B visas. And a lot of H-1Bs go there because they need the expertise. And so I'm sure a lot of people will be going to the American government explaining why we believe it. I believe in merit-based immigration. As a matter of fact, I would beg the president, he has accomplished border control. That's great. I think all nations want real border control. That helps make a nation. But after that, we should have, good immigration. And I've heard him say publicly, more merit-based immigration, good seasonal worker stay, DACA stays. That if you get a degree in America, we should stamp a green card onto it. I agree with those kind of things, and so we'll hopefully be engaged in the government in this too.
The direction has changed in that sense. This administration coming in compared to where we were earlier, where we were going.
The administration is more growth, more pro-growth, but we haven't really attacked the fiscal deficit problem yet. Growth will do some of that. I don't know if they'll do all of it.
Okay. Yeah. You're calling the...
But the other thing about the deficits, and this is global, this is like every nation on the planet, and everyone's got very high debt levels too. I don't know when that becomes a problem. So, I can give you a logical argument that it can become a problem in 6 months. I can give you a logical argument it might be 6 years. But it will become a problem, and we're, like most problems, you're better off dealing with the problem than letting it happen. Yeah. And so I hope we are a little more thoughtful about that.
You weighed in strongly in support of the Fed when, we had officials from the executive making comments and sort of attacking the Fed, asking them to cut, etc. You think that's kind of sort of eased off a little bit, or how do you see this?
It'll start. I've always said that there's no American president who ever said, I want higher rates. So obviously they want short rates. President Trump has come out and said, I believe in an independent Fed. Yeah. He's quite strong about his opinions, but being independent is an important thing. The Fed is not really independent in other matters, supervisory, regulatory. I think there was too much of that, and they should have their ears cut back a little bit. But look, presumably, hopefully we'll pick a good Fed chair. Some of the names I think are quite good. I don't want to go through each one. And we'll see.
Weaker dollar, if I may so put it, is the strongest consensus right now. Do you agree?
I think there are, all things being equal, which they never are, you want a stronger dollar, because it generally means a stronger economy. But now, tariffs, trade, and all these other things that have some counterfact. And, there are people who are reducing their U.S. dollar investments, which I expect will continue over time. So it'll add to a little bit of the weakness of the dollar. And there are a lot of people in the United States who like the weaker dollar because it's good for trade. So we'll see.
artificial intelligence, Mr. Dimon, is the other one, right? I mean, hundreds of billions of dollars being invested there. You think there is a risk of capital misallocation? I mean, it's a bit of a, I don't know if this is excessive, but...
So let me put it this way. AI itself is real.
Yep.
You know, we have 2,000 people doing it, 500 use cases. I worry less about large models and small models and whether the costs go up. I think the costs will be coming down. I think people are putting a lot of money behind it. So it is real. But in almost every real investment boom, you've had people who didn't do it right. So when cars boomed, a lot of car companies went bankrupt. When television boomed, a lot of television companies went bankrupt. When, you know, the internet bubble, that was real too. But I remember level 3 laid enough fiber optic. It took like 15 or 20 years to use it all.
Yep.
So, you know, parts of it may very well be in this kind of bubble thing, but parts aren't. So, but I separate that from the real, and we're going to be using it for a million different things. And so my mindset is more than using it. It'll develop over time. We're using large language models and small language models, open source models and closed models, and whatever works best for our company and our client is how we're going to do it.
The U.S. itself, you think it's, you know, a lot of economists were saying that, well, recession in the second half, it's not happened. I mean, high frequency data, hard data is still coming in very strong. Combined with, I mean, maybe the loosest financial conditions we've had in a while. I mean, just wanted your thoughts about how you're looking at the U.S. right now.
There's a lot of conflicting, I mean, data itself is not perfect. There's a lot of conflicting data. But right now, unemployment is still low. Consumers, both low end and, you know, higher end, are spending their money. At the low end, they're a little stretched. You know, and credit losses are going up a little bit. So it's not a disaster, it's a weakening. I don't know if that's just a weakened economy or not. You have a lot of stimulus coming in the tax package, and you have a lot of, I'm not going to call it stimulus, but spending on AI. So a lot of CapEx is up, but it's almost all AI, data center related. So, you know, I hope it continues, and I'm a little more cautious on inflation than other people. You know, that may not go away so quick because of the global deficits around the world. You know, those have an inflationary effect. The remilitarization of the world, you know, the restructuring of trade, those things are all kind of inflationary. And maybe, you know, less immigration in the United States, you know, could help push up wages in the United States a little bit, which is not all bad because, you know, a lot of people, you know, deserve a wage increase.
15 minutes to go before we open up for trade this Tuesday morning. It's also the Nifty weekly expiry, and for the last 2 days, markets have witnessed some profit booking. Let's invite our technical experts then on the show as we await the rates. Sudarshan Sukhani and Mitesh Thakkar are now joining in. Good morning, gentlemen. Sudarshan, let me start with you. 25,200 yesterday. What's your sense? How will today pan out? And what would the index call be?
Yeah, good morning. See, when the Nifty went below 25,200, then all long positions that I have been suggesting were stopped out. And that's okay because the long positions were taken at 24,700, 24,800, and so on. Even yesterday, if they were taken, there was a 100-point drawdown. That's acceptable. So currently, I don't have a suggestion on any positions because positions should be closed. Once a position is closed, the Nifty is now in some kind of a correction. It may bounce back today, may not. So today, my view is that the Nifty is best avoided.
Okay, avoid a Nifty trade today and let it play out. Mitesh, what would your call be?
Yeah. See, on the index, yesterday when we had a weak closing because we had a bounce back during the day, I suggested that we might actually dip a bit more and head towards 25, 150, 130 zones. I think that's an important support for me. 25, 150 was a hurdle when the market was trying to get up, get past those levels. So in that sense, I think, I'll be very okay with holding on to long positions and seeing how things progress from there. But that apart, I think, the overall directional bias for me remains on the long side. So my idea is that very clearly trade with long bias. And in case we don't see follow through selling post this decline from levels of 25, 150, then I think it will be even a good chance.
Gentlemen, morning. Great to have both of you here on the program. Mitesh, what would you do in terms of specific trades?
Yeah. So on the specific trades, Prashant, my idea is that we'll have a mix of buy and sells today because some stocks have kind of given breakdowns on the intraday charts with the recent market pullback. But broadly, the bias is on the long side. But today I have 2 buys and 2 sells. On the stock side, the first call which I have is a buy on Naukri or Info Edge. We had a very strong price and volume breakout taking place over there. So Naukri is a buy. I'll suggest keeping the stop just below levels of 1385, look for targets in the range of 1465. The other stock which I like on the buying side, that's VEL. It had a very good move and it's come back to its gap support area after 3 days of a pullback. So good levels to initiate long positions. Buy here with a stop at about 402 and a target of 415, 417, 416 could be looked at on the upside. A sell on Bosch Limited. It's broken below its short-term averages, so slightly turning negative over here. There's a minor support pivot at about 39,400. So the idea is to sell if it breaks 39,400, keep a stop about 39,800. Look for a target of around 38,600. And the final call is a sell on Cipla, which I would recommend selling with a stop just above levels of 1560 for targets of around 1,500.
Got that. Thanks for that, Mitesh. Sudarshan, what about you?
Well, because I'm confused on the Nifty, the stocks also reflect that confusion. I have 2 intraday shorts. Havells is an intraday short with a stop above 1611. Astral is an intraday short with a stop above 1463 and 2 buying ideas. Chola Finance, buy with a stop under 1600 and Tata Steel, buy with a stop under 168. And then we also have weekly expiry today. So there's a sense of confusion.
Okay, gentlemen, we'll touch base with you in moments from now. In pre-opening, it looks like the Adani Group stocks will continue with the momentum. Remember, yesterday, the entire Adani Group stocks added more than 1 lakh crore in terms of market capitalization. And in a span of 2 days, after getting the clean sheet from SEBI, they added about 1.7 lakh crore. Yesterday, Adani Power, Adani Total, gas ended with gains of about 20%. And this morning, too, you are seeing some optimism. And auto stocks should be on your radar. In pre-open, Hyundai up 4.5%, Maruti's up 1.5%. But from our Reforms Reloaded event yesterday, Defence Secretary Rajesh Kumar Singh told Network 18 that the government will soon invite proposals for medium altitude, long endurance drone contracts worth 30,000 crore rupees. He said that the government is looking to double down on indigenization and will spend at least 75% of its defense capex within India.
If you're looking at it in value terms, I think you can expect in capex terms somewhere between 25 to 30 billion dollars minimum per year over the next decade, maybe a little more, I would say, rather than less. Our current plans are that at least 75% of our capex will be spent within the country. That's our normative target. Last year, we actually did 88% of our capex within the country. Last year, for the first time, we exhausted our budget. I think it is challenging to spend money in the Indian context, given the, the very elongated sort of fail-safe type of procedures that we follow in terms of collegiate decision-making, approvals at the highest level, involving, a lot of interministerial consultations. Last year we did it, and I'm sure this year also we'll do it. It really depends on how many contracts you end up signing. And last year we did a record number. This year we've already hit 3/4 of that, 1,50,000 crores worth of contracts we've already signed, or are in the process of signing if you include the LCA program. So we are confident we can do at least 2 lakh plus crores this year.
Okay, we should watch for defense stocks and drone makers. But for now, we've got our eye on banking names. Ajit Kumar, lead BFSI research analyst at JM Financial Institutional Securities, is now with us on the show. Ajit, morning. This is Reema here. So we know that the system-wide loan growth has been averaging about 10%. But can you give us a breakup of individual segments, housing loan, the vehicle loan growth, LAP, the MSME? What's been the loan growth, and how does this position the growth numbers that we'll get from banks and NBFCs in Q2?
Yeah, sure. So, good morning, everyone. Thanks for having me. So, yes, you highlighted it right. The biggest reason, in financials is for worry in financial is low credit growth of around 10% in India, YOY. If you, talk about the breakup of that, roughly 25 to 30% of that is going to be corporate loan growth. And private capex has not been picking up materially in last, let's say, 3 to 4 years. And corporates have delevered themselves, which is leading to low single-digit corporate loan growth in India. In corporate loan growth, loan growth is somewhere between, let's say, hardly, 4 to 5% on a YOY basis. In retail as well, which is another, let's say, 30% of the total pie, in last 2 to 3 years, personal loan, credit card loans were growing at 20 to 25%, which has now come down to, single-digit, growth due to the over-leveraging issue. While the RBI and our government has taken multiple steps, such as, front-loaded rate cut of 100 basis point, personal tax rate cut, recent GST cuts, we have not seen, much improvement in credit growth till now. As per the latest print, credit growth in India was, hardly, 10.3%. Even on GST cut, while it is going to be positive for auto companies, but from financing perspective, it seems to be negative as financing happens on all-inclusive pricing, and hence there is a value decline which is going to happen. So net, our belief is credit growth is going to inch up due to this multiple step. But having said that, max to max, it will go to, let's say, 11 to 12% by FY26, not more than, 12%, when we end the year, in March 26.
So you're saying even though we're getting bumper sales numbers and we might get, good buoyancy, for vehicle financiers, it will be negative. Is that priced into the stocks, or is there scope for downgrades?
No, our sense is for vehicle financiers, their valuation is, way too high as compared to their historical averages. And as I said, in all these segments, there is a pricing cut which is happening. As per our channel checks, in used vehicle, pricing has already come down to 6 to 7%. And in new vehicle as well, as I said, if the GST rate cut, which has happened, let's say, on the lower segment vehicle from 28 to 18%, in the higher segment vehicle from 53% to 40%. So approximately there is going to be a value decline of roughly 10%, right? 10 to 15%. So unless we say that, value growth, while there is going to be buoyancy in the volume growth, but unless we make a case that, volume growth is going to, increase in volume growth is going to compensate for this loss in the value growth, your total industry growth is going to remain muted. So as per our analysis, from financing perspective, since it happens on all-inclusive pricing, disbursement growth is going to remain muted, in FY26, which is going to have negative impact on the loan growth. And in some of the names, that is not priced in actually, especially for the auto financiers.
Which ones is it not priced in?
Not priced in.
Can you tell us the names?
Yeah, so like for example, we have been negative on Cholamandalam. The valuation is way too higher. Historically, let's say when they were growing between 2010 to 2020, Chola used to grow at 20% CAGR. At that time, the valuation used to be lower. Now, in FY26, our assessment is loan growth is going to come down to roughly 20% versus let's say 35 to 40% that they have done in last 2 years. And 60% of Chola's book is roughly, auto loans, where we do see, disbursement issues cropping up. So yeah, so Chola is going to be one place where we are negative. For the other auto financiers as well, like for example, Shriram and MFS, disbursements are going to be, to get the disbursement, it's going to be challenging. But having said that, there the valuation is, not that, steep as compared to Chola. So that is why in the vehicle finance our, pecking order is, Shriram followed by, let's say, MFS and then Chola.
Any other stocks in your coverage where valuations are high?
Yeah, so for mostly, we prefer banks over NBFCs and large caps over mid caps. And one of the key theme here is we actually have a preference towards names where valuation is benign and at the same time there is no asset quality risk. And in that backdrop, all the mid-cap names, whether it is on the banking side or whether it is on the, let's say, NBFC side, where valuation is just way too high, we are not comfortable with those valuations. So as I said, Chola is one name. Some of the affordable housing names where, valuation is more than, let's say, 2.8 times, 3 times, there we have, some bit of issues because in the adjacent segment to personal loan credit card, like, for example, in low ticket size business loan, LAP loan, micro SME loans, the asset quality issues are cropping up. So in mostly in NBFCs and mid-cap banks, which have higher exposure to this, stress segment and where the valuation is completely high, those are the places we are actually negative.
Got that. So your preference is for large private sector banks?
Yeah. So it's going to be, first of all, it's going to be banks over NBFCs and, large caps over mid caps. So our preference is more for, let's say, ICICI Bank, HDFC, SBI and large banks. In mid cap names, as we need to be highly selective, and that is why in mid banks we like City Union Bank. In NBFCs, our preference is more for the large names, Bajaj Finance we like, AB Capital we like. And in the mid caps, again, we have to be very, very highly selective. So like PNB Housing we like, because the valuation is hardly, let's say, 0.9 to 1 time with no asset quality risk. Then in affordable housing name, we like Aadhar and Awas.
Very quickly, before we let you go, Ajit, any view on Bajaj Housing? A year or so ago, the stock went dancing away more than 40% post-listing in a matter of a few days. From there, it's come down to, 110, 115 rupees, which is more palatable, given that it had gone to, I think, around 6 to 7 times price to book. Not cheap, but given the parentage, given the scope of growth, what's your view on the stock?
Yes. So no, obviously, Bajaj parent is of very high quality. There is absolutely no doubt about it. And even the management quality is very high. The only thing that probably, we are facing is mainly because of the repo rate cut, there can be some bit of pressure on the margin side. And when loan growth is going to moderate from here on, and when there is a margin pressure, that puts downward pressure on the ROE. And as you rightly highlighted, valuation is not cheap. It's trading at more than 3 and 4 times. That makes stock re-rating quite difficult.
Got that. We'll leave it there. Thank you very much for joining us. Really appreciate your time here on CNBC TV18. Well, I think we'll just get to the 9-10 calls now. Sudarshan and Mitesh are back with us. Sudarshan, what do you have?
I have Tata Steel. Consider buying Tata Steel with a stop under 168.
Mitesh, what about you?
Yeah, I'll go with a buy on Naukri or Info. Look at targets around 14, 60, 65.
Just a quick recap of, thanks gentlemen for those trades. Just a recap of some of the stocks which are moving on the back of what we covered since the morning. So festive season boost, auto names, Maruti and Hyundai. Hyundai, of course, is up 4%. Stocks run very well off the lows. And Maruti is picking up pace with about a 2.6% bump. Maybe we'll look at M&M a little later. KEC, RVNL, Brigade, new order wins coming in for these companies. So stocks are up 3% to 1.5%. Birla Corp, JK Lakshmi Cement are other names which are coming up. Stocks with news flow here. Shilpa Medicare is up about 0.8. JBM Auto is another one which is coming up with about a 1% gain. And of course, defense, right? So Zen Tech is up 3, Idea Forge is up 2. You heard from the Defense Secretary earlier. Paras Defense is another name. Yesterday, shipbuilders did very well. Mazgaon, Garden Reach, etc. So we'll have an eye on that as well. But market opens. First rates coming up on your screen. It's positive, 25,240. The Nifty Bank is trying to find its feet, about absolutely flat actually. 55,335 on the Nifty Bank. The Midcap index is up 0.17, and I think the small cap index is coming up with a small amount of gain as well. So not very much to really show for one way or the other this morning in terms of market opening. So 25,230, absolutely 30-point kind of flattish start. The Nifty heat map gives you a quick sense of where we are. So Maruti, Eicher, M&M, etc. on one end, Bajaj is all auto, Hero. So the top 4 gainers in the Nifty are all auto names. On the other side, you've got Sun, Eternal, Trent, etc., which is coming through. But majority, about 30, 32 names are in the green right at the word go. Rima.
Well, it's autos all the way where you can feel the festive cheer. And as you pointed out, the Nifty Auto Index is leading from the front, top sectorial gainer, and that's up close to about 1% IT after yesterday's gash isn't recovering, but at least it's not falling. So it's a flat opening on Nifty IT Index, absolutely unchanged. Talking about the winners, well, the top 4 are auto names, Maruti, Eicher, M&M and Bajaj Auto. Maruti right on top, and it's a fresh high on that. It's crossed the 16,000 mark today, 16,180 on Maruti. For Eicher Motors too, it's a fresh 52-week high, 1.5% up on Eicher Motors. After that, you are seeing a Bajaj Finserv seeing some interest in buying. That's up close to about 0.5%. In IT, Infosys has rebounded. Infosys was down close to about 2.5% yesterday. It's up nearly 0.5%. On the way down, Adani Group stocks are correcting after 2 days of a heady run. Adani Enterprises, Adani Ports under pressure, both down nearly 1%. Softness seen in Sun Pharma. Eternal is a bit subdued. Tata Consumer, Trend. In fact, if you pull up the sectoral movers, it's the FMCG index, which is a bit downbeat, and Realty too, and PSU banks. I think these are some of, sectorally at least, at an index level, where you can see some red.
Well, that's right. A few stocks, Rima, from the broader markets that are bucking the trend. You have JBM Auto. They have partnered with a Dubai-based firm to launch e-buses in the UAE market. Could explain one of the reasons why the stock was bursting away. It's up 4.5% as we speak. If I'm not mistaken, though, I think this came in market hours, actually, towards the end of market hours. Stock, though, up close to around 4.5%. So good move is what we're seeing. KEC International, they told us here on CNBC-TV18 just a week ago that they're likely to close out a 3,000 crore order. That's come through. The street loves it. The stock bursting up close to around 7% or thereabouts. So even though the street was anticipating that, clearly giving a big thumbs up on that counter. What else? What's doing well? Om Infra, we don't talk about this stock too often, but that one is moving higher on very large volumes, more than 10% up on this particular name. So I'm not sure what's gone on there. You have all cargo terminals, volumes fairly decent, stock up close to around 7%. So good up move is what we're seeing out there. Zuari Industries, no, not very high volumes, only around 50,000 shares. So that's another stock that's moved higher, just in the first few minutes itself, up and about 7.5% higher. What's not doing well? The pain continues for Dreamfolks. Now it's down to around, 105 rupees thereabouts, 1/5 of what it was at its peak. And you have Hariom Pipes. That's coming for profit taking. Had a big run last few days. Stock down close to around 3% or thereabouts. So good start is what we're seeing. Some green. Midcap index still trading in the red. Let's see how this goes. But after a couple of days of pause, a little of consolidation, let's see whether or not the bulls can fight back.
Urban Company is also taking a bit of a pause, right? Had a one-way kind of a move. It came off the day's high yesterday. Fifth day, right? Fifth or sixth day in the markets? Yeah. So basically, listed at about 162. Yesterday's high was about 201. And finally closed at 186 at 193 right now. Urban Company, large amount of volumes on it right now. NetWeb, we've been highlighting this, right? It's gone up like a rocket. Absolute rocket. It's down about 4%. This year it's up. This year so far is up 25%. Of course, 2024 was a massive re-rating year. Anand Rathi is down about 1.6. I mean, these are just small pullbacks after very large, impressive runs that most of these stocks have had. over the last couple of days. Suddenly, I sense that the momentum, at least in the broader market, is swinging to the positive side. So KEC, I think we highlighted, right? 7% on KEC now. So 928 is the second largest volume-led gainer right now on the NSE. Of course, I mean, all the auto stocks we've been talking about. E2E Networks is up another 5%. That's another one which has been like a rocket move lately. Taj GVK is up about 3.5% or so. MK is coming up with about a 1.5% pop. Sonata Software is up 2%. Sirma is up 2.5%. Thermax is up 2%. Can go on with more, but volumes start to thin out. But this is the majority of the volume-led gains that we are spotting for you. Rajiv Batra is head of Asia and co-head of Global Emerging Markets Equity Strategy at JP Morgan. He's joining us now from the sidelines of the 10th annual India conference that JPM is holding right here in Mumbai. Rajiv, it's always a pleasure to have you on CNBC-TV18, and thanks for joining us. Let me ask you to tell us the big questions you are being asked, Rajiv, by clients, investors about India, because we've had a period of relative underperformance. But as James Sullivan and others have been pointing out, it was, of course, the last 1 year has been followed by a couple of years of sharp outperformance. So is it just that, or it's a mix of things? What's top of mind, Rajiv?
Good morning, Prashant, Rima and Nigel. And first of all, happy Navratri to you and your viewers. Overall, and good start of the festive season with all hopes and prayers from my side too. The questions which commonly being asked, number one, question is when we expect a thaw happening in US and India relationship. That's the number one question to me and my management right across over here. The second one is when we can expect the double-digit growth handle, because now 4 to 5 quarters have gone. India is still trading at close to 5 to 6 peg ratio, and market wants them to come at a 2 peg ratio per se. So the double-digit growth is the second one. And last but not the least, when do we expect foreign investors to come back to India after last 4 years of exodus? Because it's not just a 1 year story. If you look at accumulative flows for the last 4 years, FIs are missing in India. So that's what we are trying to address and trying to show them on ground that what is happening in India and why you should revisit the thesis. And especially where India is seeing the worst ever underperformance since 1990 of close to 25 to 30 odd % in a scenario where EM assets or Asian assets are making a comeback under the big diversification theme because of the dollar weakness, because people want to move away from US denominated asset class. In that scenario, India is still not making a comeback. So this is the kind of a questions we are all trying to address through ourselves and making them meet even experts also on here.
So Rajiv, how are you addressing the question on when FIs will make a comeback into the Indian markets? What is your own sense, speaking to so many experts and investors since yesterday?
So Rima, it's all interlinked. So number one most important perspective if I want to see is how the relationship continue between India and US. Remember, India and US have been doing businesses, investment all across for 25 good years between each other. And US have emerged as one of the biggest partner for India. And we have seen the pleasantries which was being exchanged between President Trump and Prime Minister Modi during his 75th birthday over there. So investors want to see now this to be taken one step further, maybe by reducing tariff by 25%, the additional penalty that was imposed on India 1.5 to 2 months back. So thawing of relationship is the catalyst number one, which can lead the risk premia in India to get lower, and India's PE re-rating can happen in line. Again, this is a contrarian view I'm giving you, a PE re-rating for India, what other emerging markets have enjoyed year to date or for the last 1 year, and India has not enjoyed at all. That's number one. Number two, the earnings momentum or revival of earnings. Remember, as I've said earlier, 5 quarters have gone. India's trailing 12-month earning growth is in handle of around 4.5, 5, and trading at a PE of around 22. Investor want double-digit handle to come. That justifies India PEG ratio close to near what S&P 500 is trading, 2.1, 2.2x kind of a stuff. And that's where India makes a comeback. And lastly, continuing the good work which we have seen in form of 3 arrows. Arrow number 1, monetary policy easing. Arrow number 2, in form of tax rate cuts during the budget. And arrow number 3, the GST cut. Now the market want to hear the 4th arrow, that is the next generation reform in form of deregulation and easing my FPI and FDI entry into India markets. So these are the 3 set of measures what markets want to hear.
Okay, all right, Rajiv, good to see you again and hope you're having a good conference. Let's focus on the third point that you mentioned. GST 2.0, that's clearly got a few sectors very, very excited. Case in point being autos. And you all as well have done a bit of a pivot. Do you think that sector is set for better times? It's already had a bit of a run. I think earlier you all were neutral on that sector. But how do you expect this sector to pan out from here on?
We think it's a start. It will lead to an improvement. It's very easy for people to anticipate when the GST cut is happening. It will be just benefiting staple. In reality, when you start saving more, you will go behind your aspiration and more of your discretionary consumption, which you have been postponing because of lesser amount of a saving you have in the past. Taking that into account, step 1, I never anticipate people will start going straight into the real estate sector, buying houses. But the easier one is more 4-wheelers, more 2-wheelers, and even some jewelry stuff also for their near-dear ones overall. So discretionary items are the one who will be the beneficiary. And I don't think it is just a 1 quarter, 2 quarter story, because GST cut is not one-off. It is here to stay. And like we have started with the GST cut, maybe in 12 to 18 months, on the same show, we will start talking about even the 8th pay commission, which also will be a bigger driver for consumption, or you can say further accelerator for consumption after the kind of 3 arrows which we have seen so far.
So better times ahead then for the auto pack.
100%. It's consumption over capex, and that's what we are going to see for the next coming 4 to 5 years in India.
Okay, all right. The uncertainty continues on the tech pack though. A bullish argument would be that they have not done much, they have underperformed. Maybe the bad news is in the price. When you get sound bites coming in from the United States like we saw over the weekend, maybe it's not a very material impact. Most sell-side notes had written that. However, the index itself was down 3% yesterday, telling you the kind of nervousness on this sector. Do you think there's still more pain, no big growth, headwinds coming in from the United States, and deal closures taking longer than anticipated as well? So you'd rather stay away?
No, we are more in a transition kind of a phase at this juncture, because market is trying to figure it out where we are heading in this kind of a geopolitical uncertainty, what kind of a world we are in, whether it will be a unipolar, whether it will be a bipolar, or whether it will be a multipolar kind of a world over there. And definitely then my exporters are at a stake in this kind of a world which we are going enter into. Taking that into account, it's unfair then to give a lower risk premium to such sort of a places, and the better way to trade this space is through earning growth. Now, growth is a key problem in IT sector from the last 12-month perspective or last 24 and 36-month perspective. They kept on delivering bottom line for you by cutting down people, by firing staff over there, and still delivering growth for you. But right now we are at a cusp where your IT sector growth has come down less than 5% on a 12-month trailing basis. We saw the similar things happening in the FMCG sector also for close to 10 years. And unless the revival applies, people never gave FMCG sector 60, 70p. They were bringing it down to from 60 to 50 to 40 to 35. I believe in IT we are heading in same phase unless IT gets back 10% plus kind of an earning growth from a future lens perspective.
And that, for now at least, looks a bit unlikely for this year and next. Rajiv, just the bigger picture about emerging markets. Now, you believe it's the coming of Goldilocks market when it comes to Asia ex-Japan. Can you explain your thesis? And it's had such a good run. I mean, this is the best performance we've seen since the dip in April. Is there a risk that the positive catalysts are now, we're running out of positive catalysts?
Not yet. I think this is just a start. Just to share some number with you, a 1% dollar depreciation leads to 4.5% increase in EM equity performance based on the historic sensitivity basis. This year, dollar has gone down 12%. If you take that sensitivity into account, you need to be easily up 50 to 54%. EM is up close to around 28%. Asia is up around 26% only. which means there is still performance based on the historic standard pending. Now going into the next year, JP Morgan is forecasting end of this year DXY at 95 and by June next year 92, which means further 5% depreciation. And again, you multiply same sensitivity, another 25% return. If dollar is on the downward slide, diversification is going to remain a criteria. And not only equities, across asset classes in Asia, in emerging market, we are going to see benefit. Look at this year, Asia Japan index is up 26%. Fixed income in Asia has given 7% return. Cash has delivered 3% return. And most of the currencies have driven 5% return. Next year, when we are going to see a synchronized global easing, where my US is increasing its fiscal deficit, Europe is also doing the same, and China, to revive their growth, provide you 40 to 50 basis points of fiscal thrust, along with 80% of global central bank easing. What does it mean? It means we are entering into synchronized easing cycle, which has happened in past during either GFC or during COVID. And after that, we all know what happens to risky asset classes and market. So we are entering that environment over the next 12-month period, which means we are just at the start over here. And if you take my positioning into account, global investors are 800 basis points underweight on emerging market. This year, they have not participated in EM equities fully, and they have missed the rally. Korea, China, Taiwan, all rally has come on the back of domestic money per se, which means my FIIs will be the chaser into this rally as you go into the next year.
So how much more upside for emerging markets? I mean, in percentage terms?
So we are working for our 2026 outlook targets for EM overall. We have just surpassed our bull case on emerging market of 1350. The 12-month forward Asia ex-Japan index target is 1,000 points from here on. And we are saying it will trade at 16.6 PE, which is still below 2007 territory and 2021 territory. But the kind of a liquidity train which is going to hit us, I'll not be surprised the regional indexes going to trade at even at 20 PE also.
Rajiv, on that point about synchronized rate cuts, right? Global synchronized kind of easing. The call is that economies stay strong, but you get rate cuts. So best of both worlds in that sense. That's the call. I mean, you don't see significant weakening because then, in response to that, if you get a cut, that's not exactly great. But you're saying that economies will remain strong to so-so, but you get rate cuts.
Prashant, that's what's been happening since April. In April, US have made 4 pivots for us. Pivot number 1, they talked about fiscal austerity, and they have given us OBBA. They set the low. Second, they set the lower bar for Fed also to cut, and now we have seen Fed has started cutting. We are calling for 75 basis points more rate cut from here till March by the Fed. Third, we all worried about the AI diffusion law, not supplying the high-end tech to the US over there, but they have eased the chip exports and everything to the rest of the world. And last but not the least, we worried too much about the tariff at the start of the year. But what happened finally? Deals are happening, tariffs are much more measured over there, and exports are still growing. So taking that into account, where my economy is still growing higher, and consensus economists are literally eating back their word and revising growth higher. Remember, consensus was forecasting recession in the second half of this year, and now all the forecasts in the US are for around 2.5 GDP growth in the third quarter, 2% GDP growth in fourth quarter. And mind it, for the next year also, growth number is 1.9, which means they want to run economy hotter going into the next year.
Yeah, no, absolutely. Great conversation, Rajiv. Thank you very much for joining us, and hope you come on more often. Good sort of 360-degree perspective.
Thank you.
With you, as always. Well, I think I want to play out one important soundbite here now. So, India's chief economic advisor, Anand Rathi has said that he expects GDP growth to be near 7% this year after the GST cut. Speaking with CNBC-TV18's Shree Cement on the sidelines of Network 18 Reforms Reloaded Summit, he said he expects revenue growth to remain on track and is confident of achieving 4.4% fiscal deficit targets. Listen in.
Fiscal second quarter growth numbers are looking quite promising based on the high frequency indicators we track. But of course, that is still only about 1.5 to 2 months of data. So we have to wait and see how much, how did September fare, etc. But we're sort of quietly hopeful that the second quarter has maintained the momentum that we saw in the first quarter.
And so closer to the 7% mark is what you're hoping for,
but
on the back of what the information you have.
I'm hoping for, rather than saying I'm predicting it. I'm not predicting it.
Fair point.
I'm simply saying, based on the trends I have seen, it's the number that I hope for. Yeah. We are confident that the final number will be 4.4% of GDP, which is the gross fiscal deficit. We have had good non-tax revenue growth, and overall revenue growth is on track in comparison to last year's numbers. And we feel that the festival season will last all the way until the end of the year because of successive, the Diwali festival spilling over towards Christmas and New Year, etc. So we are confident that the fiscal math will hold up very well for the current financial year.
All right, let's focus on the steel sector. And we have Nomura that's come out with their view on the steel space itself. They're turning bullish on India's steel sector. They're citing a mix of both global as well as domestic factors into play. That includes the production cuts that we've seen in China, potential stimulus, and the improving local prices as well. They're forecasting 25% EBITDA CAGR over the next few years across the steel space. On JSPL as well as on JSW Steel, they have a buy rating. Target prices come up for you on the screen, 1,300 rupees. And 1,150 rupees. For JSW Steel, well, 3 big points stand out. One is the capacity expansion of 7 million tons by FY28, aligning with the cyclical recovery. They're also targeting 50% self-reliance in iron ore through backwardation, which is good. Backward integration always, holds them in good stead. And they're better placed than peers, with domestic iron ore prices expected to stay below import parity. So that's about JSW Steel. Moving to JSPL then. They highlighted the following reasons. A planned 6.3 million ton capacity addition by FY27, which will boost the product share, the flat product share, to around 65%. They're also looking at enhanced raw material integration, and they're expecting cost savings from the new pellet and captive power plant. So sum things up. Basically, Nomura is seeing better times in the steel sector. Capacity growth, cost control, and supportive macros as well will help them in terms of earnings from here on. So that's what Nomura has to say on the ferrous space. Moving to the cement space, though. We have with us Mr. Neeraj Khoury, the Managing Director at Shree Cement, who joins us on the show. Hi, Mr. Khoury. Good to see you in. Well, before we come to you, we're just going to alert our viewers about the 3 big points we're going to be focusing on in this interaction. The impact of the GST rationalization, long pending demand from the industry that's come about, the update with regard to progress on capacity addition, and finally, Shree Cement is sitting on a lot of cash. How will they use it? That's going to be the top 3 talking points. Well, Mr. Khoury, pleasure having you on the show as always, sir. Let's get straight to the first point. Well, considering the recent GST rate cut, how does the industry dynamics change? 2 points I want to understand. One is, what is the effective price cut you have already taken? And second, do you maintain that volume growth stance of around 4 to around 5% year on year for FY26?
So, Nigel, good morning, and thank you for having me on the show. First of all, this is a transformational step, something which we were long expecting. And now that it has happened, we are absolutely clear and confident that it is directionally good for our industry, both for demand growth, but also for ease of doing business. For Shree Cement and for the industry, one of the things that we have done, Nigel, is very clear, is to make sure that we pass on the full benefits of the GST to our customers and the consumers. We believe and we are convinced that it is a right step in terms of boosting the overall consumption growth. Demand growth numbers we had taken 5% till now. We believe with this, there would be some acceleration of demand, maybe 1 to 2%. And that is something that has yet to play out. But our first level estimates would be that demand growth will go up from 5 to about 6.5%. And that is the good news for all of us.
Okay, so around 6% volume growth is what we could expect from Shree Cement for this year?
Yeah.
Got it. All right. Also, the other question that I had was, since cement is going to get relatively cheaper, people may want to upgrade the kind of cement they're looking at. I think premium sales for you as a percentage of trade sales is roughly around 17%. You could correct me on that number. So do you think that's likely to be the case where people start using better quality cement, more premium cement, and that would help you in terms of premium as a percentage of your sales mix moving up?
So, Nigel, in any market, there will always be a different segment of buyers. Value buyers will remain value buyers, and people who would like to upgrade will like to use this opportunity of reduction of cement prices to upgrade the quality of product that they are buying across segments. We believe that yes, premium cement sales for us would go up. We are at 17% till now, and I think we would see this to go up to about 18, 19, 20% in the near term. This is our first level estimates. I'm sure we should be able to meet this kind of a number, the targets of 18 to 20% now with the reforms in GST.
Got it. So we've got a couple of numbers out. Volume growth of around 6%. Premium as a percentage of sales mix moving to around 18 to 20%. But do you maintain that strategy? Value over volume strategy? And are you on course to deliver that EBITDA per ton number of around 1,350 to 1,400 rupees for FY26 on the whole?
So I would not like to focus on EBITDA, what we'll be able to deliver. There are so many factors at play, Nigel. Having said that, we do believe that our strategy of value over volumes has played out well for us, and that is something that we would be very keen to continue in the future as well. This is something that is helping us to improve our brand presence. It's helping us to improve our results, and that's a strategy that we would like to follow in the coming months as well.
But you are able to hold on to what you have been doing. Last quarter was more than 1,350 rupees. So that should be par for the course, right?
Yeah.
Run us through your capacity addition plan, sir. You had that target of around 80 million tons. By the end of this year, what will the capacity be? Next year and post that as well. And have you all visited some units? I believe a couple of units are on the block. And I know some of your peers who have visited South India as well. Were you all part of the visiting committee?
This question keeps coming back to us, and we are very convinced that our focus has been organic strategy, and that will continue to remain our focus. Having said that, if some good opportunity comes, we would be very, very willing to look at it. But when we set our growth plans, it is largely organic. This year, Nigel, we are at about 70 odd million tons is what we should end up by next quarter, and then we have some more plans to grow our capacities, which we will reveal as time comes in. But so far, we are more than happy to pursue our organic strategy. I think that there is a focus that is there for Shree, and there is a focus that we would like to maintain in the coming years as well.
$1 billion of cash, sir, and the focus is going to be organic growth. Have you decided what you want to do with that cash balance? It's diluting some ratios as well. So the street has been requesting, and we as well on the channel have discussed with you all that maybe there's a plan to utilize some part of that cash. A probable one-time dividend payout could be likely. I don't know whether buyback makes sense as well, going by the change in taxation rules. But should we hear something about it, say at the end of this quarter when you report your numbers?
Nigel, I am very clear this is a board decision. I will not take to comment on it. But we have solid plans on how to use this cash to grow our capacities in the coming years. I'm sure the board will review both of that together. And to me, there's the cash we should be using, and we would like to use to expand our capacities as we go forward.
Just one more question, sir. As part of GST getting rationalized is good news, right? But earlier, there was that SGST component as well. And there was some kind of incentives that you should get from the state. One is capex-led, and one is by the GST angle. Do you see some kind of risk that since the state will get less money, then in fact it could hit some of your incentives? Or do you think that y'all are reasonably protected on that front and it will not be that big an impact?
It will not be that big an impact, Nigel. There are places where we have fiscal incentives. And the way forward would be that we would like to sell little more in these plants. So I don't see any material impact on the SGST component of the fiscal incentives on our results in the coming years.
Final question then, in UAE, you all had announced an expansion plan out there. Could you tell us how is that progressing? What's the expansion plan? Because some on the street thought that unit was struggling, but then you'll clearly see an opportunity that you're going ahead and increasing capacity there.
So as you know, Nigel, UAE has been doing very well in the recent past. The demand in the country is also, and not only in the country but in the region, is positive, and therefore we decided to pursue an expansion in our UAE plant. The plan is already under execution. The construction has already started, and we expect that by next year end we should be able to commission that new capacity of 3 million tons in the UAE as well.
Mr. Khoury, always a pleasure, sir, having you on the show. You're sounding reasonably optimistic about the prospects ahead. September would be a little bit dullish owing to the monsoon as well as GST 2.0 coming into play. But for the year, 6% volume growth, EBITDA could be maintained in that vicinity of what we have seen in the past, and premium sales could get a bit of a leg up. So thanks a lot for joining in. By the way, before we slip into a short break, take a look at the Nifty. That's moved to the low point of the day. We're moving closer to the lows that we saw yesterday. You don't want this 25,100 mark to get broken on the downside. Remember, today is the weekly expiry as well. So that mark should actually not get violated. Otherwise, you could see further selling pressure. So at a crucial juncture, for the time being, though, we'll slip into a short break. When you come back, we'll have Mr. Pradeep Gupta, the Chairman and Managing Director of Anand Rathi Share and Stockbrokers, who will be talking about their 750 crore rupee IPO. You don't want to miss this.
Welcome back. Anand Rathi's 745 crore IPO opens for subscription today. Pradeep Gupta, Chairman, Managing Director, and Anand Rathi is now here with us in the studio. And today's conversation, we will focus on one, how is Anand Rathi's share navigating all the regulatory risks? 2, what are the growth and expansion plans ahead? And 3, will FY26 be better than FY25? And if yes, by how much? Thank you very much for joining in. Now, over FY23 to FY25, you've clocked in a revenue growth of about 34%. But we've seen SEBI clamping down on F&O. There is a possible discontinuation or weekly expiry, which can hurt volume. So in that context, can you do better than your historical growth rates of 34% on the top line?
First of all, good morning, Rima, and to all the viewers of CNBC. Yes, I think so far...
Please.
Okay.
Yeah, go ahead.
So far, whole, business is concerned, I think you have to literally look at it how the business model is being created. And we are very confident that this kind of a growth is going to be persistent and stay with the company. And that's the reason, we are trying to see a different way or innovative way how it is to be done. Typically, what we are trying to see, as we all know, pure broking is something which is directly correlated, and there are lots of, involvement of market volatility. And the moment market volatile, your broking revenues also start getting volatile. So to aloof yourself from that, you have to create a business model where probably how you can, create a model which can give you a sustainable long-term growth and a predictable growth. And that's where, if you really look at Anand Rathi share in stockbroking, which is coming for public, largely having a two kind of a revenue stream, broking and non-broking. And within non-broking, if you really look at it, distribution is one part and margin trading facility is another part. And these two businesses, which is in non-broking side, is largely annuity-driven businesses. So the moment you start looking at AUM, you start getting certain amount of annuity revenue.
So could you, Mr. Gupta, break that down? How much is broking? How much is...
So in Anand Rathi share and stockbroking, if you really look at it, right now, broking 60%, non-broking 40%. And that's the whole endeavor is how we can constantly...
And what have been growth rates in both these, broking and non-broking?
So if you really see in broking about 20 to 25% and non-broking about 35 to 40% kind of a growth is there. And the whole endeavor of this company and the people, management, everything is working towards it, that how we bring this ratio to 50-50. The moment we reach 50% kind of a revenue ratio, I think you are going to be less susceptible to the market volatility on this company, and that's what we are trying to
How
achieve.
soon do you think it will take you all?
My own perception and guess is, I think in next 2 to 3 years, we'll be able to achieve.
You said 60-40.
It's 60-40. 2 years back, if you really say it was 65-35, and we are trying to achieve and gradually working towards
On the broking side, will revenues, the growth decelerate? Let me put it another way.
No, not really. It is going to be constantly grow at the same pace, point number one. And point number two, if you really again look at our broking model vis-a-vis any other companies, and as you rightly pointed out, the way regulator is looking at derivative businesses, there is another component in broking. Broking, cash market and derivative market. Cash market, pure cash plus cash trading. Derivative market is, commodity, currency, and future and option. Now, over there also, if you really look at Anand Rathi share and stockbroking, it's 50-50. Okay, if you compare with any other broking houses or most of these broking houses, their probably this ratio might be tilted towards...
Cash and derivative is 50-50 within broking.
Cash and derivative is 50-50, and within derivative, commodity, currency, and F&O, all three put together. So our dependency on those future market businesses are very, very less. And this whole structure is being not came by default, it's being by design, by strategy which we have set, because we are always advocating customers who are looking from a long-term investments, who are looking from a staying and creating over a period of time, certain amount of investable surplus and constantly generating certain amount of return. And that's the reason, if you really see this 50-50 is maintained, our focus is to our cash market delivery. And if you really look at our yields, are constant from last almost 4 to 5 years, which is 0.09 paisa, which is 0.009%. I think that's the yield, kind of yield is being static in broking businesses. And as I said, broking is about 60% in overall total revenue business.
All right. Hi, Mr. Gupta, and good to have you on the show. In the last issue that the Anand Rathi came out with, it generated a lot of wealth. So some of your investors will be hoping that you replicate that performance. That said, there are some challenges, right, in the near term at least. So the non-broking component would be the interest on the MTF book as well, which has grown. It was 50 crores a few years ago. Now it is at more than 100 crores or thereabouts. But the regulator is also looking at this part of the business. They want to, make it, more friendlier for users. Do you see that as a bit of a headwind? Because that clearly has been the outperforming part of your business if I look at your revenue construct.
See, fortunately, Nigel, it's a very good question. I think one has to look at it, how you are playing your cards in terms of providing funding side. And if you really look at it, margin trading funding is well regulated. Every day, all the positions are being controlled and are available at stock collection level also. So if you really look at our margin trading funding, this is largely given to those customers who are looking to increase their ROI.
Okay.
Right. So that means, what that means is our internal controls and systems are that we are not allowing over leveraging any kind of a customer. So there are checks and balances being created. If you really glance through our book, almost 75% book is below 1 crore customers, right? And there are hardly or very few customers who are getting above 1 crore kind of a funding.
Yeah.
And what we are trying to see, whosoever wants to leverage their position in a systematic manner, trying to generate and increase their ROI, are being given this category group. The second instance, I think if from a regulator perspective, about 1,900 stocks are available for our margin trading funding book. Out of that, what we have done, internal systems, internal control says not 1,900, but only 900 scripts are going to be available with a different kind of a margining system. And if you really glance through our book, about 75% book stays in Nifty 500 stock. So it's well spread, well controlled, and we see that there is no...
So short point, you believe the MTF book, will continue, the interest on that will continue to generate a good amount of revenue for you, given the checks, the balances, everything that you have done. Got it. All right. Now, what about, I've looked at the NSE data in terms of market share. You're still relatively small, if you compare it to the bigger names. Do you have a target out here, that you want to go up? Because obviously you're growing the business, a lot of focus out there. And now you'll have shareholders that will keep asking you this question. So is there a target out there?
I mean, it's again good question. I think we as a strategy have not taken that route that we have to constantly look at market share and constantly look at the turnovers.
Yeah.
There are two kind of different businesses. Companies who are literally looking at turnover side and constantly trying to expand their market share in turnover. We are not going towards that. What we are trying to focus is on an individual investor whose investable surplus can be addressed through us, and we constantly trying to increase with that same investors how the AUM of that particular investor can grow along with us, so that investor can be beneficial, and as well as we also can start getting our revenue stream over a period of time. As a result, if you really see, our 30-year plus kind of investors are almost 85%.
Okay.
If you really look at stickiness of our customers, 5-year plus is 50% and 3-year plus is about 60%. And similarly, to service these people, our RM fraternity, managerial plus kind of a people with us, again, fortunately, it's the same ratio, but 5-year plus is about 50%, 3-year plus about 60%. So that's how the whole component is being created, whole service standard is being created to service those customers.
Mr. Gupta, just one last point on MTF. What is the available amount that you can fund?
So from a regulator side, you can fund, 50% of your net worth and 5% of total overall net worth, you can go and probably provide it.
Right.
But for that, you need liquidity.
Right.
You
But
need funds.
from an individual perspective, if I want to take a position worth 100 rupees, how much will...
Based on the margin. Typically, 30% to 35% kind of a margining is there. So if you are providing security or a margin of about 30-35%, you can go to any extent. So it all depends on what kind of a ratio you are following, what kind of a rules and
for every
regulations.
stock, it is different as well. I think for NBFCs, there is a limit prescribed by the RBI, right? That's 50%.
So NBFC is completely different. They are not on MTF side. They are on a LS side.
Correct.
So they are providing LS, and over there they have a 50% kind of a margin.
Mr. Gupta, we wish you all the best of luck. Thank you very much for joining us.
Thank you.
Really appreciate it, and good luck. So there is Anand Rathi with the IPO on the broking side. But it's not just broking, as Mr. Gupta told us. It's broking, non-broking, which is, of course, distribution, and the MTF book as well. More annuity, more stable, and it's about 40%, and in the next couple of years perhaps goes up to about 50% each. Well, I think well, that's goodbye, Mr. Gupta. No problem. All right, Vinay Rajani is with us, Senior Technical and Derivative Analyst at HDFC Securities. Vinay, good to have you with us here. Good morning. How would you look at things? Markets kind of come off a little bit, down 60 odd points. Your trades, Nifty and stocks?
Yeah, sure. So good morning. So from the level of 25,448, we have seen a healthy correction. It can be said running correction in the overall bullish trend. So the 1,000-point rally which we saw from the level of 24,400 to 25,400. So it is retracing that, and right now the 38.2% retracement of this entire 1,000-point rally is placed around 25,050. So this is the immediate support we see in the Nifty that should act as a strong support. So primary trend is bullish. 20 days EMA is also placed around 25,040 odd level. So there are two important supports which are coinciding around the same level. So we can say that there is a strong support between 25,000 to 25,050, which should act as a strong support. So it is a running correction in overall bullish trend. Still Nifty is holding above the key moving averages. So we have a hope that it will resume the uptrend. And some sectors are still performing well, like auto and metal. So overall broader markets are not that much weak. Some sectors are still participating. That's why it seems like a more of a profit booking and not a reversal. So dip should be bought into. That's what we are advising to our clients. And 25,000 to 25,050 should be the strong support. As far as support, the stocks are concerned, yes, there are both way opportunity, like pharma sector has been underperforming for last two trading sessions. So Cipla can be shorted because the technical setup is looking weak. So Cipla September future, I would suggest to go short around 1533. I would suggest a stop loss at 1555. And on the downside, we can expect a target at 1495. The second pick I would choose on the long side from the auto sector only, that is Samvardhana Motherson. So Samvardhana Motherson is placed around 111. So one can go along around this level. I would recommend a trading stop loss at 108. On the upside, I'm expecting a target of 116. 116.
Thank you for joining in. The Midcap Index is down close to about 0.5%. The Nifty hovering around yesterday's low. But Vinay's view is accumulate at the corrections and support seen at 25,000, 25,050. But let's talk about autos. That's the only leg in the market that's holding up in the green. Sudarshan joins in with the latest numbers on Maruti, Hyundai and Tata Motors.
So in a day where most of the stocks are under pressure, one sector that is holding the ground is the auto sector, and it's on the back of the commentary that companies have been giving on the first day response that these companies have received on the first day of Navratri. So first starting with Maruti, it's saying that inquiries that company has received, it has not seen in the last 35 years, and also that there is a possibility that it might run out of inventory for some of the variants. On the first day of Navratri, it has received inquiries for almost 80,000 and it has delivered more than 25,000 cars, and it expects that very soon it's going to deliver almost 30,000 cars. Since 18th of September, the day company had announced GST pass on and also additional discounts, from that day it has been receiving inquiries of almost 75,000 and has been making bookings of almost 15,000. That's 50% higher than that company has been seeing on a regular basis. The biggest positive is the response that company has got for the entry-level segment, where it's saying that response has been 50% higher than the normal days. Second is Hyundai. It's saying that it has delivered more than 11,000 cars, and now it's saying that there is an expectation that this kind of momentum might sustain. And just a few minutes ago, we have received the update from Tata Motors, where it's saying that on the first day of Navratri, it has delivered more than 10,000. So, but do factor in that August, for better part of the month of September, it was a Shraddh period. So there was not much sales that we had seen. So it can be taken positively as well.
Indeed, there were no sales up until now, and people were also waiting for the price cuts to come into effect apart from Shraddh. Thank you very much, Sudarshan, for putting it into context. Get into a break. On the other side, we'll talk commodities. Manisha Gupta will join in. Stay tuned. Welcome back. As promised, let's turn our attention to the commodity markets. Manisha's at the big wall. Manisha, what are you looking at today?
Well, gold and silver, I'm not taking my eyes off that because it's another all-time high in the Indian markets when you look at gold and silver. It has been one long string and unbeatable, unstoppable. I can look at a lot of those synonyms there for the month of September, but that's exactly how gold and silvers really seem to be behaving. So you have gold prices trading at $37.50 an ounce, which is an all-time high, and we did see prices move ahead of that as well. For the silver prices also, it has been one-way rally for the last 3 months or so. It has outperformed gold also. Silver is trading at a fresh 14-year highs in the international markets. We've seen $44 an ounce onto that one, while the Indian markets have crossed about 1,32,000 rupees per kg there. Well, it has to do with the rate cuts from the US Fed and Bank of Canada that we saw in the previous week. And of course, an anticipation that you're looking at more rate cuts for the month of October and then December, and then one more rate cut in the first quarter of 2026. That's exactly what the markets seem to be factoring in at this point in time. And then you have geopolitical tensions which continue to brew in. There are headlines coming in from that. The ETF buying has been stronger in the global markets and the Indian space as well. The central bank buying for a fourth straight year in 2025 also promises to be around that 800 to 1,000 tons of net inflows. And all of those factors clearly have been very, very supportive there. If you look at the gold now, it also is taken over euro and is the second largest component when it comes to various forex reserves that we've seen in 2025 till time there. I also want to take you through on what we've seen in sense of gold trajectory for 2025. So that is what Jan looked like at $26.50 an ounce. And then look at the month of March, $3,050. So we saw that $400 of a jump up come in 4 months there. $3,500 an ounce was an all-time high that we saw in the month of April. It held on to that range between 33 to 35 until the month of August. And then September has seen an all-time high of $37.50. Look at silver. Even as gold saw some consolidation there, silver did not see that. We started the year with $29.50 and then $33, $39, and we're standing at $44 an ounce at this point in time. So it has been a 50% of a jump up that we have seen in case of silver prices in this year until now. What is the scenario going forward? And that's exactly what we're looking at right now. Citi talks about 3,800. We're trading at 3,750 right now. Commerce Bank has talked about 3,600 of an average. So we still have higher sides to go there. $4,000 an ounce is what Bank of America and Deutsche Bank are talking about. And this could be this year or the next as well. So the timelines really seem to be fading here. And Goldman Sachs has talked about 5,000, but that comes in with ifs and buts. And if this happens, is the best case scenario that they see in case of gold going higher. This is what we're looking at silver then, and we're trading at 44 right now. 43 of an average is what Citi has talked about, and 45 is what Saxo Bank, Metal Focus has talked about. It also has been higher levels that we've seen come in for the market, and then there is a big divergence as well, because when you look at HSBC, they've talked about 34. We're trading at 44 right now, and then you also have First Majestic. Well, the timeline from First Majestic hasn't come, but $100 an ounce again is a level that First Majestic has been talking about since 2016, and then Deutsche Bank is talking about 45. So, well, yes, when it comes to silver, 44, 45 seems to be an understanding there. And then, of course, you have a large divergence coming in from some of those brokerages too.
Wow, on fire. You know, prices are already ripping, and we've not seen this kind of a gain in a long time. Thank you, Manisha, for that. Get into a break. On the other side is a special segment. It's The Economy. Lata speaks to economists Jahangir Aziz and Luis Organis of JP Morgan on the global Asian economies, currencies, commodities on the sidelines of the 10th JP Morgan Annual India Conference.
Welcome back to our coverage of the JP Morgan 10th Investor Conference happening here in Mumbai. And now I have with me what I would consider two of the most important guests to parse for us the global economy, the commodities and the currency markets. I have with me Luis Oganis, who is the head of global macro research, including currencies and commodities, and Jahangir Aziz, a familiar face, who is the head of EM economy research for JP Morgan. Gentlemen, thank you very much for pulling yourselves out of this busy conference and giving me time. Luis, the Indian audience has a lot of questions for you on gold. I mean, it's just like a one-way rally. We've 45, 50% rise in a year. Where does this go from here over the, say, next 1 year or two?
It's interesting, Lata, that gold, it took 12 years for gold to go from $1,000 to $2,000 for troy ounce, 4 years only for 2 to 3, and it's going to take, looks like, less than 1 year to go to 4,000. So we do think that 4,000 is within the horizon. In the forecast formally happens in the first half of next year. It could certainly happen before then. And from then, we think that the gold continues to go up. I mean, we have discussed in some reports that in a couple of years we could see 6,000 mark, right? So a lot of things behind that, certainly geopolitical risks, concern about, U.S. Fiscal dynamics, and, the weaponization of the dollar has forced many central banks to start to diversify away from the dollar, the de-dollarization dynamics, and of course, the most recently, the attacks on Fed independence seems to be also fueling the demand for gold. So a lot of reasons why gold seems to be a quote-unquote good refuge.
Okay, so 4,000 looks very much round the corner, and you would not even dismiss 6,000.
Absolutely.
Okay. Would silver be as good?
Well, the difference between gold, silver, or gold in any other metal is that gold, the supply is extremely inelastic. So the possibility to basically produce more because prices are higher is very limited. The mining takes forever, the exploration takes forever, and which is probably not quite the case for silver. So I would say probably the precious metal complex, there's going to be some correlation. But if you want to focus yourself on one bet, I think gold is the one.
Okay. Well, I want to ask about dollar to actually both of you. Let me start with you. Do you expect, Jahangir, that the dollar index will head even lower, considering that the Fed is expected to cut? So two questions, actually. What are you expecting from the Fed, and what are you expecting from the dollar index over, say, a year horizon?
So we started off the year, let's go back to December, when we had the tariff threat. And on that basis, the answer was that the dollar was headed up, appreciating, right? So it turned out that after April 2nd, when we did get the tariff increases, in the first leg was a dollar depreciation. And over the last, I would say, 1.5, 2 months, Luis, dollar has been moving essentially sideways. Now, so while rates have gone up in the U.S., not in the last 2 weeks, but yields have gone up compared to other countries, we have seen the dollar depreciate. Now, both Luis and we made our careers working on emerging markets.
Yes.
So if you ask any emerging market country, why is it that yields are going up and the FX is going down, the answer is, well, that's because the yields are going up because there's an increase in country risk.
Okay.
If you look at it that way, then it sounds plausible that you will see yields going up and the currency depreciating. It is when we go back to the old 80-year framework of looking at interest rate differential and growth differential, then we start scratching our head. That why is it that the dollar, after the initial step down, actually has remained range bound? We still think that the dollar is headed softer. We'll have I think dollar euro at about 117, is at 113 now. All of that heads towards that, but I think we will have to go through the volatility of the dollar remaining and surprising us. But the way we are looking at it is that I'm from emerging market, he's from emerging market. This is what happens when risk premium on a country goes up.
Okay, for us it's more important because the rupee is at an all-time low as we speak, 88 and 88.55 or thereabouts. It's really fell a lot today. What's your sense? Does dollar weaken, but rupee weaken faster? It's an outlier.
It's an outlier, and maybe for good reasons, right? There's been several headlines that have generated uncertainty here. We can discuss further tariffs, etc. The rupee is screening cheap, quote unquote, in our models. That doesn't mean that the mean reversion is going to happen very soon, because we need some of these sources of uncertainty to clarify. But I think that, as Jahangir was saying, we are cautious on the dollar. We think that there's probably more dollar weakness in store. That, in principle, helps. The dollar is going to be depreciating not only against reserve currencies, but also against emerging market currencies, the rupee included, right? So if you look at the forecast that we have 1 year out, which, of course, is an educated guess, it is marginally stronger than what it is right now. So this is a bit of a signal that, yes, in the near term, probably there's going to be volatility for the rupee. But to the extent that some of these sources of uncertainty clear up and the dollar continues to weaken, that should prove eventually supportive for the rupee.
So the rupee is cheapened enough.
Yes.
All the bad news is in the price.
Yes.
Okay, Jahangir, let me come to the India growth story. Let's not get into the GDP numbers. We don't have it. We have a deflator issue, etc. But on a more qualitative basis, we have adverse impact of the tariffs. Now, almost a tariff on services. But on the other hand, the government has gone all out to encourage consumption. And the first numbers we are getting from auto sales and all is very good, obviously because August was also zero. So do you think that the domestic growth stimuli are more or less neutralizing and the country is on a reasonable growth path?
So let's look at it. Let's pass the tariff impact first, and then let's look at the GST impact. If you look at the tariff impact, if you look at the exemptions that exist on energy, on pharmaceuticals, and on electronics, then the impact is only about 1.1% of GDP of total exports is exposed to the US. And you do any kind of calculation over there, you're not going to get very much of a quote-unquote growth impact. However, that 1.1% of GDP includes textiles, leather, shrimps, gems and jewelry, which are extremely labor intensive. So I think you're going to get an impact where the growth impact is modest at best. But the employment impact is where I think the concern is. And that is where I think one needs to look at. There is going to be a very large employment impact, but it's not going to be that bad of a growth impact. Now, if you look at the GST, which is being seen as a counter-cyclical measure to the tariffs.
What consumption cannot go out, let it be domestic.
So let's look at the arithmetic. The arithmetic is that the total amount of decline in GST revenue, as stated by the government, not by me, is 0.15% of GDP. So the increase in household income is just 1.15% of GDP.
1 minute. The numbers were clarified by the CEA yesterday. It is, the compensation cess also has to be included. That's 1.2 trillion rupees, plus GST of 48,000 crore rupees, plus an income tax cut of 1 trillion. So we are looking at a 2.5 trillion.
No, but that's all that you're going to get in terms of household income increase. And then you take 70% of that as consumption and 30% that of this thing. You are going to get a step up in consumption. As long as the step up takes, say, 1 quarter, 2 quarters, it is going to show up as higher growth. But that's it. It stops exactly there. Unless you're telling me that every year GST is going to get cut. It is not going to get cut.
We are hoping that the way in which, for instance, there was a cement producer who says that he sees a clear 1%. If he was bargaining for 5 to 6%, he's now looking at 6 to 7%.
But the other problem is that if you look at, let's say, textiles, India exports textiles which is sold in Bloomingdale's and sold in Bergdorf and Goodman. Gems and jewelry of Sabyasachi is sold in Bergdorf and Goodman. I don't think there are very many people in India who can substitute those things by shifting to domestic consumption. I think we have a problem there. Look, again, I'm not saying that you are not going to get a push on a consumption growth. You have to, you're getting a tax cut. But it's limited only to a level shift.
Well, we are hoping it'll churn the capex cycle, but that question for another day. I want to get two big macro questions out of the way. One is the Chinese disinflation. Okay, let me start with you on that. Do you think that continues? Because now it looks like China is trying to correct some overcapacity, stimulate domestic consumption. Have we seen the worst of Chinese disinflation, or is there more?
Not really. I mean, if you look at what they call the anti-involution strategy, right, which is essentially saying that I'm going to strongly encourage you not to cut prices, it means that the inventory still remains. You cannot get rid of the inventory. If you're not going to get rid of the inventory, you're going to cut production. And if you're going to cut production, growth is going to fall. So in third quarter, we have already downgraded Chinese growth. We have downgraded, so Chinese growth on a year-on-year basis is going to be about 4.5% of GDP. Next quarter is also going to be about around this thing. But I think that once these numbers come out, I think the anti-involution policy is going to be stepped back because it is actually having an impact on production because you're not allowing inventories to clear. And we have seen demonstrated impact of that in the housing market. In the housing market, they have not allowed the secondary prices to adjust. And consequently, for 4 straight years, you are seeing the real estate market in quantitative terms still adjusting. Real estate investment turned negative about 3 years back. It is still negative. So
short point for an Indian investor who's looking at the WPI numbers getting impacted by Chinese dumping, that continues.
It continues to this thing, and therefore, we won't get into the math of GDP. GDP can get boosted simply because of that.
The disinflation is an important input for people making decisions, as is the dollar.
Yeah.
The other big macro issue is over-leverage. The US fisc has gone overboard, so are the European fiscal balances. How will all this impact emerging markets? Are we going to see some kind of a blowout? For the next 2 years, how would this problem impact us?
So there's a couple of things. Certainly the problem of fiscal largesse and high debt that is so prevalent in emerging markets. Now it's also quite prevalent in the developed markets, right? You have seen it, I'm based in London, we see it in the UK, right? The recent problems in France are related to also debt to GDP that they don't know how to contain, right? There's no easy solutions that are politically acceptable. In the US, clearly that is an issue, right? That's why the long end of the yield curve in the US has this term premium, right? And this big, beautiful bill is not going to help matters, right? It runs the risk of increasing the deficit unless growth comes back to the rescue somehow. So what that's going to mean, Lata, is that I think that for the foreseeable future, long-end interest rates are going to remain high, right? So we need to get adjusted to the notion that, hey, looking back the last 10, 15 years, we thought that inflation problems were over and that low interest rates were here to stay. Well, that's not the case anymore, right? So interest rates are going to remain higher. Now, for emerging markets, that the high interest rate in the developed world is never a good thing, right? Because it means that the cost of borrowing goes higher. That said, what we're seeing right now is that capital is looking for places to feel quote unquote safer, right? And there are some emerging markets where the fiscal dynamics are not that bad, are more sustainable, and that they at least have the promise to attract some of this recycling or reallocation of flows.
Do you think FPIs come back to Indian bonds? Will they find Indian bonds attractive?
I think that eventually will, because right now what is happening is that the RBI pretty much is done. The market is pricing some potential for additional cuts. Certainly, there's some risks of growth on the downside, as Jahangir has mentioned, and maybe the RBI seems it in a world in which the inflation is actually quite low in India, right? That maybe they cut further, and that could entice some more capital inflows into India. The issue is that India is facing a lot of competition from high yielders around other countries. I mean, in EM, right? So
whose currencies are not depreciating.
Yeah, no, we're talking about 5.5% policy rate here in India. In Brazil, it is 15%, right? And they're going to be cutting. So everyone is salivating at that process, right? So again, competition is hard.
Okay, unfortunately, out of time. Other shows are competing, but I would want to detain both of you on another day for a longer chat on global macros. Thank you very much, Jahangir and Louis.
Thanks very much, Lata.
Thanks for having us.
Well, that's it on this edition of It's the Economy. Back to you in the studios, Chartbusters, after a break.
Maruti and Hyundai rise in trade on the back of strong GST festive demand. Maruti delivers 25,000 cars on the first day of Navratri, while Hyundai records its highest single-day bookings in 5 years.
KC International rises over 7% in trade on the back of 3,200 crore rupees order win in the international transmission and distribution business. This marks the company's highest ever EPC order till date.
Shares of Shilpa Medicare rise in trade after receiving European Medical Agency's nod for drug that prevents blood clotting.
And the debutant today on D Street, shares of Europratik sales lists at a premium of 11% to its issue price at 272 rupees.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Vinny today. Looking good in pink, Vinny, but market's not in the pink of health as we speak. The Nifty is going with red, actually, as you can see to the top of the screen. I think we should get both the two indices. Yes, it is. There it is.
All four, actually, now.
All four in the red.
We are following the Navratri colors, right? So, but a bit of a correction given or a subdued performance today is something that we can be happy with and not much of a concern there.
Well, indeed, par for the course, one would say, after the kind of run that we have seen. But I think, Vinny, we've got a management with us, and we've got a new entrant on the bourses actually today. Europratik sales, well, that's listed at 11% premium to its issue price. We're now joined by Mr. Pratik Singhvi, the CMD of the company. Hi, Pratik. Good morning and congratulations on listing. Well, great power now. You're a listed company. And with great power comes great responsibility. So we'll keep chatting as, as the quarters progress. That said, just looking at the financials, and the last few years, growth hasn't really come about. And prior to your listing, you couldn't give us that guidance. But from here on, after 3 years of more or less consolidation, not too much growth in sales, where do you see this number headed?
Thank you, Nigel, for having us here. As you can see, we are a bottom line driven company. Our focus is on innovation, development, bringing new wall panels into the Indian market. We'll continue to do so. Having said that, for future, we are looking forward to grow both top line and bottom line. And we are in a very interesting space, which is decorative wall panels. And it is growing at 16 to 18%, the sector for the wall panels. And we hope that we can maintain that ratio in the coming years.
You'll grow in line with the market growth of around mid-teens. Mid-teens is something that you'll want to grow at.
We would like to outgrow the growth in the market.
By 1.2 times, 1.3 times, how much will you outgrow it?
I can't give you a number, but surely we are in line to grow much more than the current growth of the market size.
Okay, that is mid-teens growth. Current growth around that level at least is what we could keep an eye out on. Pratik, good morning. Thank you so much for joining us on the show. You've spoken about being a bottom line driven company, right? So I want to know what would be the growth now we could expect in the bottom line, as well as in terms of margins versus peers. Your margins are much better, right? 38-40%. While peers, when I look at it, it's in that 11 to 12% range. So what is it that your margins leading to better margins for the company?
As I said, we are an innovative company. We innovate a lot of new designs. We are into fast fashion, decorative wall panels. In last 4 years, we have launched 113 catalogs, which accounts to average 2 to 3 catalogs every single month. So on an average, every year we launch 1,000 to 1,100 designs. So when we launch new designs, we command a good bottom line, and that has been our DNA since so many years. My personal experience in the wall panel is more than 2 decades. And the team is well aligned. Even the channel partners are well aligned. We are spread across 116 cities and 180 distributors who are promoting our products. So innovation, R&D, development, understanding the consumers' requirement. We customize the product for the Indian consumer, and that is the reason which we command this bottom line.
Okay, but what would be the bottom line growth from here on that one could expect to see now?
As I said, we'll continue to grow at least 18-20% from here.
18 to 20% growth. All right. What does that mean in terms of margins? As you've mentioned numerous times during this interaction itself, you're focused more on quality, more on premium products, is the sense that I get, going by what all you have said, and also the focus is on researching and then developing products for your clientele. Your margins are relatively higher than the industry itself. Can you maintain it at these levels? So if you could give us a broad range on margins, point number one. And exports, I'm guessing, will be a relatively smaller part of your business. Please clarify on that. Where do you see that headed as a percentage of your mix?
So, Nigel, if you can see, over the years, we are a bottom line driven company. Since the inception, the company has been debt free. We have currently onboarded around 36 contract manufacturers where we design and we develop and we get it to the Indian market. And this is the way we have done business over the years, and there is no reason we cannot do it for future as well. As we are talking in next 3 to 4 months, we are launching 9 products and 300 more designs. So innovation, development, that is the reason for these profits, which has been consistent over the years. As far as the export market, currently 97% of the sales is in India and 3% is exports. So we see a lot of headway there, a lot of room to grow there. We already have a company in US with 3 warehouses already, a CEO and a sales team there. Also, we have floated a company in Europe. So we want to take this wall panel to all across the globe. And we run an asset-light business model where we have 36 contract manufacturers, and as per the market, as per the consumer, we design the products and bring it to the market.
From 3%, what can it go to? Exports and also margins from this 35 to 40%. Can you hold on to that range very quickly?
Yeah, margins, I'm pretty sure, will continue to work at this pace, and this will, over the years, in fact, the margins have last 3-4 years have gone high from 30% to 35-40%. So we'll continue to do that.
And exports percentage?
And in terms of exports, it's 3%. We are targeting at least 2 to 3% jump in next couple of years.
Okay, 2 to 3% jump in terms of exports also from here on is what we could watch out for. Prateek, thank you so much for joining us on the show, and good luck, and hope to have you more often now since you're a listed company. So we'll interact with you more now. Thank you so much for that. But on that note, we're going to step into a very short break. On the other side, we'll get back with the management of Sichasai Technologies to discuss the details of their IPO, which has launched. Welcome back to Chartbusters on CNBC-TV18. Now let's put the spotlight on one of the companies that's open for subscription today and will be hitting the market soon, and that is Sichasai Technology. We have Mr. Lalwani, CMD at the company, joining us now in the studios to talk to us about their company, what we should be expecting going forward as well, and what segments maybe are looking interesting for them from here on, because the company is surely a very interesting one, Nigel, right? Card manufacturer, payment solution side, communication side solutions as well, and IoT of things. All of that has seen a growth coming in. So, Mr. Lalwani, thank you so much for joining us on the show.
Thank you for having me on the show.
You know, just if you could start by talking to us about your business. 3 verticals: payment solution side, communication side, as well as IoT of things. Payment solution is the larger chunk of your business right now. But how do we see this shifting? What is the growth here that one is watching out for now?
So I'll just probably give a little idea of what our business is all about. So any person or any family today, they receive multiple articles in their financial interaction with the world on a daily basis at their homes. You receive debit cards, credit cards, you receive your bank statements, your bank communication. You will receive some life insurance policies, general insurance policies. You also have your tax identity cards, the PAN cards, etc. So for almost about 25 years, we or organizations like us have been working with the banking and financial services space. We've been processing, manufacturing, and dispatching these articles directly to the doorstep of the customer's customer, right? So we work on behalf of the BFSI customers, but we actually end up delivering this to the end customer. Also now, we've diversified into the IoT vertical, where we are producing RFID tags, and we believe through this business, again, we will reach a large consumer base where we will be working in the retail, renewables, logistics, and manufacturing. So in short, if you look back at the diverse spectrum of products, right, we have secure documents on one side. We use data to personalize those documents. On the other side, we have semiconductor chip bonding, which we do, and we're actually writing data onto chips and doing RFID tags. So net-net, the business has been structured into 3 verticals. One is the payment solutions vertical, where we have the payment cards, the checks that we do. Then we have the communication and fulfillment solutions vertical, where anything linked to data, which has to go directly to end consumer's home or directly dispatched to customer, is what we do. This could be physical, it could be digital. We do WhatsApp messaging, we do SMS, we do emailing, depending on the customer's requirements. And then we have the IoT vertical, where we've actually gone grounds up from actually taking semiconductor wafers, creating RFID inlays. So just to explain to the viewers, if you see a FASTag, okay, there is a small aluminium piece there with a black dot. That is actually your RFID inlay. So in 22, we thought that it's better that we kind of build this grounds up, especially to ride in on the consumer story of India and make in India piece for the manufacturing. So we actually have forayed here a lot and done a lot of work with some fast fashion brands, done work for renewables and logistics. So this, in short, is the summary of our whole business.
Okay, all right, Mr. Lalwani, welcome to the studio, and we look forward to interacting with you as you list. Sure. Now, the basic point is you're raising close to around 800 crores from the market. So I think 350 crores approximately is the OFS. So no questions on that. Whoever's getting the money can enjoy it. But the market will want to know, what about the remainder? The remainder is going to be used for various purposes and also be used to lighten the balance sheet.
Right.
So tell us, what is the debt repayment? What is the pending debt? And in that case, what is the interest saving?
So essentially, we, out of the 480 crores in the primary, we already raised about 120 crores in our pre-IPO round, out of which we already repaid back about 70 crores of debt. But out of the net out of 600 crores primary, which is pre-IPO and the IPO proceeds, we have 300 crores which goes for our debt repayment, and about 200 crores goes for capacity expansion in the existing manufacturing facilities, and then obviously the general corporate purposes. So we had a debt of about 350 crores on our balance sheet as of 31st March 2025. So we believe that with repayment of 300 crores of debt, obviously we were raising our funds at about 8 to 9%.
Yes.
So whatever is the consequential savings of about 25.
So approximately 27 crores, 25 to 30 crores, a broad range in terms of interest saving.
Yes,
correct?
That should be coming in.
And that 200 crores are going for capex expenditure.
Yes,
what is the asset turn on this kind of money that you're putting in? Last year, I think the last 2 years, you've done around 1,500 crores of sales.
Right.
So what is the asset turn on this 200 crores? How much incremental sales you can do? And in case business starts booming, what is the optimal revenue number in line with regulation, sir? In line with what the regulators say? You're not giving us a forward-looking guidance. You're telling us what is the revenue potential of the company.
Yeah, so essentially, so we've been growing at a good rate in the past. From the, if you look at the reports, because as per regulation, I can stick to that. Reports say that the IoT business is slated to be about 10,000 crores business in about 2030, and the payment card business is slated to grow as a revenue of CAGR of 12% from 2024 to 2030. Just to tell you one more aspect before I come to the asset part is that. Sichasai has been a known name for innovation not only in the Indian payment card space but also in the global payment card space. So there are only a global handful of players in the global payment ecosystem with the global payment schemes who have their own metal card certified or their biometric card certified. So we are one of the few players, in fact the first in India and probably the 7th or 8th in the world to get our metal card certified by global payment labs. So with these products, and the innovation that we continuously do, we foresee that we should be exceeding the CAGR given by the reports. That's the maximum that I can say. And also on the asset side, the investment that are going in, half of them are going in for our IoT vertical, and the other is going for our metal card and the card capacity building, and the rest are going for the capacity expansion in the general business. Yes.
Okay, so IoT of things, that's where we're seeing increase in terms of revenue, percent in terms of share also. FY25 it was 7%, FY23 it was around 0.3%, around that level. From here on, how do you see that share improving? What are the margins of that side of the business? And does that help you diversify to other segments then, non-BFSI?
Yeah, it's an interesting question. And see, the IoT vertical, to our mind, shows great promise for the times to come. And, we foresee that the percentage of contribution of the IoT business to our overall revenue should be, growing at a very, very healthy rate. And in a couple of years, it should be substantial to the overall revenue. And the interesting part of the IoT business is that it has a lot of relevance for our BFSI customers as well. But it allows us to also open up into the non-BFSI space. As a company, till about 2 years ago, we were almost about 97-98% dependent on BFSI.
Right.
And we feel that with the consumer story of India playing out, with the China Plus One and the manufacturing story playing out, we are actually, investing pretty deeply into R&D to broaden our product portfolio in the IoT vertical. We're also trying to get our sites certified by global schemes for eSIM. Because eSIMs will get into a lot of white good appliances and manufacturing in India goes up. We're also going deeper into getting sensors placed into the RFID tags, so you could probably know more parameters than presence and absence of tags.
Yeah.
There are two types of tags. There's an active tag and a passive tag. So recently in July, we also did an acquisition where we acquired a company which is pretty deep into active tag production
What would
and
be
manufacturing.
the mix then of IoT? In the next 2 years, 3 years, then how much would we increase it by? How much would that increase be?
I think
15%, 10% of your revenue?
Probably we should not be far from that number, but I don't know what I'm supposed to say under regulation.
Okay, all right, Mr. Lalwani, we appreciate you coming down. Give us a brief, introduction to the business. We wish you all the best with regard to the IPO. On listing, we re-invite you on this show itself, and we'll squeeze you for some numbers. But thanks a lot for joining in, sir.
Thank you. Thanks for having me here.
Time to slip into a short break. Come back, continue our focus on markets and on stock-specific action. Don't go anywhere. Welcome back. Well, the markets are holding with a cut of around 70 points, but since the time we started the show, no big damage on the Nifty itself. We're more or less status quo. The Adani Group stocks, though, continue their big run. Adani Enterprises, the Adani Ports, they have taken off in the last few minutes. And the Nifty Bank, that's trying to hold one end up. So that's encouraging as well. But we've completely run out of time on this edition of Chartbusters. From Vinny, myself, and the entire team who put this show together, thanks a lot for watching. But the team of Trading Hour is waiting for you on the other side.
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Hormus Fatakia in the red now for the third consecutive session. The Nifty has breached yesterday's intraday low and is trading with cuts of close to about 78 points. So the Nifty is now at 25,125. Sensex just below that 82,000 mark, 81,900, with a cut of close to about a third of a percentage point, with the Midcap index down nearly about 0.5%. Barring autos, where there is excitement surrounding the sales that we've seen, at least on day one of the Navratri season, very solid sales. We'll discuss that in greater detail with Sudarshan. The auto index is up, but if you remove that, all the other indices are under pressure. So it's FMCG is down close to about 1%. IT, after yesterday's cut of close to about 2.5%, has fallen another 0.7%. It started trade on the flatter side, but that didn't hold, and the IT index too is now gravitating lower. And if you pull up the frontline pack, as you can see, it's a mix of many in the FMCG consumption, bracket largely. Trend, Asian Paints, Nestle, HUL, Titan. These are stocks under pressure, but outside of that, you've also got economy-related stocks like an Ultratech Cement reeling with cuts. But that's the large cap action. Mid-caps are weak too, and Hormus is now at the big wall with all the movers and shakers of this morning.
Mid-caps are weak too, but the ones that are strong, and you take a look at the volumes there, you would wonder why are the others weak as well. Starting off with a name called Reflex Industries, and this stock is up around 17% today. It's snapped a 4-day losing streak, and this is the biggest single-day gain and volumes as well on the stock that we've seen since July of last year. We are comparing today's volumes to the 10-day average as well, just to show the increase in trading activity. But 75 lakh shares have already been traded on Reflex Industries in the first couple of hours of the trading session, compared to a 10-day average of just 2 lakh shares. Now, at this point of time, the stock has just about managed to cross its 50-day moving average of 319 rupees. So that's one barrier that is crossed for the stock. But despite this move, the stock is an underperformer this year, down 19%. But the stock had quadrupled in 2024. So some profit booking coming in for Reflex Industries this year, but today the stock doing well. KC International, of course, surging on the back of a large order win that it announced last evening. The stock is slightly off the highs of the day, was up around 7 to 8% in the earlier part of the trade, but volumes today are the highest in a month, and we have already had over 1 crore shares that have already been traded. The 10-day average is just 4.5 lakh shares, and the stock has also broken above its 200-day moving average, trading above all of the key moving averages now. But despite that, the stock is down about a quarter this year, but the fact that it had doubled last year offsets some of this fall. Now, BF Utilities is the other one. They snapped a 5-day losing streak today. It's also the biggest single-day gain and volume since the stock has seen in a month, now 13% higher on the stock today, with 18 lakh shares being traded, and the 10-day average here is only 65,000 shares for BF Utilities. And as a result of this move, the stock has broken above all of its key moving averages, and yet another outperformer today, which has been an underperformer this year, still down 10% on a year-to-date basis, and this comes on after almost 4 years of positive returns for the stock. And lastly, Subros on the list today. The stock has moved significantly in the last 7 trading sessions, of which it has gained in 6 of them. The stock is up 21% in this 7-day period. And if you look at the 7-day period as well, this is the 5th day in a row where the stock has had more than 1 lakh shares being traded in a single day. And today's 12% move comes on the back of 8 lakh shares that have changed hands, compared to a 10-day average of just 1.5 lakh. And this is one stock that has been an outperformer this year. They're already up 80% so far in 2025, and a few more percentage points of gains would make it the best calendar year for the stock it has had since 2017, Rima.
Thank you very much for that. Defense stocks should also be on your radar today. In fact, they're up and about. This is after the Defense Secretary Rajesh Kumar Singh told Network 18 that the government will soon invite proposals for medium-altitude, long-endurance drone contracts worth 30,000 crore rupees. He also said that the government is looking to double down on indigenization and will spend at least 75% of its defense capex within India. Listen in.
If you're looking at it in value terms, I think you can expect in capex terms somewhere between 25 to 30 billion dollars minimum per year over the next decade, maybe a little more, I would say, rather than less. Our current plans are that at least 75% of our capex will be spent within the country. That's our normative target. Last year, we actually did 88% of our capex within the country. Last year, for the first time, we exhausted our budget. I think it is challenging to spend money in the Indian context, given the, the very elongated sort of fail-safe type of procedures that we follow in terms of collegiate decision-making, approvals at the highest level, involving, a lot of interministerial consultations. Last year we did it, and I'm sure this year also we'll do it. It really depends on how many contracts you end up signing. And last year we did a record number. This year we've already hit 3/4 of that, 1,50,000 crores worth of contracts we've already signed, or are in the process of signing if you include the LCA program. So we are confident we can do at least 2 lakh plus crores this year.
Excuse me. Sorry for that. We'll slip into a break on that one. On the other side, we'll focus on the crypto market with Sigma Capital's Vineet Budki. Stay tuned.
Join CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Joining us on the Crypto Corner now is Vineet Budki from Sigma. Vineet, hi, thank you so much for joining in. And the way we're looking at the markets, it really seems to be behaving like any other asset class. After the US Fed meeting is done and we have expected result in hand, there is some profit taking that we've seen across cryptos as well, as has been the case with some other asset classes. How would you read cryptos? Is it like any other asset class? Is it a safe haven, the kind of buoyancy that we've seen in cryptos in this year? What is your reading into it?
So my reading on it mostly is, when we buy a house, we don't go to a realtor every day to look at prices. But in crypto, a single day of 5% drop and suddenly everyone thinks it's all changed. I don't think we should look at daily prices on over a 4-year period. It's just like investing in a Web2 startup. You have to look at it over a 8-year or a 10-year period. But when it comes to crypto, I think more than price speculation, it is all about understanding what cryptos represent. Today, 95% of people don't understand what a Bitcoin or what a Ethereum represents. And I would say we should talk more about it, where, we should understand that Bitcoin is a store of value like gold or any of these assets like house, while Ethereum and Solanas of the world are companies which are trying to change the way we interact and transact. These are startups which we are investing in. And then you have the stable coins, which basically are a way people save money. In India, if you remember as kids, whenever we made ₹1,00,000, mom, dad would say always put it on FD so that you can save yourself against inflation. But today with the currency depreciating, stable coins become interesting. And then, you have the meme coins, the Wolf of Wall Street, penny stocks that Jordan Belfort ran. Again, people don't understand these 4 categories and just look at price. They think it's a magic coin. These ups and downs happen. If you look at the last 10 years, September and August and September have been negative months, and the next 2 months have been big green months. But again, look at utility and not just price action, because price always doesn't reflect value.
All right. Vineet, when you look at the longer term as well, and we look at volatility, which really seems to be maturing at this point in time, there are better understandings of the market. Actually, your latest data also shows that nearly 180 public companies are now invested in some sense in case of cryptos as well. How are you looking at the institutional adoption side of this?
Again, I have had this discussion with a lot of people globally, in the US specifically, where they say institutional adoption will make this market more mature. But when we look at numbers, as of today, the whole stock market is in this whole stock market, which means New York Stock Exchange and Bombay Stock Exchange. There's a small company known as Google, which is worth $4 trillion. And the whole crypto market is $4 trillion market. So, it's actually not even matured. When you look at these institutional buys, it's only 4% or 5% when it comes to treasury companies that hold Bitcoin stocks. So I think it's still very early in this whole space. We haven't seen real mass adoption, and this volatility will continue. When people say every 4 years, so if you look at the cycle in the last 10 years, you had a 80% drop on the first cycle, you had a 76 and a 74% drop between a December of this year and a January 13 months later. So I think institutional adoption has come, but has it come to that scale where volatility will go away? I don't think so. We will definitely have a 150K, 200 Bitcoin. We will have $1 million Bitcoin over the next 10 years, but we will also have a 60 to 70% correction in the coming 2 years.
All right. That is having head on your shoulders there. Vineet, also, this is also an ongoing conversation on how much of crypto should you have on your portfolio. What is your advice to people who already are invested, and then people who want to start into this? Is it too late? Is it the right time? What would you say to them?
Again, as I said, I was telling you about the numbers about, stock markets being so big, and, Apple being one of the companies at 4 trillion, and the whole crypto is 4 trillion. It's so early in this segment. And even when you look at adoption numbers, Crypto.com came up with a report that there are 500 million wallets. If I assume one wallet is one person, that is less than 5% of the world population. This has not even started. And these 500 million wallets are the ones, 90% of these guys wake up in the morning to see Bitcoin price. They do not understand the real utility of crypto. They have not used Bitcoin to store any value. They have not used USDT to actually earn a 5% yield. So I think it's too early, but the real thing is about finding the real value. You cannot just end up investing in Shiba Inus and Doges, but you need to find the Teslas and the, Googles of the world. So it's very early. I started 5 years back. I had a great run, and I think still too early.
I get your point there. Well, a lot of people that I have been talking to also say that these are still infancy years when you talk about the crypto as a segment here. Having said that, I mean, I do get your point that a lot of people do not understand the use cases, but there are some who do, and that perhaps is a very, very niche crowd right now. What is your sense on how much for people who want to start right now? Let's agree to the fact that it would be a starting somewhere, and somewhere means starting investing to it, starting getting a feel of it, and then looking at technology and various miracles that it can perhaps perform. But for people who are just starting into this, what would you advise to them?
So what I would advise to people is rather than looking at green and red candles, start understanding the utility what these tokens get. So, you know, when I talk about, say, ICICI Bank today has $60 billion in deposit and is worth a $120 billion market cap company. Now, when you look at Aave, which is again a bank on smart contract, it has close to $70 billion of deposits, and it's valued at $2 billion, like 1/60th probably of the price of ICICI. So the point is about understanding what utility it brings. You know, we all know about Aadhaar card and how the government took biometrics and made it an Aadhaar card which is connected to a bank account to verify identity. But we don't know about WorldCoin, which has been built by Sam Altman, the father of AI currently, and it is doing the same identity solution. So what I'm explaining to people is that you need to first understand what these things do and what is the final adoption parameter of it, and then invest in it and not just randomly take advice on YouTube channels and buy tokens. So I would say learn more, get to meet a lot more founders, go to events globally, because we are very early. You know, we are in the 1980s of Indian stock market where people clearly don't understand what a token represents. You know, we would have our scams of Harshad Mehta and Ketan Parekh that would come along, but you know, we would have people like Dhirubhai Ambani who actually build up Reliances, because these are the founders that one should back it up. So I would say go out, meet more people, understand this industry more, and understand utility and adoption.
Vineet Budki, really pleasure having you on the show here. Hope we speak again. And that, of course, is how you should be looking at crypto as an asset class. Early days, and this is perhaps one of the best times you should get into this crypto as an asset class as well. But with that, it's time for a short break. We'll get you more on the markets on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Slipped below 25,100 briefly is the Nifty, making a new intraday low now of 25,084. So just over 100 points lower now on the index at the lowest point of the day. Some flashes on your screen for Ola Electric launching its Celebrates India campaign, and some prices also disclosed by the company introducing the Muhurat Mahotsav with the electric vehicles now starting at 49,999. So announcements there from Ola Electric on the occasion of the ongoing festive season. The auto companies reporting numbers as well. But with the markets having slipped to the lows of the day, it's a good time to get in the latest trends from the F&O space. And Sudarshan is joining us from the F&O desk for just that. Sudarshan.
So overall, it's turning out to be a very weak day of trading session. If you leave out the auto index, all the sectoral indices are trading with cuts. And just now we have seen that Nifty is breaching below the level of 25,100. And now the support comes around 24,900. And if Nifty market has to move higher, Nifty, IT and Nifty Bank have to provide support. But IT is continuing to see weakness after yesterday's fall. Today also we are seeing that it has extended the losses. But one positive part, if you can just say, that is the put-call ratio. Now it has slipped below 0.70. So normally in the range of 0.60 to 0.70, that level, that in that range, we start seeing the short covering. But we'll have to see for that. If you take a look at the options data, there is a huge call writing that we are seeing at the level of around 25,200 also, 25,300 also. So at 25,200, if you just take a look at the premium is now fallen to 15 from the level of 71. But in contrary, for the put option, premium has seen a rise. For 25,100, premium has increased to 22 from the level of 16. So support for Nifty, 24,900. Resistance would be the recent high, basically yesterday's high of 25,330. As far as Nifty Bank is concerned, support would be 55,100 now, and resistance is now 55,500. Two stocks that I have taken, one is Emphasis. All the IT stocks are seeing fresh shorts, but the maximum fresh shorts are being seen in the name of Emphasis, and all the auto stocks are higher. But one stock that is outperforming the most is Maruti, after the company has released the number of the first day of Navratri, and on the back of that, it's seeing fresh longs.
Thank you very much for that. Helpful as always. Get into a break. On the other side, we'll turn our attention to not banking from the traditional financial space, but investment banking. So on the other side, JP Morgan's Paul Orain will join in to talk about the top M&A deals, the PE promoter exit, and what the activity has been and what the outlook is. Stay tuned for that discussion. Welcome back. Now, the 25,100 mark has been breached in the Nifty, extended the fall to 100 points on the Nifty. And this, remember, marks the third consecutive day of a fall. But, you know, in the morning when we were discussing the auto numbers and the stellar numbers on day one in terms of sales by Maruti and Hyundai, Sudarshan had joined in and he had asked, like, how is the Josh? Right? And the Josh is still going very strong in the autos. In fact, that is our big story, our top story. He's joining in with the numbers. So, Sudarshan, first, take it away.
So at least for the first day of Navratri, I say Josh is high.
Josh is high, yeah.
And that's what the comments that we are getting from all the major names, you name it, Mahindra and Maruti, Hyundai, Tata Motors, all the companies have reported the numbers of the first day. And Maruti is saying that the inquiries that it has received, it has like never seen before in the last 35 years. On the very first day of Navratri, it has recorded 80,000 inquiry and company has delivered more than 25,000 cars. And now it's saying that very soon it's going to deliver almost 30,000 cars. Remember, 18th of September, company had announced GST cut pass on and also had provided additional discounts. Since that time, it has been receiving inquiries of around 75,000 and with 15,000 bookings every day. And that is almost 50% higher that company gets on the normal days. Similar trend is seen in the Hyundai company, saying that it has recorded around 11,000 dealer billings on the first day of Navratri. That's the single day highest that company has seen in last 5 years. Even Tata Motors has come out with the numbers. It has said on the first day, it has done delivery of around 10,000 with the inquiry crossing more than 25,000.
Indeed. Now, that is the first of the data that was reported with Tata Motors, Hyundai, and for Maruti as well. But, you know, the commentary from Maruti was pretty intriguing about the fact that it's the best Navratri that you've seen in 35 years. Now, the entry-level segment has been the big talking point. You know, so there's SUVs have done fairly okay, as M&M and the likes. But has that entry-level segment, which has been under pressure over the last few years, been their underperformer, has that seen an uptick?
It has. At least like that's what we are getting to know from what exactly the company is saying. If you remember in the last few quarterly earnings, every time we used to talk to Mr. Bhargava, he used to say that there is a problem in the entry-level segment, and for the last 5 to 6 years, this segment has been under pressure. But now company is saying that even for this segment, the booking has been 50% higher than it used to get on the normal days. And remember, the day company had announced discounts and GST pass on, one segment that it had provided additional discount, that is the entry-level segment, where the price cut was as high as rupees 1.30 lakh. And in the percentage term, it was 27%. And if you compare with the SUV price cut, it was just in the range of 2 to 14%.
Got that. But, you know, Sudarshan, these are, of course, one-day sales, right? And prior to that, people were also holding back on their sales in expectation the GST rate cuts are going to be announced, etc. Plus the Shraddh season. So do we have any indication of what the numbers were for the early part of September? And the question is, will this sustain?
So, do you know, that's what I'm saying, that it's the number of just first day.
Yeah.
So we have to take these numbers with big ifs. Because as of now, if you talk about the first half of FY26, numbers were largely muted. All the major segments, you take a look at PV, two-wheelers or commercial vehicles, all these segments have seen a growth just in the range of 2 to 3%. So it was largely muted. But now, after this, most of the brokerages and industry have increased their estimates for FY26. So passenger vehicle segment, earlier they used to expect, they were expecting that growth is likely in the low single digit. But now they are saying it might be mid-single digit, or there's a possibility that it can achieve even high single digit. It's the same trend for two-wheelers. Earlier growth estimate was mid-single digit, but now they're expecting high single digit. So we'll have to wait and watch how these things pan out over the next few days.
Well, all of this has fallen into place at the same time, right? So Darshan, the GST rationalization, the start of the festive season. So how big has been that impact of that GST cut in terms of trying to spur demand? Because on the sector as a whole, and in case for going forward as well, what are some of the other catalysts that you're watching out for, especially because we're heading into earnings season now, so numbers will be coming out anytime soon?
That's true. So GST cut impact is huge. GST cut was done across these segments. You take a look at entry-level segment, high-end cars. So majority of the segments, so I'll say up to 80% of the segment, the bracket, tax slab bracket was reduced to 18% from the earlier level of 28%. one segment, that is the high-end car segment, where the tax slab, basically it's increased that most high-end car, it would fall in 40% slab. But effective tax rate for that segment also comes down. So it's positive for across the segments. And apart from GST cut, there are other catalysts also. Income tax cut was announced, and very soon we are going to see the implementation of 8th pay commission. That also will be positive for the sector.
Okay, and a quick word on how the stocks have fared?
Well, so if you take a look from January to August 14, whatever the returns these companies or the auto index had given, now in the last 1 month or say since August 15, these companies and the index have either given returns of more than those levels or almost of the similar trend. Also, on the valuation front, if you take a look of the auto index, currently it's the valuation is 30 times versus 5-year average of 45 times. So I won't be surprised if there is a further up move that we see all the auto names.
Valuation comfort. They have big tech in the US. We have big auto over here. We have big auto. All of them, Maruti, M&M, Hyundai, trading at or near record high levels. Sudarshan, thank you for that comprehensive roundup of the auto sales figures for the first day of Navratri, of course, and of course the road ahead for the sector as well. We'll take a short break here on Trading Hour, and as promised on the other side, Paul Uren joins in to discuss the top M&A deals, the PE promoter exits, and a lot more on the other side. Stay tuned. Welcome back from the sidelines of the 10th JP Morgan Annual India Conference. Nimesh is now joined by Paul Urin, the head of investment banking Asia Pacific at JP Morgan. Nimesh, take it away.
Well, Armaz, we all know that there is so much happening in terms of M&A deals, fundraising, PE exits, and everything. So I'm joined now with by Paul Urin. Paul, you head the Asia Pacific investment banking at JP Morgan. Generally investment bankers are in a hot seat of late. What's keeping you busy at JP Morgan across Asia Pacific? What's the kind of trend that you're witnessing across fundraising and M&A?
Sure, Nimesh. Well, look, let me start by saying it's great to be here. Every time I come to India, I get more and more excited about the energy, the passion, the entrepreneurial spirit, and it's really great to be here in Mumbai for the 10th JP Morgan India Summit and see the corporate engagement and the investor engagement here. Across the Asia Pacific business for us, it's a year that really has exceeded our expectations that we had at the start of the year. And certainly when we went through some of the challenges around the introduction of tariffs in early April, it was quite difficult to be optimistic about what that may mean for deal-making activity. What we've obviously seen subsequent to that is a lot of corporates deciding that they have to get on and execute on their strategic agendas. So we've seen a lot of companies decide to access the capital markets, both ECM and DCM, and we've also seen a lot of our corporate clients execute on their M&A agenda, as well as our private equity clients. So it's actually turned out to be quite a positive year.
So Paul, has India topped the chart for JPM as well in terms of fundraising, in terms of M&A deals for this year?
Yeah, so look, India's become a very, very important market for the APAC investment banking.
Has that surprised you?
No, it hasn't.
Really.
I think those long-term structural trends that we've all observed in India over a number of years have obviously continued, and I think will continue and indeed will accelerate. So the investment in infrastructure, the policy support, the desire for global investors to have exposure to India, all of those things have been very positive, and I think they're going to continue for some time. That being said, in the short term, clearly investors and corporates will be a little cautious. There are a number of issues to work through, but in the long run, we're very, very optimistic about those structural drivers.
Well, you've been doing investment banking for many years now, and you spoke about a couple of headwinds for Asia Pac, for global as well, the tariff issues, the geopolitical risk and all. In this kind of an uncertain environment, you see more M&A activity or more fundraising happening, or it's a bit subdued from a global client perspective?
Yeah. So ordinarily, when volatility or uncertainty is high, boards of directors tend to be somewhat cautious and find a reason not to do things. I think what we've seen, certainly over the last quarter or two, is that clients are deciding we have to get on and execute on our strategic agenda. So if there's a transaction that's compelling, whether it's divesting something that's non-core so that they can reinvest in areas they need to invest in, or if it's investing in certain countries or industries that are going to strengthen their business and deliver improved returns on equity, corporates are getting on and doing it. And I think that's a really positive sign for the markets.
Paul, the one big trend as far as India is concerned has been the outbound M&A deals this year. We've already seen $12 billion of deals. Some mega acquisitions been announced. Tega announced a very large $1.5 billion acquisition. Tata Motors went ahead and bought an Italian company. Is this only India-specific phenomenon of outbound deals? Or are you seeing this across Asia Pacific and there is a lot of hunger to buy out big assets?
Yeah, we're seeing it across Asia Pacific, but what I would say specifically about India is that Indian corporates are very well placed to pursue an outbound M&A agenda. If you think about valuation multiples in the Indian market, there are a lot of companies that are trading at fairly attractive valuations, and there are a lot of companies that have very strong balance sheets. So the credibility that Indian corporates have as acquirers into other markets, I think, is very high at the moment, and we expect that trend to continue.
Is the access to liquidity also, given a bit of confidence to a lot of the Indian corporates to go out and adventurers do some large transactions? Is that
one of the great things about the development of the Indian capital markets, and this has happened in a relatively short period of time, is that the breadth and liquidity of the equity market here has expanded meaningfully in the last 2 or 3 years. So the ability to raise very large quantums of capital, both in IPOs and follow-ons, but also the ability to execute block trades of scale in a very efficient way, I think is a really positive development for India.
Sure. What about inbound deals, Paul? Because I know that JP Morgan has been involved in some large transactions in India as well in terms of inbound money. Any specific sectors that you think there is a lot of potential M&A likely? Because we saw a very large, Japanese bank getting into the banking sector in India. What are the sectors that you think there's going to be large potential?
Yeah, so one of our objectives is to support our clients all around the world as they continue to build their businesses. And we also support our local clients as they build their businesses both domestically and also internationally. When we look at that theme as it relates to inbound M&A into India, a lot of our clients across industries, including technology, financial services, the banks, the insurers, healthcare, consumer, and other industries, are very attracted to this market. Obviously, there are long-term structural tailwinds for the market. There's the rising middle class. There's a lot of very positive consumption themes. There's also a government that's supportive of growth. And so for a lot of companies that don't have a presence in India, this is a very important market to try and get access to. So while some of the metrics may look like there hasn't been that much activity that's happened yet in India, we're talking to a lot of clients globally about ways that they can expand their presence in India. I expect that you'll see a lot more transactions announced soon.
There is a lot of interest in expanding presence in India, getting access to India's growth market. This is a very interesting conversation, but we need to get into a break because on the other side is also another interesting conversation where Gartner joins in, and they're predicting that AI spending globally, worldwide, will hit $1.5 trillion this year and scale up to $2 trillion next year. Welcome back. Now, according to IT research and advisory firm Gartner, global spending on artificial intelligence is all set to reach $1.5 trillion this year and inch up to $2 trillion next year. John David Lovelock, Distinguished Vice President Analyst at Gartner, is here with the details of this report. Thank you very much, John, for joining in. So first, if you could just give us the big picture behind this report, how have you arrived at these numbers and what's driving this kind of growth and interest?
Good morning. Thank you for having me. Yes, it is a fascinating market. AI is taking off so quickly. It is getting into every piece of the technology market. And, most people are very much focused on the server market as being the driver here. And although it is the largest single market that we are tracking, it's not in fact the driver. It only represents about 300 billion of the $1.5 trillion of spending. Software, services, mobile phones, PCs, tablets, laptops are all being part of this amazingly growing market.
So can you give a breakup of this $1.5 trillion? How much will come from servers? What's the pecking order in terms of contribution? And then if you could get to the growth in these individual segments.
Sure. The leader right now is the server market. Our AI optimized server forecast is about $267 billion this year. It is the largest market this year. It's the largest market next year. But by the time we get to 2029, it actually subsumes to fifth. IT services up at 282 is a very strong market, and it remains strong throughout the forecast. It bobbles between the top market and the second market most of the way. We have the devices coming in at 298. And again, this is about the smartphones that are getting the MPU, TPU chips included in them so that they are ready to run AI locally when a model becomes available. We also have the semiconductors that are being bought to create all of the mobile phones, all of the servers, all the piece parts that we need to actually run the models. The models themselves are actually a very modest part of the market. It's only $14.2 billion this year, raising up to $75 billion by 2029. So while it is sort of the centerpiece of the story and where most of the work happens, it won't necessarily be the part of the market that is the most easy to monetize.
John, good morning. Thank you for joining in. The growth bit is now known, right? With billions and almost now potentially even trillions being poured into AI for the growth of the sector. But how does that come back? Because there have been certain reports that have been questioning or raising alarms over a potential revenue shortfall. So eventually when the AI monetization does start to happen, do you believe that this is going to be an extremely long gestation period for these investments to start paying off eventually?
I think there is a mismatch between where people are expecting the money to come in that payoff. We're already seeing, as an example, that the AI models themselves may not have the $1 trillion of income that has been speculated that is required to pay off the servers that are being purchased and the data centers that are being built. But it must be remembered that every piece of software will have AI embedded in it. Part of the price that you pay for software will be for that AI engine. That AI engine will get paid for from the software providers, not necessarily directly from the clients consuming them. Consumers will do their usual thing. They will be consuming AI and they will be paying for it in different means. So in some cases, AI is actually going to be the model underneath where the money is being made, not necessarily directly in line of sight to that revenue. And we're also going to have the regular sort of third-party payment situation when it comes to technology, particularly in the consumer space, where we'll be paying for it with ads and with the attention-based economy that we have.
In which segment do Indian IT companies fit in, if at all?
The IT company or the service companies fit in the AI services area. And again, there's a bit of a back and forth with them, unfortunately. There is money that they're making providing out technology consulting around artificial intelligence, business consulting around artificial intelligence, and there are managed services coming online that are specifically for building models, maintaining models, ensuring that your generative AI models are running correctly. so the managed services component. But this is also the first time where services companies will actually start using this technology themselves in their delivery. So I may be getting business consulting done, but they're going to be using artificial intelligence to aid in the delivery of that service. So in the services world, it's also being served up as much as it is being part of the contract that is being delivered.
John, pleasure having you today. Thank you so much for these interesting insights, and looking forward to you sharing more such insights on our platform more often. John David Lovelock there of Gartner. We take your leave on this edition of Trading Hour, but just before we do that, just pull up the rupee. It's made a new low just a few minutes earlier. It's set for its biggest single day fall in a month now. 88.74 is where the currency stands now, and it's a new record low that the rupee has made in comparison to the US dollar. So a new low for the currency. The markets slightly recovered from the lows of the day. 25,120 is where the index currently stands. We take your leave from Rima and me. Thank you for watching. Halftime Report takes the action forward.
Stocks dip a little more with large caps and mid caps seeing similar declines. Autos and metals gain while consumer durables and FMCG drag.
Maruti sees its best customer response in 35 years with 80,000 inquiries and near 30,000 deliveries on the first day of the festive season. Hyundai too records its highest daily billing in nearly 5 years. What's also notable is the jump in the small car sales.
India's chief economic advisor tells CNBC-TV18 that his guess is that 526 could see 7% growth and that India will meet its fiscal deficit target. The optimism on growth is echoed by the industry, with Shree Cement telling CNBC-TV18 that the volumes can tick up by 1 to 2% in FY26.
Defense Secretary bats for a 17% hike annually in the defense budget, with 75% of the capex planned in India. He also says the government will soon invite proposals for medium-altitude, long-endurance drones worth 30,000 crore rupees, with a focus on indigenization.
Rupee hits a fresh all-time low of 88.68 per dollar, down from Monday's close of 88.31 on continued foreign funds sales as well as weak sentiment after the United States visa fee hike. The RBI was offering dollars but is not actively supporting any level, says the dealers. Hello, good afternoon and welcome to Halftime Report, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Nigel D'Souza as well. Nigel, good afternoon. But since the last time we were anchoring the show, we've seen a bit of a further decline that's coming in, especially the broader end of the markets as well. Almost in the day's lowest point as of now, if you look at it, is what the broader end is trading at as well.
Well, that's right, Vinny. But, you know, as you were doing that market check, actually, the market has recovered a little bit from the lows of the day. So the Nifty Bank as well is up close to around 100 points from the day's low. And you have the Nifty as well that's recovered close to around 40 points from the day's low. So some kind of a pullback is what we're seeing. In fact, the Nifty Bank is on the verge of moving into the green. But I think, you know, the two stocks that are catching your attention are Vodafone Idea. You know, the Street believes that there is an outside chance that, you know, there is going to be some kind of relief that comes in there. So that one is spiked up. It's moved to the high point of the day, 5.5% higher. And the Vodafone Idea is going to survive. Then the obvious play is Industars, because that one runs along with it. So, you know, the next reaction that we're seeing is on Industars. From the lows of the day, sharp spike up.
That's interesting. So keep an eye out on both these names as well over there. A lot of movers otherwise also we're seeing coming in is GMDC. That's spiked up in trade as well. Today we have GSPL, KEC International on the back of that order that we're seeing. That stock also buzz in trade, holding on to gains of almost 3 to 4%. But let's move on. And the big newsmaker, the United States should be India's best friend, says one of the world's most powerful bankers, Jamie Dimon, the chairman and CEO of JP Morgan, who's in India for that annual conference that they have. And he spoke to my colleague Prashant Nair, and Dimon said that he's optimistic of a resolution between India and the United States. He's also saying that the recent hike for H-1B visa fees has caught everyone off guard. Listen into a slice of that conversation.
We've seen enormous growth in India, and we're very optimistic about India in a million different ways. And the president and your prime minister clearly like each other, so which I think is good. I don't know what derailed it. I do think the Ukraine, Russian oil has been part of it, so I would take the president at his word on that. I'm still optimistic. In fact, I think Scott Bessent or the president recently said, no, we're going to get something done with India, and I hope we do. I think it'd be very important.
How will this work out? Because, I think the Indian side has been very clear. I'm not asking you exactly what happens, but there has to be an off-ramp, right? Yeah. To knock those 25% off and then maybe work down the remaining 25% as well.
I'm not involved in negotiations. I don't know. Yeah. I do think they want to do something on the American side, and I think they want to do something on the Indian side. Yeah. And so I'm hoping that they resolve it intelligently. I think it'd be good for both parties. Yeah. And I think, India is a great friend of America. It should be. I know it's non-aligned, and it should stay non-aligned, but with their non-alignment, we should be their best friend.
And before coming in, I was watching CNBC, the squawk, and there was H-1B, which was the big talking point headline. And it's kind of now sort of going into services as well, which so far it was not. It was mostly about goods. So is it expanding, or you think this is also all part of negotiation and it will finally settle down?
I think it'll finally settle down. That caught everyone off guard. And so we had a lot of phone calls over the weekend. What does it mean? And from what I understand, it means new H-1B visas. And a lot of H-1Bs go there because they need the expertise. And so I'm sure a lot of people will be going to the American government explaining why we believe it. I believe in merit-based immigration. As a matter of fact, I would beg the president, he has accomplished border control. That's great. I mean, I think all nations want real border control. That helps make a nation. But after that, we should have, good immigration. And I've heard him say publicly, more merit-based immigration, good seasonal worker stay, DACA stays. That if you get a degree in America, we should stamp a green card onto it. I agree with those kind of things, and so we'll hopefully be engaged in the government in this too.
During President Trump's first term as well, I think a lot of industry bodies went and sort of lobbied. There were actually lawsuits, etc. as well. There was a fair bit of pushback. Do you think there will be this time as well? I mean, with regards to services and H-1Bs?
Well, I wouldn't combine the two because services are different than H-1Bs. I think there'll be some pushback in the H-1Bs, yeah. And like I said, I haven't spoken to him about it, and I mean, I was basically flying over here when I heard about it, or so we'll see.
The other thing, of course, Mr. Dimon, is it's called HIRE Act, right? Which, again, it's in the Senate. We don't know if this goes through or not, but which proposes a 25% tax on offshoring. I mean, global capability centers, and JP Morgan has got a large presence here, but it's not so much about JP Morgan's business here. But how do you think about something like that?
I've heard about that act. I don't know about it. Trade is a very complicated thing. And I hope we get it right. I think there's been a lot of negotiations since then. I think Secretary Besson, Secretary Lutnick, the president have been engaged in it. I think they've come to more reasonable positions. So look, we're a great believer in trade. I think if there's trade that needs to be fixed for national security, it should be fixed. And I think if there's something terribly unfair, it should be fixed. There is unfair trade. Sometimes it's non-tariff barriers, sometimes it's quotas, sometimes it's tariffs itself. But this one I'm not completely aware of. I don't know. A lot of services, we provide a lot of service to other countries too. Right.
But your broad view is you should look at these things as a transient phase and it will settle down.
I hope so. I really don't know. I hope so.
Okay. Let's talk about the US, Mr. Dimon. How has your view changed? Yes.
About all that. The most important thing to me is that the Western world stays strong military and economically and together. Right. That free and democratic society. That is the most important thing. And to me, when I'm looking at trade, I would incorporate that in my thinking. Keep the Western world together economically. So,
let's talk about the U.S. itself. You think it's a lot of economists were saying that recession in the second half. It's not happened. I mean, high frequency data, hard data is still coming in very strong. Combined with, maybe the loosest financial conditions we've had in a while. Just what are your thoughts about how you're looking at the U.S. right now?
There's a lot of conflicting. Data itself is not perfect. There's a lot of conflicting data. But right now, unemployment is still low. Consumers, both low end and higher end, are spending their money. At the low end, they're a little stretched. And credit losses are going up a little bit. So it's not a disaster. It's a weakening. I don't know if that's just a weakened economy or not. You have a lot of stimulus coming in the tax package, and you have a lot of, I'm not going to call it stimulus, but spending on AI. So a lot of CapEx is up, but it's almost all AI, data center related. So, I hope it continues, and I'm a little more cautious on inflation than other people. That may not go away so quick because of the global deficits around the world. Those have an inflationary effect. The remilitarization of the world, the restructuring of trade, those things are all kind of inflationary, and maybe, less immigration in the United States, could help push up wages in the United States a little bit, which is not all bad because, a lot of people, deserve a wage increase. So,
you've always sort of warned the world about very high deficits in America, fiscal deficits in America. Do you think as estimates of, tariff intake comes in, hundreds of billions of dollars, depending on who you ask, are you a little more sanguine about where this is going, direction of travel, with regards to deficits out of America?
Well, in the short run, okay, I'm a free trade guy, so I'm hoping that other than unfair trade and national security, and I hear that from a lot of people in the administration too, the current numbers have, the tariffs may collect $400 billion or so, but the one big beautiful bill has a lot of stimulus coming next year, and which is good, an offset, and dereg. I think like in America, like in India, I think the regulations of the world have slowed down investment, permitting, building things. Like anyone you talk to in any industry will tell you, it's almost longer to get permits and fight litigation than it is to build what you're trying to build. So I do think that's a positive. So I think we need a growth strategy. I think that America and every country say, how are you going to grow? The growth is what allows you to pay taxes, pay your social safety nets, which means you need jobs, you need business, and I think that's good that they're pushing that. I think too many governments were not pushing that. Other than that, the deficit's going to have to come down one day. Growth is one way of getting it down, but eventually we're going to have a Simpson balls type of thing to make more rational decisions about the deficit.
The direction has changed in that sense. This administration coming in compared to where we were earlier, where we were going.
The administration is more growth, more pro-growth, but we haven't really attacked the fiscal deficit problem yet. Growth will do some of that. I don't know if they'll do all of it.
Okay. Yeah. Your call on the...
But the other thing about the deficits, and this is global, this is like every nation on the planet, and everyone's got very high debt levels too. I don't know when that becomes a problem. I can give you a logical argument that it can become a problem in 6 months. I can give you a logical argument it might be 6 years. But it will become a problem, and we're, like most problems, you're better off dealing with the problem than letting it happen. Yeah. So I hope we are a little more thoughtful about that.
Absolutely. The Fed, Mr. Dimon, what's your sense? We've seen a cut. Is this a one-off in your opinion, or the start of an easing cycle?
I think people focus too much on 25 basis points. I don't know yet. If inflation does not go away, it's going to be hard for the Fed to cut more. And inflation seems a little bit stuck in 3%. Again, I give you some arguments why it's going to go up, not down. And obviously, if we go into recession, and that's why rates are being cut, that's not good either. So, hopefully you can have decent growth and maybe rates come down a little bit, but we'll see.
You weighed in strongly in support of the Fed when, we had officials from the executive making comments and sort of attacking the Fed, asking them to cut, etc. You think that's kind of sort of eased off a little bit, or how do you see this?
It'll start. I've always said that there's no American president who ever said, I want higher rates. So obviously they want short rates. President Trump has come out and said, I believe in an independent Fed. Yeah. He's quite strong about his opinions, but being independent is an important thing. The Fed is not really independent in other matters, supervisory, regulatory. I think there was too much of that, and they should have their ears cut back a little bit. But look, presumably, hopefully we'll pick a good Fed chair. Some of the names I think are quite good. I don't want to go through each one, and we'll see.
Yeah. But you don't
remember the Fed. The Fed sets rates and all that. But I remind people when when inflation went up, they followed inflation. So they're a follower. They don't determine all these things. They have to react to these things, and so we'll see.
Apart from inflation, do you foresee any problems otherwise in the U.S. to which the Fed should respond? People keep bringing up private credit markets and all sorts of things. Do you think there's any reason to worry for the Fed to pay attention enough to start? Is that something we should worry about? No.
I think they should stick to their knitting. Okay. I do think when you talk about, which is unemployment and interest rates, inflation, I think when you talk about systemic stuff, they will have to, they should anticipate certain things. So if a government comes out and says, we're going to spend another $1 trillion, well, they should incorporate that in, quote, their data. But it's hard to incorporate. I don't think there's a systemic thing that they should be incorporating today. I think if we have a recession, I think you'll see, as we always do, you'll see a credit cycle. And, will it be a little bit worse than a normal one? Possibly.
The weaker dollar, if I may so put it, is the strongest consensus right now. Do you agree?
I'm not going to give my opinion on that one. I don't know. I'll let our traders figure that out.
You don't think, you don't feel strongly about it, one way or the other?
No.
Okay.
Most Americans don't pay as much attention to the dollar as people outside the United States. But I think there are, all things being equal, which they never are, you want a stronger dollar, because it generally means a stronger economy. But now, tariffs, trade, and all these other things have some counterfact. And there are people who are reducing their U.S. dollar investments, which I expect will continue over time. So it'll add to a little bit of the weakness of the dollar. And there are a lot of people in the United States who like the weaker dollar because it's good for trade. So we'll see.
Any view on what's happening with gold, precious metals? $1,000 in 2008, 2,000 in 2020. We're what? I mean, closing in on 4,000 now.
We'll see. No, there's a lot of. I mean, we're getting in bubble stuff here, and I'm not saying I don't know where we are, but there's a lot of positive sentiment out there driving a lot of asset prices, highest stock prices ever, highest gold ever. Crypto, highest crypto ever, yeah.
What are your thoughts, Mr. Dimon? Because, with crypto, a lot of people say, well, you've got a U.S. administration which is trying to mainstream it in terms of sort of, getting this into the financial system. You've, of course, warned us off it.
And separate a Bitcoin from when people say crypto. Blockchain is real. We've been using it for years. You can move a JP Morgan coin, token. Stable coin will probably be real. We're doing it too. The banks are looking at whether they should have a consortium or do it. A stable coin, if it's like a mutual fund, it probably needs rules like a mutual fund. And I can send you a token, which is a mutual fund, but you're probably going to say to me, just give me my money, I'll invest what I want. And it can't pay interest. Whereas a JP Morgan coin can pay interest. So I do think there'll be people who want to own dollars through a stable coin outside the U.S., from bad guys to good guys to certain countries where you're probably better off having dollars and not putting in the banking system. And then, movement of money for, particularly retail, I think there'll be a purpose for that. I'm not sure central banks need to use it among themselves. So it'll develop over time. I'm not particularly worried about it, but we should be on top of it and understand it.
Okay, that's an interesting chat there. So we'll be playing out experts through the day as well. Keep an eye out on that. But as of now, Nifty at 25,140 levels, inched up from the day's lowest point. Keep an eye out on that one as well. On that note, let's sip into a very short break. We'll get you more on the markets and stock-specific action on the other side. Welcome back to a halftime report on CNBC-TV18. Nifty Bank managing to hold on to a slight bit of a green. But let's go across to Nigel, who's at the FNO desk to tell us what's happening there and what we should be keeping an eye out on. Nigel, over to you.
Well, Vinny, in the last 20 minutes or so, the markets have come off the low point of the day. So that's an encouraging sign because at least, we're managing to defend the low point of the day. And the reason that we've come off is because the Nifty Bank. Just pull up the chart on the Nifty Bank. That's seen a bit of a recovery from the low point of the day. And the 20 DMA is deep. It's close to around, 1.5% away from current levels. But now it's heading closer to around the 50 DMA. So you'll actually want it to move towards that level. That's going to be the important mark that you're looking at. So the Nifty Bank, that holds the key. For the time being, it's doing some firefighting for the bulls. The Nifty PCR, at the start of today's trading session, it was around 0.72. In today, it's gone to around 0.78. Now it's cooled off to around 0.69. And normally at around this 0.65 to around 0.7, you do see a bit of a bounce. But keep in mind today's weekly expiry as well. So it'll be extremely tricky towards the end of trade. But the call writers, they are feeling confident. The 25,200 call, good amount of open interest built up. Just take a look. That massive open interest built up is what we are seeing out there. And the 25,150 call as well, massive open interest built up. So for the time being, the bears believe that they've got the higher levels covered. If you look at a resistance point going by the options data, the 25,270 mark, that becomes important because the 25,200 premium at the start of today was around 70 rupees. So that's why that's the extremely important mark. On the downside, the lows that we saw of today and going by the options data, the 25,050 mark becomes extremely important. So keep an eye out on that. Stocks that I'm looking at, there is some unwinding of long positioning that we have seen. L&T Finance stock down, open interest down. Saman Capital, another stock that's seen a good bounce out there as well, stock down, open interest down. So unwinding of positions, what you're seeing. And from the auto pack, Ashok Leyland, massive open interest out there. Big buying, fresh buying is what we're seeing on that counter. And finally, in the last 1 hour or so, Vodafone Idea, that's the stock that you're looking at. Well, that's seen a big spurt in terms of open interest. The stock is higher as well. It's a mix of short covering as well as fresh buying that we're seeing on this counter. In terms of stocks moving in and out of the FNO band, as of now, status quo, not expecting any big change, but I'll come back to you later today. Back to you.
Okay, Nigel, thank you so much for those updates there. But a quick break is what we're going to take right now. Come back and we'll have Sachidanand Utekar of Trade Bulls who will join us to talk about his trading strategies.
Welcome back. Well, we've got an interesting prospect that's taking place now on the Nifty. The Nifty has seen a good recovery from the day's low, and the Nifty Bank, that's the one that's pulled out the big gun and trying to fight for the bulls. From the day's low, the Nifty Bank, that's the one that's actually now moving towards that 50 DMA. If you pull up the 50 and the 20 DMA, you'll see the 20 DMA is deep, but now it's moving gradually towards that 50 DMA. So that's leading the way. Good time to get in Anand Rathi of Trade Bulls, who joins us on the show. Hi, Sachi. You're the good luck charm. The markets have seen a good recovery. In anticipation of what you have to say. Short-lived, or do you believe we've got more to go?
Good afternoon, Nigel. Nigel, I think the recovery has been very significant, but if you look at the data for the day, 25,200 is a major hurdle. And on the lower side, we have seen, a good support getting built up at around 25,000 zone itself. So I think going forward, we may see the Nifty, oscillating within this particular range of 25,000 on the lower side to 25,300 on the higher side. When we look at Nifty Bank, I think there are major confluences of averages which are placed somewhere close to around 55,150 towards 55,000, whether it's 50-day exponential moving average as well as 20-day exponential moving average is also placed. So I think the Nifty Bank is well positioned to lead this particular rally going forward. But for the day, I think there could be some more, selling pressure in the second half, which may provide an opportunity to create some long positions on a decline. So hence, we are recommending, building long positions when it comes to Nifty Bank. An ideal zone would be somewhere close to around 55,150 on the Nifty Bank spot. One can keep a stop loss at 54,940 on a closing basis. And eventually in the coming weeks, we may see the Nifty Bank scaling towards 56,000. When it comes to Nifty, I think the significant support here is the 20-day exponential moving average, which is placed at 25,030. I think that will be an ideal zone wherein some contra longs can be considered. But from a positional perspective, I think both the indices are in a strong bull trend. It's a buy on declines market, and I think the correction has been very gradual. So I think in a day or so, we would get a good opportunity to create some long positions.
Okay. Sachitana, a quick one. Which are the trading bets you're looking at?
Good afternoon, Vinny. I think the focus has to be on financials. If you clearly see, Bajaj Finance, this particular stock has been outperforming. It has continuously seen a good, strong long additions. On the way up, we have seen a fresh breakout from a bullish flag continuation pattern, which is indicating a price target close to around 1,062. So even here, we are recommending building long positions. Even on a decline, one can keep a stop loss at around 1,010 on closing basis, and we may see an eventual rally towards 1,062. The other stock which we have recommended to our clients is IndusInd Bank. Now, if you look at the overall trend structure, it has been very contradictory. In fact, it has been underperforming. If you look at the 60 minutes chart, there are signs that there is an ending diagonal pattern which is getting matured. The RSI on the daily scale has already given a breakout above its previous swing high. And plus, we have seen a very confident put writing at around 740 levels. So I think there's a base which is very evident. We have seen some fresh signs of impulse, and that's why we are expecting that there could be a good short covering move which may push the stock higher towards 780 going forward. And hence we are recommending building long positions here, keeping a stop loss at around 732 on closing basis.
Okay, keeping an eye on those financial names there. Thank you so much, Sachiran, for joining us as always and talking to us about the markets as well as your individual bets. But on that note, we're going to sip into a very short break. And on the other side, we'll have Manisha Gupta, who will be joined by Peter McGuire of Trading.com. Stay tuned in. They'll be discussing a lot more on commodities.
Welcome back. Joining us on the show now is Peter McGuire. He's CEO Trading.com. Peter, hi. Another day, another all-time high in case of gold prices with $37.50 an ounce done. What are the next targets that you're eyeing from here?
Well, good afternoon, Manisha. I mean, it's just breathtaking, and what we've seen over the last 24 hours. You know, you've got to say 38 to 4,000 now. You know, it's crunched through 37 with such conviction. I think that was the real surprise. The velocity and what we saw was explosive to the upside, and it doesn't seem to have a handbrake at the moment. So it's got to be 4,000. I think 3,800 will probably be taken out this week, and the momentum is just very, very strong. So Q4, it's going to be off the charts, and I'm looking forward to a very exciting wrap up to Christmas, Manisha.
Oh, well, absolutely. There's no handbrake, there's no foot brake, there's no brake at all the way the gold prices have been moving. 45% up in this year until now. At any point, do you see any pullback, correction, profit-taking, name that you wanted, but is it coming?
Look, it's very hard. I mean, you know, at the moment, it's parabolic, it's a bull market. And you can second guess these sort of things, and they don't happen that often. I mean, as you've just said, 50% up, nearly 45, 50% up for the year. A year back, it was just on 2,600. So you're going to be nudging that 3,900 for a 50% move. You've got to be very game. I tell you what, to go short at the moment, I'm not prepared to go out there on a limb. So I don't think at the moment. I think there's more downdraft for US dollar. We had a really interesting point last week, Manisha. You had a 95.81 for the US dollar index. It's bounced all right, and it's up at the moment. But I think the absolute downdraft is going to continue, and that's going to push gold further.
Peter, how are you looking at the silver prices from here? Because a new 14-year high is now for silver as well. We are not too far away from its all-time highs. 44 plus kind of levels already done. We are perhaps that $5, $6 away from all-time highs. Do you see that happen in this year itself?
Yeah, I read the bunker hunts. You know, it was an interesting story, and I remember it distinctly. But I read through it and how they had actually got to $51. Then it really tailed off very quickly. It was sold off dramatically. And we all understand the story, but it's a fascinating read for anyone that doesn't understand it. Yeah, $50 has got to be on the number because the overall momentum, silver's the one to really keep an eye on. You know, I watched your show with intent when you mentioned as far as data centers, electric vehicles, technologies, and the under investment across the whole silver sector. That really tells the story, and the overall attraction, I think, is going to be even outstrip gold. So, yeah, keep an eye on silver. It's been extraordinary over this year, and I think 26 is really going to be showtime.
All right. Peter, what do you sense about buying now? I mean, who are these people buying at these current levels? Is it speculative buying? Is it retail getting in? Is it investment buying that you see at these levels?
It's retail buying. It's certainly central bank buying, and it's the paper market. You've only got to go into jewelry shops, and I haven't traveled much in the last couple of months, Manisha. So there's stores in Sydney that are gold and silver retailers. And the attraction, I talk to the staff, and it's very, very strong. So you've got the man and woman in the street that are saying, I want to be a part of this. They understand from a long-term historical horizon. And I'm not telling you anything as far as from the Indian market and Dubai and what's happening across the Middle East and, of course, China. So the overall attraction is incredibly strong, and I don't see any time stopping. It's just one-way traffic.
Well, I can tell you one thing, Winnie, here, that for the longest time, it was Asians who were buying gold and silver in physical form. But as Peter says, Australia is doing it, Middle East is doing it, Canada, US, you get reports from everywhere. Everybody is buying retail. Are you and Nigel buying?
I don't think right now, right? I think I'm just waiting. I'm feeling that FOMO right now. I'm waiting for it to correct or fall down at least.
I worked with Manisha for close to around 10 years or more than that. And there is... every time is a good time to buy gold.
Yeah.
Ask her at any point of time. I think we are talking about it from 30,000, 40,000.
Wrong on that, yeah.
Absolutely, absolutely.
Any time to accept it as a gift also. Just saying. But thank you so much, Manisha, as well as Peter, for joining us on the show and giving us those insights in terms of gold as well. Thank you so much for that. On that note, we're going to sip into a very short break. We'll come back to talk more about markets, more stock-specific action as well on the other side. Welcome back to Halftime Report, but let's move on and talk about an individual sector, and that's the sector of the day. That's the auto sector. My colleague Sudarshan spoke with Amin Pirani, who is the Executive Director at Indian Automobiles Research at JP Morgan. Now, he began by asking about the demand in the auto sector going forward on the backdrop of these GST cuts that have come in, income tax cuts, and the 8th pay commission expected in the next few months. Listen.
Clearly, the GST cut is definitely a big boost towards improving affordability for customers for all automotive products. Whether it's two-wheelers or passenger vehicles, we believe that there should be a significant improvement in demand because affordability was clearly a big challenge. At least in the last 12 to 18 months, we had seen, the growth which had started improving post-COVID had started to slow down, especially in passenger vehicles. And even in two-wheelers, after 2 years of strong recovery, we had seen growth slow down to some extent. And I think this price cut due to GST will definitely improve affordability. And not just for this festive period. I think over a 2 to 3 year period, we should see an improvement in the growth expectations for automotive demand.
So what would be your growth estimate for passenger vehicle and two-wheeler segment for FY26?
Okay, so FY26, as we know, almost half the year is already over. At the beginning of the year, we were estimating, low single-digit growth for passenger vehicles and, just about 5 to 6% growth for two-wheelers. Because of the momentum that we should see in the second half, we do expect that passenger vehicle for the full year should grow towards mid-single digit, and two-wheelers probably, can grow slightly higher. But I think the full impact of this on a full year basis will be seen in FY27. And what we have recently done is that for FY27, we have increased our growth forecast for passenger vehicles to close to 10%, and even for two-wheelers as an industry, close to 8%.
Okay, so you had talked about affordability and price cut. So I'll just give an example of Maruti, because most of the companies have taken the price cut, but Maruti has gone one step forward. And beside the price cut due to GST announcement, it has also provided additional discounts for the limited period. And especially in the entry-level segment, the price cut is like huge. The price cut is almost up to 1.3 lakh rupees. And obviously, company has mentioned that over the last few years, one segment that has been under pressure is Maruti. Do you think, because the preference also of the consumers over the last few years has changed, now most of the consumers prefer SUVs rather than entry-level segment. But this step taken by Maruti, do you think will boost entry-level segment demand?
Sure. So I would not like to comment on individual companies, but I'll just throw out some numbers which can give your viewers some perspective. If you look at passenger vehicle category as a whole, between fiscal 19 and fiscal 25, over a 6-year period, the industry grew at a cumulative of around 28 to 30%. But then if you break up the categories between, say, above 10 lakh rupees and below 10 lakh rupees, actually below 10 lakh rupee category between fiscal 19 and fiscal 25 was almost flat. And the entire growth has come in from the premiumizing categories, which is, above 10 to 12 lakhs and all the way to 20, 25 lakhs. So what we believe is that while the upgrade and the premiumizing categories were already doing well, and they have also seen a GST cut because of the cess going away and, the special rate at 40%, they will continue to do what they have been doing and grow at a healthy rate. But the below 10 lakh category, which was where the main affordability challenge was there, which hasn't actually grown in over 6 years, and that is where the first-time buyer mainly resides, I think that category will definitely get a boost and will try and catch up to the overall growth of the category. And instead of just heavier vehicles selling, and growing at, say, 10, 15, 20%, we will see the lower end category go from 0% to high single digit or even close to 10% growth. And every company in that category which has products there will try to fully pass on GST benefits. And because they were already giving very high discounts, will try to, build some of that in their pricing so that the customer, continues to remain enthused about these categories.
Okay, all right. Well, time to slip into a short break with news that the markets have recovered from the low point of the day. You come back, we'll continue our focus on the markets. Stay with us. Welcome back. Well, the markets are down, but from the broader markets, there are plenty of stocks actually that are moving on. So you pull up Transport Corp, that stock has moved to the high point of the day. You know, Bhamakshi just sends me a message that in fact, there's a big up move that we're seeing on GMDC as well. So a couple of these counters should actually be on your radar. Transport Corp, you have GMDC as well. And HCC, large order is what we've seen out there. Patna Metro project. 2,500 crores. The street likes it. Stock spikes to the high point of the day. So the order wins do continue and those stocks do react favorably. We'll wrap up on this edition of Halftime Report. That's it from Vinny and myself and the entire team. But Business Lunch takes all the action forward.
Market makes a sharp recovery from day's low with key indices trading near day's high. Autos and banks lead the charge while defense and FMCG stocks lag. Midcaps are relative underperformers. Maruti sees its best customer response in 35 years with 80,000 inquiries and near 30,000 deliveries on the first day of the festive season. Hyundai too records its highest daily billing in 5 years. What's also notable is the jump in the small car sales. India's chief economic advisor tells CNBC-TV18 his guess is that FY26 could see 7% growth and that India will meet its fiscal deficit target. The optimism on growth is echoed by the industry, with Shree Cement telling CNBC-TV18 that volumes can tick up by 1 to 2% in FY26. Rupee hits a fresh all-time low, down from Monday's close of 88.31 on continued foreign fund sales and weak sentiment after the US visa fee hike. The RBI was offering dollars but is not actively supporting any levels, say dealers. The United States should be India's best friend, says JP Morgan's Jamie Dimon, adds the H-1B fee hike caught everyone off guard and bats for merit-based immigration. That's an exclusive. Hello and welcome to Business Lunch, live from the CNBC-TV18 Motilal Oswal studio. I'm Bamakshi Thoria, and it's the day of the weekly expiry as far as the Nifty is concerned. And so far, it's not turning out to be a terrible Tuesday because we've seen a good recovery from the day's lowest point. In fact, just momentarily, the Nifty had managed to slip into the green. It's a near 100-point recovery from the lows for the Nifty. And what's actually supporting it higher is actually some of these banking names. Take a look at HDFC Bank. We've seen some recovery coming in there as well. There's some recovery creeping in Kotak Mahindra Bank as well. There you go. HDFC Bank was trading around 956 levels. It's now above that 960 mark. Kotak Mahindra Bank also, we're seeing a good recovery. So the banks are actually supporting the recovery that we're seeing in the Nifty at least. But as far as the broader markets are concerned, they're not doing as well because the Midcap index was underperforming what the Nifty was doing. The Nifty is flat. The Midcap index is trading lower with a cut of almost 0.2% The small cap index, though, also is trading with a similar cut. And despite this sort of move, we're seeing some good jump on GMDC. Remember when we ended the earlier show, the stock was around 10% higher. The stock has built on to those gains. Now closing the 12% mark is GMDC. But the big story today clearly is of the auto packs and the record numbers that companies have witnessed on day one of GST slab change and Navratri season. Now, Sudarshan, how's the festive season started for all of these auto companies?
It's a great start for all the companies, especially all the passenger vehicle companies, starting with Maruti, Hyundai to Tata Motors. All the companies have seen a very good start. So we'll start with Maruti. It's saying that the inquiry that company has received on the first day of Navratri, it's the highest that company has seen in the last say 35 years. And the biggest positive is companies saying that the kind of inquiries and the kind of billings are being made, there is a possibility that it might run out of inventories, some of these segments. So on the first day of Navratri, company has recorded 80,000 inquiries and made delivery of more than 25,000 cars. And it's saying that very shortly it might deliver more than 30,000 cars. So since September of 18, the day company had announced pass on of GST cut and the additional discounts, on an everyday basis, company has been seeing inquiries of more than 75,000 and doing billings of more than 15,000. That is 50% higher than that the company sees on a regular day. And the positive part is entry-level segment, where billings are almost 50% higher than the company sees on the regular days. Talking about the Hyundai, company saying that on the first day of Navratri, company has made billings of more than 11,000, and that is highest that company has seen in a single day in last 5 years. Even Tata Motors is saying that it has made deliveries of more than 10,000 cars, and the inquiries have crossed 25,000 on the first day of Navratri. So we'll have to say what other companies say, especially about two-wheeler companies. Hero Moto, which has a huge presence in the rural segment, and also from TVS Motor and Bajaj Auto, they also have a huge presence in the entry-level segment.
So for now, it's no speed bumps for all of these automakers, Sudarshan, and of course the Josh is very high, like you said earlier this morning. Well, moving on then, India's Chief Economic Advisor, V. Ananta Nageshwaran, has said he expects GDP growth to be near 7% this year after the GST cuts. Now, speaking to Shireen Bhan on the sidelines of the Network 18 Reforms Reloaded Summit, he said he expects revenue growth to remain on track and is confident of achieving the 4.4% fiscal deficit target. Listen in.
Fiscal second quarter growth numbers are looking quite promising based on the high frequency indicators we track. But of course, that is still only about 1.5 to 2 months of data. So we have to wait and see how much, how did September fare, etc. But we're sort of quietly hopeful that the second quarter has maintained the momentum that we saw in the first quarter.
And so closer to the 7% mark is what you're hoping for,
but
on the back of what the information you have.
I'm hoping for, rather than saying I'm predicting it. I'm not predicting it.
Fair point.
I'm simply saying, based on the trends I have seen, it's the number that I hope for. Yeah. We are confident that the final number will be 4.4% of GDP, which is the gross fiscal deficit. We have had good non-tax revenue growth, and overall revenue growth is on track in comparison to last year's numbers. And we feel that the festival season will last all the way until the end of the year because of successive, the Diwali festival spilling over towards Christmas and New Year, etc. So we are confident that the fiscal math will hold up very well for the current financial year.
Well, more from our Reforms Reloaded event then. Defence Secretary Rajesh Kumar Singh has told Network 18 that the government will soon invite proposals for medium altitude long endurance drone contracts worth 30,000 crore rupees. Now, he said that the government is looking to double down on indigenization and will spend at least 75% of its defence capex within India.
If you're looking at it in value terms, I think you can expect in capex terms somewhere between $25 to $30 billion minimum per year over the next decade, maybe a little more, I would say, rather than less. Our current plans are that at least 75% of our capex will be spent within the country. That's our normative target. Last year, we actually did 88% of our capex within the country. Last year, for the first time, we exhausted our budget. I think it is challenging to spend money in the Indian context, given the, the very elongated sort of fail-safe type of procedures that we follow in terms of collegiate decision-making, approvals at the highest level, involving, a lot of interministerial consultations. Last year, we did it, and I'm sure this year also we'll do it. It really depends on how many contracts you end up signing. And last year, we did a record number. This year, we've already hit 3/4 of that, 1,50,000 crores worth of contracts we've already signed, or are in the process of signing if you include the LCA program. So we are confident we can do at least 2 lakh plus crores this year.
Well, meanwhile, India's External Affairs Minister S. Jaishankar met US Secretary of State Marco Rubio on the sidelines of the 80th United Nations General Assembly. Now, this comes days after US President Donald Trump unveiled a $100,000 fee for new H-1B visas. This also marks their first in-person meeting since the Trump administration imposed steep new tariffs on India, including a 50% levy tied to Russian oil imports. Now, the two leaders discussed trade, energy, pharmaceuticals, and critical minerals, with both sides stressing the need for a sustained engagement. And the big news maker then, the United States should be India's best friend, says one of the world's most powerful bankers, Jamie Dimon. The chairman and CEO of JP Morgan is in Mumbai for the bank's annual conference. Now, speaking to Prashant Nair, Dimon says he is optimistic of a resolution between India and the US, and he also said the recent hike in H-1B visa fees caught everyone off guard. Listen in.
And the president and your prime minister clearly like each other, so which I think is good. I don't know what derailed it. I do think the Ukraine, Russian oil has been part of it, so I would take the president at his word on that. I'm still optimistic. In fact, I think Scott Bessent or the president recently said, no, we're going to get something done with India, and I hope we do. I think it'd be very important.
How will this work out? Because I mean, I think the Indian side has been very clear. I'm not asking you exactly what happens, but there has to be an off-ramp, right?
Yeah.
To knock those 25% off and then maybe work down the remaining 25% as well.
You know, I'm not involved in negotiations. I don't know.
Yeah.
I do think they want to do something on the American side, and I think they want to do something on the Indian side.
Yeah.
And so I'm hoping that they resolve it intelligently. I think it'd be good for both parties.
Yeah.
And I think, you know, India is a great friend of America.
Yeah.
It should be. I know it's non-aligned, and it should stay non-aligned, but with their non-alignment, we should be their best friend.
All right, don't forget to watch excerpts of this exclusive conversation all day today on CNBC TV18. Taking a short break now. More news and updates on the other side, so don't go anywhere. Welcome back. Thanks for staying tuned into Business Lunch. Now, the rupee hit a fresh all-time low of 88.8 per dollar, down from Monday's close of, on 88.8. Now, on continued foreign fund sales and weak sentiment after the US visa fee hike. Dealers say the RBI is offering dollars, but is not actively supporting any level. Lata is here with more on this. Lata, over to you.
Yes, when I started to track the rupee, it was down 0.4% day on day. And now it's down about 0.6, almost 88.80 compared to about 88.31, which was the Monday close. Actually, the big fall came when that 88.45 broke. That was seen as a kind of a support level. Once that broke, we found everyone, importers, corporates, bankers, dealers, all of them rushing in because it looked like, now it's blue skies. We don't know where it'll fall. There was a Reserve Bank here and there, but they were not apparently protecting a level. What perhaps psyched the market was that on Monday, because of the FTSE, the FTSE rebalancing, the equity sales was not expected to be much, although there was the negative news of the H-1B visa. However, when the numbers came, it is 2,910 crore of sales. That also changed the market's thinking. It looks like the sale a sale of equities and therefore buying of dollars by foreign funds is continuing because of this negative sentiment of the H-1B over and above the tariffs. And that's taking the rupee to lower levels. It's becoming kind of self-fulfilling. As the chief economic advisor told CNBC earlier, CNBC-TV18 earlier, the RBI and the government are perhaps okay with a bit of the rupee fall because that makes life easier for exporters who are already bearing the burden of higher tariffs and a global slowdown, an Asia slowdown, as it were. And then there are fears of lower remittances because of the H-1B visa, but that's for a later day, not immediately. However, the tolerance for a lower rupee is seen, and that was another reason why the rupee was plumbing lower depths. But I just want to leave you with one thought, that this is not only an India fall. Today is a bit of a pan-Asian fall. If you look at Philippine peso, or if you look at the Indonesian, rupiah, that's really been falling. Both of them have actually fallen a little more than the Indian rupee, which is, a 0.5% is a big one-day fall for the rupee. But a couple of other currencies have fallen even more. If you ask experts, they tell you that, all the bad news of the rupee is in the price, and we will probably see some recovery, some appreciation in the fourth quarter, that is in the Jan-March quarter. But at the moment, people are still looking for that support level for the rupee.
Absolutely. But let's slip into a very short break for now. We'll get you more news and updates on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC-TV18. Sajjan Jindal-led GSW Group is deepening its auto business foray with plans to launch cars and truck and plans to have JVs. Parikshit Luthra caught up with Ranjan Nayak, the Executive Vice President of Corporate Strategy at JSW Group, and began by asking about the investment slated for the next 5 years.
So in the phase 1, we are setting up a 60 JPS plant that is almost 500,000 cars per year in phase 1 in Sambhajinagar. So we have already acquired the land. The construction is going on in a full swing. We have all subs has been ordered. So we are expecting the first car to be rolled out in the second quarter of 2026. So once this phase 1 500,000 cars capacity is built, we'll start expanding to another 500,000. So that will be combined as a 1 million car. Simultaneously, we have signed an MOU with the government of Odisha. So wherein Bhubaneswar will be allocated around 900 acres of land. So that will come in phase 3. So in total, next 5 to 6 years, so we'll have a 2 million car capacity.
So could you also give us a sense of how much is going to be invested by JSW and how much are you going to pick up from banks by way of loans and how much by way of equity stake?
So almost in the ratio of 30 to 70 equity and debt. And that is what we'll continue to do, because the cash flow, if you look at the cash flow, will be smoothened by early 2027. So we are so we'll try to maintain 30 to 70.
And there's a major funding announcement this week itself, you mentioned?
Yeah, right.
And how much would
expected?
That be?
So that will be almost $1 billion.
Well, that's all the action we have on this edition of Business Lunch. Don't go anywhere. Midcap React takes all of the action forward.
An impressive recovery from the lows is currently underway on the benchmarks and on the broader markets. And we are here to bring you all the live action on Midcap Radar from the CNBC-TV18 Motilal Oswal studios. I am Hormus Patakia. With me is Vivek Iyer. Vivek, good afternoon. The last few minutes have been good for the bulls. An impressive recovery from the lows of the day. The weekly expiry of the Nifty contracts. There is a lot to track in the last couple of hours.
Lots to track in the last couple of hours, especially the weekly expiry contracts, and along with that, a very sharp, strong recovery, especially in the metals, is something that has panned out over the last half hour or so. But we have a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Market makes a sharp recovery from the day's lowest point, with key indices trading near day's high. Autos, metals, and PSU banks lead the charge, while realty and FMCG stocks lag. Midcaps marginally underperform.
Defense stocks are declining today, and this is despite the Defense Secretary Rajesh Kumar Singh telling Network 18 that the government will soon invite proposals for medium altitude, long endurance drone contracts worth nearly 30,000 crore rupees.
Hindustan Copper trades strong. The stock surges over 3.5%, posting gains for the third straight session.
Multiple triggers, of course, for Hindustan Copper from last week, but Vodafone Idea has also seen a sharp spike just a few hours earlier ahead of the Supreme Court hearing on the AGR issue on Friday. The stock surged over 4%, and this is after cooling off from gains of as much as 7%.
Some workers at an MRF plant go on strike, but the stock is at a record high amid broad-based gains in the auto sector. The stock gains over 1.5%. Well, you're looking at Midcap Radar, but what's been very impressive is the kind of recovery we've seen as far as the large cap names are concerned. Have a look at the entire Nifty metals. The Nifty metal has now surged near the day's highest point. Names like Tata Steel, JSW Steel, and JSPL, Jindal Steel, all of these stocks have moved to the day's highest point. Along with that, the private banking names too doing quite well. Names like Axis Bank, Kotak Mahindra Bank, and even the PSU names like SBI have all moved to the day's highest point. But remember, this is our show, Midcap Radar, and this is our special segment, Midcap Movers. Hormas has gone across to the wall to take us through the midcaps that are moving around in this session.
A recovery in the benchmark indices and the broader markets alike. So we start off with the gainers then in the broader markets today within the mid-cap space. And look at Hindustan Copper, as Vivek was highlighting. The metal stocks have seen a good up move in the last few minutes, 5% higher on that stock. Made multiple announcements on Friday, and since then it's continuing to build on to those gains. Tata Investment, of course, the record date for the stock split that it announced earlier, last evening, 7% higher on that stock is a vertical move in the last few minutes. And GSPL and KEC International has cooled off from the highs, still holding on to gains of around 4%. Some of the other movers in the broader markets today, and they are the financials, of course, the ones that are leading the recovery in the benchmark index as well. AU Small Finance Bank, PNB Housing is at the highest point of the day, and the power financiers as well. CLSA coming out with a note today on the power sector in itself. REC and PFC also doing fairly okay for themselves. The stocks that are at a record high in today's trading session, most of them seeing double-digit gains as well in the broader markets. Look at Reflex Industries, look at TVS Electronics, look at Subros, all of them seeing gains of anywhere between 12 to 15%, and most of them also are at record high levels. What is actually at record high though have been stocks within the broader markets that have done well over a period of time. At GMDC is one such name, 13% higher on that stock yet again. Lumax Industries, SJS Enterprises too doing fairly okay for themselves. And lastly, stocks that are bucking the trend in today's session. Dreamfolks, well, another lower circuit for the stock. Hariom Pipes made an announcement yesterday, and since then has been on a bit of a downtrend. SpiceJet is down around 6%, and LT Foods has slumped to the lows of the day, 7% lower on that stock, Vivek.
Okay, thank you so much, Hormas, for taking us through the list of movers in the broader end of the markets. You did speak about the auto ancillary space. And after we come back from the short break that we are about to take, the management of SJS Enterprises, an auto ancillary name, joins us next to discuss a recent JV and the FY26 outlook as well.
Welcome back onto Corporate Conversations then. SGS Enterprises, the first management on our radar. And Sanjay Thapar, who is the Group CEO and Executive Director at the company, is joining in. And we'll be basing this conversation on three important points. The strategy behind the MOU with BOE Varitronics, the incremental revenue potential that the company is expecting from this, and of course the expansion plans for the business going forward. Mr. Thapar, good morning, good afternoon. Thank you for joining in. First off, we start off with the MOU itself, right? How does it fit into the strategy for your company, and how does it fit into your vision behind your rationale behind signing this MOU?
So SGS is a leader in the aesthetic decorative space. We supply virtually to all the two-wheeler and four-wheeler and the consumer appliance OEMs in India. We also have a very tenured marquee OEM customer base across the world. So one of the areas that we were working on earlier for many years, where we have a leadership position, is dials for instrument clusters. Now these dials are now converting to a digital dial, and the display that you have on the center stack of the car, our bet is that this is going to increase, and not only in terms of the usage amongst cars in India across all segments, but also the size of this display. So our original plan a year ago that we communicated to the market was to make the cover glass for this display. But then our ambition became stronger because a lot of other OEMs or tier ones really, who make these information and display systems, approached us to say that, can you go beyond cover glass and could you look at assembly? Now, this being a new area for us, we wanted to have a technology partner with us. And BOE is amongst the top 3-4 companies worldwide, which is a leader in this. And the scope of our MOU is that they will help us with technology to assemble this display in India and also localize some key components like the cover glass and the backlight unit. So that is the intention. They recognize that SGS has a strong position in India and they needed a partner and we needed a technology partner. So it's a marriage of
Got that.
for both the companies.
Right. Mr. Thapar, let's try and quantify this particular opportunity and correct us if you're wrong. Currently, we understand that the content per vehicle that you enjoy, especially when it comes to the four-wheeler, is anywhere in the range of 3,500 to 5,000. Materially, with this MOU signed, now what is the opportunity size that you're targeting and what is the total TAM?
So today, if I talk of the India market, all the displays that come into India are imported. I think almost 99.5% of the displays are imported. There's just one tier one which is doing some assembly work, but the content is all imported. So I think we will be first of the block in terms of localization, not just of the display, but of the components. It falls in line with the vision of the Prime Minister of the country, and we believe that we would be a very strong player here. Now, the size of the market at the moment, I estimate, is about 800 to 1,000 crores, which could grow to be a 3,500 to 4,000 crore market in the next 5 years. We see a lot of tailwinds of consumers buying cars because of displays. That's a very important element in terms of the buying decision of a customer. And today, the OEMs are loading more and more content. So you have the center stack, which is growing bigger and bigger. So instead of a single display screen, you could have dual screens that you see in the likes of the Mahindra XUV 700, or you have the Hyundai and the Kia car, which have large displays, or even the new offerings from Tata also have larger and larger displays. So I think that's a trend that will continue. And then over a period of time, you would see a lot of rear seat entertainment coming in that would also need displays. So I think this is strategically a very important step for us to address this very large and very promising market moving forward.
And any number that you could help us quantify, what will be the content per vehicle with all of these new opportunities that come about?
So I imagine it could be anywhere between, depending again on the size of the screen, you could have a single TFT screen, you could have dual or triple screen. So at an average, I would imagine that it would add about 5,000 to about 8,000 rupees of content to the existing basket that we have, which you said is about 5,500 or 6,000 rupees today potentially for a four-wheeler.
Right.
So we could aim at reaching about 13,000, 14,000 over the next few years.
And what does that do to your financials, Mr. Thapar? Considering this MOU that you have signed, the revenue opportunity that you're targeting, does that boost your prospects for the full year? What is the kind of margin growth and the top line growth that you're anticipating now for the full year?
So this MOU will not impact the current year FY26 because this investment would take or be deployed over the next 1 year or so. So I think revenues from this should start coming in FY27, FY28. But our run rate for the current year is extremely robust. So at the beginning of the year, we guided that we'll outperform the market 2x the industry rate of growth.
Right.
And we are on track to do that.
Understood that. So a couple of quick questions because we are running out of time. So how is the partnership with Hero MotoCorp going? We understand that you added them very recently onto your clientele base. And secondly, sir, you have quite a lot of exposure as far as USA is concerned. You added quite a few marquee clients like Ford, Chrysler as well. What has been the impact of tariffs there?
So first on Hero, so our relationship is progressing well. We acquired them as a customer. We value them. They are the largest two-wheeler manufacturer in the world. So that is good business for us. We've started supplying models to them, and I think we are ramping up. New models are being developed. So that is progressing very well. And we hope to continue to grow our business with them, not just for the products that we've started now, but also cross-sell a whole lot of products that we have in the coming years. As far as the US goes, so our exposure at this moment directly to the US is just about 1.5% of our sales, not too much. We are optimistic or hopeful, as is the rest of the automotive industry, to say that there should be some breakthrough in terms of what we do with the US markets. But essentially, what's important for us is that the technology that we have, India is quite competitive. Cost competitive globally, especially the printing business. So we see US continue to remain a very important and a strong market for us. And we are winning large businesses there. So I think that business will continue to grow for us.
Mr. Thapar, pleasure having you here. Thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year and for this MOU as well. Take a short break. On the other side, Bhavin Shukla from JP Morgan joins in to discuss the key trends driving the global investor interest in India's green economy opportunities. Stay tuned. We'll be right back.
Welcome back to Midcap Radar. Well, a very interesting conversation lined up. Bhavin Shukla, who's the head of Asia Infrastructure Funds, ex-Australia at JP Morgan, joins us to discuss more on the renewable as well as infra financing theme as far as India is concerned. Thank you so much for joining us, Bhavin. Bhavin, what are the trends you're seeing on ground, especially when it comes to financing both for infra as well as renewable energy projects? India has faced significant challenges on both of these fronts, especially RE projects where right-of-way, land, all of these have proven to be significant issues.
Yeah, look, I think India continues to be one of the fastest growing renewable energy markets in the world. Really twofold reasons for that. One is a very strong regulatory push that the government has, towards growing the capacity addition of renewable projects in India. And towards that, we've had several schemes, including commitments to be at 500 gigawatts by 2030 of renewable energy. A lot of PLI benefits to move the economy to become a lot more self-sustainable path. And then finally, you also have, structurally cost competitive advantages in India, which make us one of the lowest cost energy nations in the world. These are actually very big differentiators when you think about it. Some of the challenges that you mentioned around, land acquisition and connectivity, I think that's just manifesting because of the pace of growth that the country is going through around capacity additions, and equally with all of the demand that the country that is coming through because of the strong GDP growth in the country.
Bhavin, Vivek just mentioned about the challenges that the two segments, infrastructure and renewable energy, are facing. But they are also the two segments where there is the largest emphasis of the government as well. The emphasis on infrastructure and the emphasis on renewable energy. Are you witnessing interest from potential clients to take up such financing projects, be it on the infrastructure front or be it on the renewable energy front?
Yes, absolutely. Look, over the years, India has emerged as the country to go to within Asia-Pac if you wanted to deploy large check sizes in a regulatory stable framework. So to give you a few examples on the renewable energy side, this market has traditionally been looked at by a lot of private investors in the infrastructure space. So you would have some of the GPs, like KKR Infrastructure, Macquarie, etc., invest. Right. But increasingly now, the Indian equity capital markets are really open, to these, to investing in these companies. We've seen the IPOs of NTPC Green and ACME get done, and then you have Juniper and CleanMax who also filed their DRHPs to hit the market soon. So clearly, that part of the market's going from traditionally being a private investor market to a lot of public markets as well. And then, on the other infrastructure side, you have lots of roads, where you have a variety of investors, both public and private, that are invested through the InvIT framework that the government has come up to enable for such assets to be quickly acquired by investors.
Right. Bhavin, a quick word, especially when it comes to deal financing, deal structuring. You have seen quite a few companies, number one, divest assets through the InvIT route, and also you've seen quite a lot of private equity interest in this particular space. Going forward, do you see a lot more of that happening? And also, which mode of bidding do you feel is the best suited as far as India's infra space is concerned, especially when it comes to road assets?
Sure. So I think the government has sort of come up with a very transparent auction process, to divest roads or privatize roads, which is the TOT program that the government runs. And here, I think, we've seen a tremendous interest from all kinds of international investors, be it strategics or private equity, as you were mentioning, right? So that continues to be an exciting area for people to participate. Those are larger check sizes, and require a lot more sophisticated calls on traffic patterns, ability to finance those assets, etc. And so you see more sophisticated investors geared towards that. But once you have assets that are seasoned, that have a demonstrated track record of operations, it becomes very easy to flip these into InvIT structures that are then accessible, to normal retail and HNI offices which makes it a very exciting space.
Bhavin, so Bhavin, thank you so much for sparing time and joining us today on this very important issue for the country, of course, going forward, the infrastructure and renewable energy financing. Thank you so much for sparing time and joining us. By the way, the index is still in the green, but just about managing to hold on to the flat line as of now, 25,200, that all-important level that we are keeping track of. With that, call time on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. MF Corner on the other side.
Hello, good afternoon. Welcome to MF Corner on CNBC-TV18. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, back with our Know Your CIO show, where we talk about how fund managers, how CIOs actually navigate different market cycles. How do they generate alpha? What strategies do they follow on the back for their investments? What growth strategy is best for investors to generate long-term wealth as well? And this time around, we have with us Nimish Chandan, Chief Investment Officer at Bajaj Finserv AMC, to understand their investment styles, to understand how they go about it as well. Nimish, good afternoon, and thank you so much for joining us on the show. You know, it's interesting to get a lot of insights coming in from CIOs, and that's what we want to do as well. Let's start by talking about how at Bajaj, y'all focus in terms of your investment DNA. What is the strategy that y'all follow? You know, given that there's so much noise that comes in, at least from the investor front in terms of thematic, core allocation, what is the strategy at Bajaj that y'all follow?
Good afternoon, and very happy to be on your show and sharing the views on Bajaj AMC, how we invest here. First of all, as investors, we don't control the outcomes. We actually control the inputs that go into the investments. So an ideal investment team that follows a disciplined investment process, that's what generates alpha over a longer term. In our investment process, we use all the three sources of alpha for generating outperformance. So one of them is information edge, where we study businesses, management, collect the right data and focus on the right data. And as you mentioned, there's so much noise around. You need to filter out the signal from the noise and focus on the right information to make your decisions. The second part is processing that information in the right way. So you can have quantitative models, financial models, analytical models that help you process that information, whether it is about the economic cycle, whether it is about a mega trend, whether it is about company financials or company valuations. And the last part and the most important part or source of alpha is the behavioral edge. People often are driven by narratives and sentiment. We often represent the market like a pendulum, which is swinging between greed and fear. How you react to the output of those models also determines your decision making or how good you can generate your outperformance. So we focus on behavioral edge also, where we are able to understand our own biases and de-bias them and understand the market biases, whether it is greedy or fearful, and then take advantage of that.
Ramesh, so yes, that's important, right? Information too much, but then using the information in the right way, processing that information is key, as well as the behavior, greed and fear. That's also something that plays a big role. So I think you'll have a big part in terms of judging that from the investor point of view as well. But Ramesh, you know, when we're talking to a lot of fund houses, sometimes it seems like they lean more towards growth bias, right? How do you balance that growth versus value in terms of allocation when it comes at Bajaj AMC? What is the strategy that you all follow? Because it's not going to be just a short-term thing, right? This works for next 2 years, 3 years. So how do you strategize on that?
So every factor, whether it is growth or value, momentum, low volatility, quality, every factor has its cycles. And you can look at it this way, that at some point of time, each factor can be overpriced or underpriced. Sometimes when people are chasing growth, even growth can be overpriced. Sometimes quality can be overpriced, or sometimes quality, like last year in beginning of 2024, quality was underpriced. So now, instead of having a style bias as a fund house, we create funds with a certain style tilt. So we are not biased towards one style as a house, but there are opportunities that each style gives you, and we try to take advantage of it. So when we believe that market is currently chasing growth, so we focus on that style of investment. Obviously, not growth at any price, but when you get it at the right price. So in a way, we are core investors, or what we can call as GARP investors, growth at a reasonable price. But we don't have a particular style tilt as a fund house, but separate buckets of funds which address a particular factor and stick on to that style.
Nimish, you know, let's just talk about the recent data that have come in as well from AMFI point of view. SIP flows, when you look at it, they've remained steady, not much of an uptick, but not a slight bit of the downtick we saw in August. Now, when you look at it in terms of mutual fund returns, in the last 1 year, bit muted versus what we've seen in the last couple of years. So everyone is spoiled with those high returns in the last couple of years. I want to know that, what are we seeing from investors on ground? Is there more comfort now coming in for thematic as well as sector funds? Or, it's more towards those large cap, flexi cap allocation. What is your understanding right now? And does a worry come in terms of flows reducing or SIPs reducing, because returns may not be as high as one was expecting them to be, especially if it started in the last 1 year?
So let me address this in three parts. So first, we are seeing investors, retail investors, actually become quite mature and evolve. Most of the investors are looking at long-term returns of different asset classes rather than worrying about the short term. I'm not saying it's completely eliminated, but most of the investors are now looking at mutual funds with a long-term perspective. In fact, what we have experienced, especially in the last year, that when market corrects or when there is a dip in the market, the flows actually go up. So people are adding to their exposures when there is a dip. Historically, we used to think that whenever there's a dip in the market, there would be redemptions. So I think that way retail investors have matured quite a bit. Second, we are getting investors from various different aspects of life in terms of various different cities, various different income levels with different goals and aspirations. So there is no one size that fits everybody, but as a core, typically people prefer a flexi cap or a multi-cap or a large and mid-cap fund. Thematics are used as a additional satellite allocation for most of them. Now, certain long-term themes in India, like for example, consumption, healthcare, BFSI, energy, these long-term and very broad-based thematic funds are also attracting a lot of investors, either coming through SIP or trying to get in at the launch of these funds or at the launch of these themes. That's when I think investors are adding to that satellite allocation. So we are seeing money come across spaces, but most of the large categories like flexi cap and large and mid cap do get the most attention.
Okay, they do get the most attention. Nimish, just to follow up, we're talking about flexi cap also, which is picking up interest now. And a lot of people are talking about it. So I want to know, is it a wiser way right now to go for maybe a flexi cap fund or a hybrid allocation as well, in case we're looking at more in terms of international side of exposure? Would you say that is a better play right now in this current scenario?
Actually, both address different needs in a way, hybrids as well as flexi cap. Flexi cap is a category where your fund manager has the opportunity to move across market caps and pick up the best of the companies that fit into a particular strategy without much constraints, I would say. When it comes to hybrid, you have to also look at timing the asset allocation between equities, fixed income, either international or sometimes hybrids, which are carrying like multi-asset funds are carrying gold and silver also. So people have to time asset allocations also. Flexi cap are core allocations for equities where you have the best of each of these market cap categories that fit into a fund manager's strategy. Both can address different needs for the investors. Hybrids are typically less volatile compared to flexi caps, but a longer term compounding, the flexi cap category has given, though volatile, but higher returns than the hybrids.
Absolutely, and higher returns in the, at least I know it's a short-term return that I was looking at. 1 year is not something you compare, and past return doesn't always mean that it'll be same. But it's better than even some of these large cap, mid cap side as well, right? So it just becomes tempting. That's why I was asking, is it the best option right now to look at?
So even in these market cap categories, if you see, there is a certain cycle that we go through. If you start measuring from 2017 when mid caps and small caps have peaked, then you will find large caps have actually given a better return. If you take from the bottom of the COVID cycle, you would find that the small caps and mid caps have given better returns. So Each of these market cap categories also, because people move like this pendulum between greed and fear, sometimes they get very excited about small caps, sometimes they get very fearful of small caps. So hence, these category shifts also over a longer period of time show up. We did a small study when we looked at 21 years of data with Nifty 50 and NSE Small Cap 100 Index. We found that both had almost similar returns in 20 years. So it was either you chose Nifty or small cap. If you had invested for 20 years, I know very few investors would do that, but for 20 years, the returns are the same. In between, there are deep cycles in each of them.
Absolutely. 20 years, long time now, right? Given everyone wants everything now and fast returns, and everyone wants to retire also by 40 and 50. I don't know how many will be holding for 20 years. But yes, 20-year time period, if you would have looked at it, whether it was Nifty, Nifty Small Cap, any of those sites, you would have made similar returns. But that's what we're going to be talking about and discussing more with Nimesh as well on the other side. A quick break. We'll understand what trends now we should watch out for going forward as well. All of that after this break. Welcome back to MF Corner on CNBC TV18. We still have with us Nimesh Randan, Chief Investment Officer at Bajaj Finserv AMC. Nimesh, now it's time to talk about what to watch out for going forward. I want to know the mega trends that you believe could be India's next decade in terms of wealth creation. And maybe an investor can look at something like that as well, starting now.
So we'll track different mega trends that can impact economies, businesses, and companies. And we try to identify which are the companies that can really benefit from these mega trends, which are the companies that are on the right side of these mega trends so that they have strong tailwinds for growth. So the three areas that, or three mega trends that I would want your audience to think about is consumption, financialization and digitization, and energy. So energy transition and mainly the power sector. So when you come to consumption, I think the time has come for this idea where the structural positives of India in terms of demographics, rising per capita income is being met with a cyclical upturn now that we have seen government reduce taxes, both direct as well as indirect, interest rates coming down, so financing is easier. We are seeing a strong pickup in consumption and starting from the second half of this year. And consumption includes everything from daily groceries up to real estate. So it's a wide theme, and you can actually pick up very good branded businesses which have strong tailwind for growth in rising consumption in India. The second is financialization and digitization, where you see changes in the way people save, the changes in the way people spend, financialization of savings, using digital money or digital payment platforms to spend. So this is another big change which is impacting not only the banking financial sector, but it is also impacting the way people consume and invest. So, and the third is energy transition. You see most of the technology changes that we are seeing now, whether it is AI, whether it is electric vehicles, all these are energy guzzlers. So they actually consume a lot of energy, a lot of power, and hence the world has suddenly seen that we are short of energy and we need to invest more in the power sector. And companies in that chain, whether they are supplying equipment, whether they are in renewable energies, they are all benefiting from this energy transition. So we believe that these are the big themes that will last for a long time. So we see a multi-year theme, as well as they are broad enough for investors to really choose the right companies at the right valuation and bet on them.
Absolutely, interesting theme there, Nimesh, that you mentioned. Consumption, financialization, as well as digitization and energy side. Nimesh, I'm going to pick up in terms of the first two themes that I want to understand, because, we had seen that capex trend that was there for so long. Now that shift may come to consumption as well, given so many boosts that are given by the government. So does it merit maybe now looking at more thematic for consumption funds and even IT side of funds, not going for those old school IT funds, but maybe where newer company investments are coming in, or fintech side of investments? Are those thematic funds a better play right now? And can one look at that?
You are absolutely right. Actually, within consumption, we include these digital platforms also, which actually have, many of them have a strong moat in terms of customer ownership. So consumption is a much broader theme than any other theme. So typically, we advise investors to look at themes which are more broad-based so that the fund managers also have an opportunity to look at across different subsegments and across many companies to select the right ones. When themes are quite narrow, then you see euphoria taking the valuations very high very quickly. And then if there is a disappointment, the theme also collapses very quickly. Consumption is the broadest theme one can bet on. And you are absolutely right. Compared to the other IT companies where we are seeing some kind of headwinds in terms of growth, digital platform, e-commerce companies, app-based companies, quick commerce companies, they are seeing very strong growth and high adoption. So they are having not only high new number of customers joining in, but also the ticket size, the billing size per customer also increasing. So we are quite bullish on this space. In fact, in many of the platform businesses, our funds are invested, and we believe that they have many years of higher growth ahead of them. So this is a theme that we are quite positive on.
Absolutely. Nimesh, a quick one in terms of gold, because that's rising, right? There's no stopping that. And interest for gold ETFs has also increased. Multi-asset allocation funds, because of gold outperforming so well, that's also given them a bit better in terms of return. And the recent announcement that came in by Sept in terms of REITs, right? How does all this play out for the mutual fund industry, and would we see more investments coming in to REITs from the mutual fund side as well as on the gold front?
So we are positive on precious metals. Actually, a little over a year back, we launched our multi-asset allocation fund because we are seeing that high uncertainties, and especially geopolitics, is leading a lot of people to hedge their portfolio by moving into gold. So we are seeing a good rally in gold, and we benefited from that. But we also midway, so say at the beginning of the calendar, added a bit of silver, because historically silver moves around gold in terms of a certain ratio around gold. And we were seeing that at the beginning of the year, while gold had rallied, silver was yet to move. So we moved some allocation towards silver also. We continue to be positive on both of them. However, after a rally of 2 years, it looks like gold is also poised for a small correction. So one needs to be prepared for a correction, although you can't exactly time it, but one should be prepared that there could be some correction after a very sharp rally. Every asset class has that, and gold historically also has had that. So one should be a bit cautious in terms of now allocating towards gold and silver. Long term, we still believe it is a good play, but albeit there can be a correction.
Okay.
On the REIT and the interest side, there is an opportunity, obviously, in terms of getting better yields many a times, and also participating in growth of some of these REITs and InvITs. So those are areas also we are positive on.
Okay, Nimesh, thank you so much for joining us on the show, giving us insight in terms of what are the trends we could watch out for, how could one look at in terms of investing going forward as well, your thoughts on gold and REITs as well. Thank you so much for joining us on the show, and viewers, thank you so much for tuning in as always. With that, we'll wind down this edition of MF Corner. Up next, of Closing Bell to take you through the last hour of trade.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets have opened up mixed. We're seeing Taiwan index that's managing to hold on to gains of 0.8 to 0.9%.
Quietly hopeful that the second quarter has maintained the momentum that we saw in the first quarter.
GIFT Nifty indicating a 20-odd point lower kind of a start.
I believe in merit-based immigration.
In capex terms, somewhere between $25 to $30 billion minimum per year over the next decade.
Positive 25,240. The Nifty Bank is trying to find its feet, about absolutely flat actually.
Thawing of relationship is the catalyst number one, which can lead the risk premium in India to get lower.
Our focus is on innovation, development, bringing new wall panels into the Indian market.
In the red now for the third consecutive session, the Nifty has breached yesterday's intraday low.
Down about 0.6 almost, 88.80 compared to about 88.31. Which was the Monday close.
The last few minutes have been good for the bulls. An impressive recovery from the lows of the day.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Nigel D'Souza. And Nigel, as we speak, there has been a bit of a recovery, right?
Yep.
The low today was sub 25,100. 25,084, I think. That was the intraday low. So from that level, we've seen a pullback of close to about 120 odd points. I guess we thank the Nifty weekly expiry.
Well, that's right. Nifty weekly expiry in the Nifty Bank, the largest constituent of the index, that's up close to 450 points from the low point of the day. So that's the kind of recovery I've seen on the Nifty Bank. The intraday chart comes up for you. And I'll tell you what, portfolios will be feeling relatively better because, when I was on HDR, Reema had finished TH at that point of time, trading hour and half-time report. The markets actually were the low point of the day. The breadth of the market, the number of stocks advancing actually had fallen to sub 1,000 stocks. Now that number has gradually crept up to around 1,250 odd. So the crisscross lines come up for you on the screen. So your portfolios will be feeling good. At today's low, you're only around 900 stocks that are advancing. So some kind of improvement, Reema, in the breadth of the market as well.
Indeed. So leadership is coming from banks. In fact, look at the PSU banking index. That's up over 1%. Metals are doing well. And autos have been strong since morning. Though on the way down, you've got softness in IT and FMCG. But we've got an action-packed 1 hour, final hour coming up on closing bell. So markets are holding above 25,200, held up by autos, PSU banks and metals. But it seems to be a down day for consumption pack. Tata Motors is in focus following news of JLR extending that production pause. Cybersecurity wars are plaguing operations of steel counters and JLR is on account of the cybersecurity, but steel counters are extending gains as the street bases for price hikes over the coming weeks. Brokerage firm Nomura sees a spike of 5% above spot levels. Details coming up on the show. The Indian rupee has scaled a fresh all-time low of 88.8 against the dollar. What's triggering the move on the currency? We'll also discuss that on our show. But right now, let's go across to Nimesh. He is with Abhinav Bharti, the head of India Equity Capital Markets at JP Morgan, and they will join in from the sidelines at the 10th JP Morgan Annual India Conference.
Thanks, Reema. Interesting times, right? We are hearing so many IPOs and blogs and fundraising. And I have with me the man who is actually instrumental in so many of those such deals. So Abhinav is the head of ECM at JP Morgan. Abhinav, thanks for joining in. Seems to be in a hot seat, right? I mean, there's so much of fundraising, so much of blogs happening. What's been the trend like, and what sort of pipeline that you're envisaging from here?
So from a trend line perspective, if you really look at it, numbers sound very large. This year till date, we have done about $42 to $43 billion in total capital raise, roughly about $10, $11 billion in IPOs, and the balance in follow-ons and blocks. If you were to just extend this trend line for the full year, it'll be somewhere between $55 to $60 billion that we will raise. Compare that, I think this is the second largest capital market volumes that we have seen in India, just behind 2024. So yes, the numbers look large, but really if you look at it from the other perspective, which is India's market capitalization has also grown quite substantially in the last 5-10 years. And if you really look at it from a percentage of market cap basis, then these numbers are very much in line. It surmounts to about 1.2, 1.3%, which is not something which is out of ordinary, I would say, going by past precedents. So clearly, I think the overall growth of the market means that capital market volumes that we will do on IPOs and blocks follow-ons will increase. It's just a sign of a healthy market is how I would put it. Where we stand right now is, in my view, I think going into the last quarter of this year, I think you will see a more IPO-heavy calendar. I'm sure you guys are picking up as well across multiple companies which have filed or which were filed and now have got SEBI approvals to go for the final pricing and listing. But yeah, overall for the year as a whole, it's a good trend line that we expect to continue for into the next year.
Sure. So let me break into various segments. I'll start with the IPOs first. 50 odd IPOs, only 10% below the IPO price. So in a way, it's a good track record as far as the IPOs are concerned. Yes. You also have been involved at JPM in some large deals like Hyundai and Swiggy and many more. In terms of valuations, as a banker, do you find it challenging to get these kind of valuations for many of these IPOs, or do you think the valuation is still fair compared to what it is for the listed market?
So if you look at it compared to the listed market, and let's just take the data points for the last 12 months. I mean, I'll go back to our conference same time last year versus now, and effectively, IPO as an asset class has given close to about 29% weighted average return. Right. So if somebody were to invest in every single IPO that has come to the market, I'm taking above $100 million as the cutoff, then you would have made about 29% return. If you compare that to the normal market or the secondary market, that's actually been flat or maybe just about 5% up. So the fact is that IPO as an asset class has given return. And the corollary is that from a valuation perspective, at least at the time of the IPO, these were priced to what I would say where the investors were comfortable coming into those deals. To me, I think the clear marker or support for next stage of IPOs is going to be what the current class of IPOs is delivering to the investors. As long as that is doing well, you will continue to see the product to be healthy.
Abhinav will deep dive more into IPOs, but you know the other big trend has been the PE exits and the promoter exits. Yes. You have been involved in many blocks as well.
Indeed.
Is there a bit of a worry that there is so much of exits happening, promoters selling out, PE selling out? How do you read that trend from an India perspective?
Nothing that is again what I would say which is worrisome or anything. Simply because look, private equity has actually even deployed capital at an equal pace. Like what I call it as we are into the third phase of deployment, exit, harvesting and exit cycle that we have seen for private equity. They have obviously been significant provider of capital in the Indian ecosystem over the last 20 plus years. It's their business model, and I would say you would continue to see that. A lot of new funds that they are raising are focused 30 to 40% to be deployed in the Indian markets in the next 5 years. So I think we will see this as a natural course of cycle. I think the promoters part is interesting, but a lot of it is actually where promoters are utilizing that capital for other needs. So it's important to differentiate between where the capital is being raised in order to deploy for other growth measures versus just taking capital out. And I would argue that that last part is a very small component eventually if you look at the entire scheme of things.
The other big trend that we've noticed, at least in the last couple of years, is the MNCs looking to sell or pare down the stakes in the Indian subsidiary. I was listening to the Whirlpool global CEO saying it's a valuation arbitrage that they're playing out, especially in India. You see that trend to only pick up from here. A lot of other deals will happen. For example, there is it's a media report which is well stated that Whirlpool wants to sell another 31%. So, is that going to be a trend that a lot of MNCs will look to exit?
So, the trend around the fact that cross-border or global companies want to, utilize Indian capital markets strategically to raise capital and to list their companies is something that is going to pick up. And I think from Indian capital markets perspective, especially where we as individuals are now deploying capital into equity markets, I think that provides access to some very fantastic high quality businesses that were otherwise not available earlier. Now the question of course is that what are the MNCs thinking and how are they going about, why is suddenly such a craze? Part of it is valuation, of course. Yes, the valuation is in India is at a pretty decent level, but equally I would argue it is also on a relative basis. And when you sit at a global corporate, you are actually as a CFO thinking about if I have to fund myself through raising debt, raising equity, where do I my cost of capital is the highest, cost of debt has gone up in the developed world, as we have seen, especially in the last 3 to 4 years. From that perspective, the valuations at which India trades does make it more attractive. But again, the fact is that these companies are really high quality models that are coming to the market. So in my view, I would say it is net a win-win outcome. Yes, there are certain examples of companies or MNCs where they are exiting fully. But more often than not, if you really look at it, a lot of them are saying that, yes, we want to list, but we want to list only a part of it such that we keep control. Hyundai that you referred to, they made it that very clear. A number of other companies which have done blocks. They're saying that, look, we will continue to be at a 51% mark, which means that the global corporate still wants to see, number one, see a long-term benefit in being in India and want to stay in control.
Sure. Abhinav, coming back to the IPO market, the kind of quality of paper that we are seeing hitting the market, any worries that the quality of paper is not that great, or are we at the fag end of that frenzy of being fundraising? Where are we in that cycle?
I would say we are in the early to middle part of that cycle, nowhere close to the frenzy stage at all. And I would drive it on the basis that, look, if you go back to 2021 era, the oft-repeated point is that a number of companies that came to the market at that time did not had the business models fully laid out or fully, scrutinized by the market. The business models, or they were not completely on the profitability curve. I think as you will see for IPOs this year, they are either coming for companies that are very well established, or even in the new age segment that we are all very excited about, these are business models that have actually achieved profitability. So in other words, the business models have become a lot more, deep-rooted and grounded. In my view, the quality of paper coming out right now in India is actually much better than what we have seen in previous cycles.
Okay. While we talk about IPOs, most of them have been FPOs. The money is really not coming into the company. Yes. Is that something as a banker you will be worried about? And how do investors choose between an IPO and an FPO?
Yes. So I would say it is actually a lot more driven by, from an investor perspective, look, they will be more than happy to give more primary capital. Equally, our market has also evolved wherein the scrutiny on primary being raised by the company and where it is being utilized has been very high. Sure. So from that perspective, a lot of corporates actually have become a much focused custodian of what I would say as primary capital into the business, that they want to raise only the amount wherein the returns of capital remains high. The point that we miss out, I would argue, when we do these valuation discussions with investors, the Indian domestic investors in particular, while everyone loves growth, everyone loves profitability, but they also focus a lot on return on capital metrics, which I think is a very important aspect for the Indian market.
Sure. Abhinav, thank you very much for joining us. I know we have a lot to ask you, but we're running short of time. Guys, that was Abhinav. He still believes that we're in the, at least, beginning of the middle phase of this IPO frenzy.
Okay, that's a nice way to summarize it. Thank you, Nimesh, for that. We will get into a break. On the other side, we'll get chatting with Aditya Sood of InCred Asset Management. Stay tuned.
Welcome back. The market's along the flat line. Breadth of the market still in favor of the number of stocks that are declining. KNR Constructions, they get an EPC contract worth around 460 crore rupees for multi-level flyovers and road development in Telangana. And some of these, order wins are being met with good amount of, boost up. KEC in the morning was up and about. KNR Constructions as well. I recall HCC as well. So the orders are triggering in. And in fact, the street is quite optimistic on prospects from here on. KEC, in fact, after giving a heads up, yet the stock reacted positively. Well, moving on then, let's find out how do you trade the index. Mitesh Thakkar from Bonanza Portfolio joins us on the show. Mitesh, we're getting into the weekly expiry hour, the last half hour or so. Good recovery from the day's low, right?
Well, I think, in fact, today morning I was saying that if 25,150 kind of holds, it should be good. We actually went much below that and have managed to recover. So that's a positive sign. I think not closing below 25,150, 130 would be a positive, and I think the markets can again, recapture and up more if this breakdown doesn't happen. On the stock side, banking names are buzzing, so I have a buy on IndusInd Bank. It needs to clear today's high, 757.6 is the high, so we take a conditional buy about 760. Keep a stop at about 749, look for targets of 785. That's the first call. The second call, which I have, that's a buy on LIC Housing Finance. That's always stock which after rally has given a pullback is at support area. So giving you a good entry point. Buy here with a stop at 577, look for targets of around 596.
Any level, Mitesh, on the Nifty Bank?
On the Nifty Bank, I would look at the first target of around 55,800. Now, this was the level which the Nifty Bank had made a high on the 18th of September. But the eventual targets are closer to about 56,000 to begin with. And in a good case scenario, I think even 56,400 is what is possible.
Okay. Thank you. We'll connect with you in the last 30 minutes. For now, let's talk about Tata Motors. Now, that's in focus on the back of a cyber incident that the company reported in August. Sudarshan is here with the details. Sudarshan.
So cyber attack and its impact on JLR. So pause, and the pause again. That's the story of JLR over last 3 weeks. So on August 31st, for the first time, it was announced that JLR's production was shut due to cyber attack. And after that, the next release came from the company on September 2, in which company has talked about this cyber attack and saying that it's working on to restart the operations. But after again, another update comes on September 10, in which company said that it was working with cybersecurity specialists to restart the operations. And for the first time, it mentioned that some data was also impacted in this cyber incident. Next update came on September 16, in which company has extended the production pause till September 24. And that time also it said that it's working with a forensic team to restart the operations. Today, another update company has released. Now, the pause is extended till October 1, and it's saying that it's looking to restart the operations in a phased manner. This is what company has said. But what about the news agencies? So BBC has reported that due to production pause, JLR is likely to be impacted by almost £5 million per day. And this cyber attack has come at the worst time because after recently UK government had made some policy changes, and because of that, September was very important month. Telegraph has reported that even if company has extended the production pause till October, but it believes that production pause may be extended till November. Now, why all these things are very important for Tata Motors? Because JLR contributes almost 70% to its total consolidated revenue. So we'll have to see how much time more JLR takes to start its production.
Okay, all right. Thanks a lot, Sir, for joining in and giving us that quick input on Tata Motors. Well, let's welcome Aditya Sood, Fund Manager, Incred Asset Management, who joins us on the show. Hi, Aditya. Good afternoon. Good to see you. When autos, everyone's revving up the engine, how are you all approaching that theme? Is it the core OEMs? Is it the auto ancillaries? Or is there some other way you're playing it?
So as you rightly mentioned, there are three ways you can play it. Possibly, you just miss the dealerships, basically. So we are very well aligned to auto OEs. Obviously, that includes Maruti and Hero Honda. We like both the stocks. I think so. The underlining theme here also seems to be the pay commission, as in when it comes. Obviously, that is going to be a 4.5 lakh crore sort of a number that flows down. What we have seen is that, typically in a pay commission year, all the consumption categories do, reasonably well. So whether it is two-wheelers or small cars, or the ancillary companies as well. And that includes, some of the companies which are doing or which are pivoting from, doing auto ancillary and now pivoting towards, essentially doing high precision components. So that is a theme that we like. And dealerships, obviously, there are two plays, which is Landmark and Popular Vehicles.
Do you own Landmark and Popular Vehicles?
Popular we do own, because we want to be aligned to Maruti. We believe that the pipeline is very, very strong. The stock was got IPO'd, it made a low of 80 rupees very recently, got listed at a 2,500 crore market capitalization. I think so what we like here is that, they made a very interesting pivot towards service income, which is a very, very high return on capital business. And obviously, last 12 months have been very, very tepid. Possibly they were losing money by clearing the inventory, and inventory is not, it doesn't become, 90 cents to a dollar in this business. Possibly it becomes, 95 cents to a dollar. So we like their consolidation play. They are, trying to consolidate the industry. Recently, they acquired a dealership in Telangana, which will add, a lot of revenue, and growth is something that the street has been trying to figure out. But we believe that possibly in 2027, growth is going to be, back with the bank. Possibly, they'll end up having a 20 to 25% growth because it is going to be a combination of inorganic, organic plus take commission, as I, sort of outlined.
Its issue price was 295, right? Closer to 300. So it's halved from that level.
Yeah, so that is where, a lot of these IPOs become very, very interesting, to us, wherein they become, possibly value buys at some point in time. It is a company that does 5,200 crore market revenue. It was trading at, 700 crore market cap. I know that, it is a small cap, but, that is where we become, slightly agnostic in terms of, buying value plays.
And just one more word about Populars. When it came out with the IPO, you said services was about 15% of their revenues. The after-sales market and services. Now, what does it stand at?
So it is similar, the only thing here is that, it is growing at 25% CAGR. So a lot of emphasis post a private equity player, which happens to be Banyan Tree in this case, to grow the service income. So there was a deliberate effort. But what also needs to be noted is that, this is a 100-year-old dealership business, in Kerala, and now they are moving out of Kerala. So they've got great reputation. And Maruti car, typically, the service is like 4,700 rupees, 2.2 services to be very precise, in a year, essentially. So our view is that, they are very, very competitive if you compare it to the mom and pop sort of, service, shops. So this is what we like about them. Obviously, it will continue to be a higher margin trajectory for them over a period of time. So in the previous cycle, they peaked at 5 to 6% EBITDA margin. I think so they would be at a much, much higher ROC number going forward.
Okay, all right. Aditya, anything new you'll have bought in the last, since the last time we spoke on the last couple of months or so? A new idea, you've told us in the past, about Tejas Networks. You believe there's a longer term potential out there. I think we've spoken about Indra Prasad as well. That's the hospital chain. Anything new?
So, Nigel, to be very frank and honest, one of our, views is that you buy great companies, when they are going through this 3-year period of zero return. So we have just invested into a company known as Ethos, which is the largest luxury watch retailer. They fundraise on Ethos Lifestyle. We believe that luxury is a theme, which is a multi-year theme. We are just starting that theme. If you look at the Ethos stock price, they have just, stagnated for last 2.5 years. The stock has delivered zero return. What is underlining here is that, obviously they've got, the watches have got, great pricing power. Currency has really hurt them, which is a Swiss franc to the, essentially rupee. which is, incidentally catapult to, 112. The Indian currency has taken a knock. They are in the process of, sort of passing of all the, price hikes. I think so next 2 quarters will be done. Same store growth is very, very strong. It is possibly trending at, closer to 15%. The growth is like, closer to 25%. So within consumption basket, either we like the top end, which is the luxury sort of the segment, and or we like the bottom up sort of a story, which is low unit consumption. So I think so ethos with a very strong franchisee, diversifying into the lifestyle brands in India could be a multi-decade play going forward. A very, very simple way to play luxury in India.
Got that. Ethos, when we last spoke to you in August, it was, when the heat of the 50% tariff was being felt on shrimp makers and textile makers. And you always look for value wherever stocks have fallen considerably. And at that point, you said that we'll, analyze it. How are the stocks looking? Have you made any purchases in either textile names or in the shrimp manufacturers?
We have not, but we continue to monitor this space very closely. The only thing is that, I think so the market is, and stocks have, both these pockets have moved up considerably. I think so the market is trying to preempt a trade deal here. But we believe that, there is going to be some period of distress, and that is why, we have not built a position till now. I think so there is going to be, at least in the textile space, I think so this is very, very clear that this is going to lead to multiple opportunities in terms of M&A. Obviously, a lot of listed players know how to switch on and switch off. We have been talking to some of the unorganized players here. I think so the pain is going to be immense. At least it is going to last for another 6 months. I think so next quarter is very, very critical. We are expecting a trade deal to happen, between November and December. There is an element of pre-shipment which has gone through in terms of textile. Another thing that we are monitoring very closely in a lot of these textile players is that whether they are in a position to, develop a alternative base. Like, for example, Gokudas has got something in, essentially Africa. So we are trying to, just figure out that, whether they can significantly ramp up. Obviously, it is not going to happen overnight, but I expect a lot of consolidation in the sector to happen. Now, in shrimps, it cannot happen by the structure of the industry where we are. But I think so Indian shrimp is still very, very competitive. And if there is a tariff deal, which is closer to 25%, obviously a lot of these shrimp stocks should also do well. Avanti is a clear-cut winner to my mind there.
Great conversation. Aditya, thank you very much for joining us today. Let's talk about one more sector which is doing very well, metals. Nigel has now moved over to the big wall to tell us what's driving this excitement in the stock and what are the triggers as we look ahead.
Well, metals are shining and there could be a sparkle in the coming weeks as well. Let's break it down for you. Hot rolled coil is trading at an 8% discount to China parity and 3% below the FTA parity. And so Nomura forecasts steel prices could rise by around 5% above the current levels in the second half of FY26. Point number 2, demand tailwinds, well, they are flowing in favor. You're in China, you have October normally marks the start of a seasonal demand rebound, while in India, a restocking cycle is expected to boost demand significantly. There have been some structural shifts as well at play. And in India, the safeguard duties, well, they have been extended for 3 years. And the GST cuts on key categories, that's what could spur demand growth as well. While in China, a move towards anti-involution, which is quality over quantity, that's gaining momentum. Point number 4. In fact, in China's, in case of China's output cuts, they are turning up the heat. Now, from January to July, if you look at it, in this year, China's crude steel production, well, that dropped by around 2% year on year. But things could get even more aggressive from year on. Nomura, for one, they are projecting a 9% cut in output for August to December 2025, as Beijing, well, they have mandated a 5% cut in the total output, which could come to around 50 million tons odd. And point number 5, the stimulus watch. All eyes are on October. Markets are hoping for a property-focused stimulus from China, and the street is keenly watching out for the 4th preliminary session that's due in October. In fact, we'll have to hear something, otherwise, the hopes could fade away. And point number 6, the Indian ferrous market is rock solid. Steel production and consumption, both of them are growing at high single-digit pace. And since the safeguard announcement has come in, the net imports as well have dropped by close to around 50%. So those are all the factors at play, and keep an eye out. Come, October or maybe the end of September, we could be bracing for a price increase in steel. Back to you.
Okay, interesting. Thank you very much for that. Get into a break. On the other side, we'll get you a check of what dealing rooms are saying in our segment D Street Chatter. Also, BTST calls coming up next. Welcome back. Midcaps are underperforming today. Midcap index is down about 1/3 of a percentage point, but you still beneath the surface have lots of movers, which are lighting up the screens on the way up and on the way down. Hormus is here with more. Harmis.
Mostly on the way up, of course, in the broader markets. And you take a look at some of these moves. GMDC, of course, one of those movers. And now the stock is at a record high. The stock is up 58% in the month of September so far. Another 11% added in today's session. We have had close to 4 crore shares now change hands compared to a 20-day average of 90 lakh shares. And this 58% move that GMDC has had in the month of September has put it on course for the best monthly advance that the stock has had since May of 2009, when the stock had surged 70% that month. Now, even after this, the stock is about to turn double in 2025. It's up around 95-96% currently on a year-to-date basis, and this comes after a 20% drop that the stock had seen last year. The auto ancillary space is doing well, but just before we get to that, Bajaj Healthcare is the second one on the list. It's the biggest single-day gain since January of this year. It snapped a 4-day losing streak today. We have had over 14.25 lakh shares that have changed hands compared to a 20-day average of just 1 lakh shares. And this is broken above its 50-day moving average, which is at 461. And the next important level of the upside is the 100 DMA, which is still some distance away at 494. And another underperformer this year, it's down 17% on a year-to-date basis. But this 12-13% advance that the stock has seen in September has already made it the best month of the year so far. Spoke of auto ancillaries. Automotive stampings is the one, 15% higher on this stock, biggest single day gain since April of last year. The volumes are the highest in 2 months. We have had over 7 lakh shares being traded in today's session, and the 20-day average on this stock is just 15,000 shares. It's a Tata Group company, promoter holding at 75%, broken above its 200-day moving average of 538, but remains an underperformer this year, is down 15% so far. And lastly, Reflex Industries, we spoke about this in the morning as well, is extended its gain, snapped a 4-day losing streak. The volumes are the highest now since August of 2021. Over 1.5 crore shares have changed hands compared to a 10-day average of just around 2 lakh shares, and it's broken above its 50-day moving average of 390 after this move. And after quadrupling last year, the stock has been a bit of an underperformer this year, down around 19%. So Reflex Industries, another mover on very strong volumes.
Okay, all right. Thanks a lot for that, Harmas. Well, let's move to our favorite segment, D Street Chatter. Nimesh gets us an insight in terms of what he's picking up. Nimesh, take it away.
Hi, Nigel. A decent recovery from the intraday lows, and the volatility was expected because of the weekly expiry as well. But from a flow perspective, slightly a down day in terms of more selling than buying from larger FIs. So net it's going to be slightly on the negative side. But again, there are individual names and individual sectors which are outperforming. So today, the big outperformer is the metal pack. You highlighted the Nomura note as well. But in general, I understand there is buying interest back in the metal names in today's market. So that as a sector stands out. The index is up 100%. From a near-term range point of view, I think 25,200 on the downside and 25,500 on the upside seems to be the range for the Nifty. So having said that, there are a lot of individual winners in the broader market which are outperforming. So again, from a flow perspective, a down day, but there is a bit of momentum back in metal names and select PSUs as well.
Okay, what about stocks, Nimesh?
So the first stock on my list is BSE, Bombay Stock Exchange. That's been under pressure today. And in general, I'm getting a sense that there is a bit of supply coming in BSE. I understand a leading long-only fund seems to be an active seller in the last couple of days, and that's been the trend today as well. So that stands out on the sell side. The second name is Axis Bank. Within the private sector bank stocks, Axis has relatively outperformed the private peers in the last 1 month or so. And that's largely because initially there was a bit of buying interest from HNIs. Now it seems some large long-only funds and FIs are active buyers in Axis Bank of late. So that explains a bit of outperformance there. The third name, a couple of stocks where there is delivery-based selling today. Federal Bank and AB Fashion. Both stands out in terms of selling pressure from larger FIs. So expect high delivery volumes on both those names today. And the last one is BF Utilities. That stock is up 10%, big volumes as well. And again, while a leading HNI investor has been accumulating in the last many months now, but also for BF Utility, there is a very strong indication of some corporate development coming very soon. So that's the trigger as far as BF Utility is concerned.
Okay, thank you very much for that. Market's not doing too much. And we've got about 20 minutes to go before we wrap up trade. So let's get back to the big interview of the day. And that is with the JP Morgan CEO, Jamie Dimon. He says, United States should be India's best friend. Listen in to those comments. He was chatting with Prashant Nair at JP Morgan's annual conference. He also went on to say, Jamie Dimon, that he's optimistic of a resolution between India and the US. He said that the recent hike in H-1B visa fees has caught everyone off guard.
The president and your prime minister clearly like each other, so which I think is good. I don't know what derailed it. I do think the Ukraine, Russian oil has been part of it, so I would take the president at his word on that. I'm still optimistic. In fact, I think Scott Bessent or the president recently said, no, we're going to get something done with India, and I hope we do. I think it'd be very important.
How will this work out? Because I think the Indian side has been very clear. I'm not asking you exactly what happens, but there has to be an off-ramp, right? Yeah. To knock those 25% off and then maybe work down the remaining 25% as well.
I'm not involved in the negotiations. I don't know. Yeah. I do think they want to do something on the American side, and I think they want to do something on the Indian side. Yeah. And so I'm hoping that they resolve it intelligently. I think it'd be good for both parties. Yeah. And I think, India is a great friend of America. It should be. I know it's non-aligned, and it should stay non-aligned, but with their non-alignment, we should be their best friend.
And before coming in, I was watching CNBC, the squawk, and there was H-1B, which was the big talking point headline. And it's kind of now sort of going into services as well, which so far it was not. It was mostly about goods. So is it expanding, or you think this is also all part of negotiation and it will finally settle down?
I think it'll finally settle down. That caught everyone off guard. And so we had a lot of phone calls over the weekend. What does it mean? And from what I understand, it means new H-1B visas. And a lot of H-1Bs go there because they need the expertise. And so I'm sure a lot of people will be going to the American government explaining why we believe it. I believe in merit-based immigration. As a matter of fact, I would beg the president, he has accomplished border control. That's great. I think all nations want real border control. That helps make a nation. But after that, we should have, good immigration. And I've heard him say publicly, more merit-based immigration, good seasonal worker stay, DACA stays. That if you get a degree in America, we should stamp a green card onto it. I agree with those kind of things, and so we'll hopefully be engaged in the government in this too.
The direction has changed in that sense. This administration coming in compared to where we were earlier, where we were going.
The administration is more growth, more pro-growth, but we haven't really attacked the fiscal deficit problem yet. Growth will do some of that. I don't know if they'll do all of it.
Okay. Yeah. You're calling the...
But the other thing about the deficits, and this is global, this is like every nation on the planet, and everyone's got very high debt levels too. I don't know when that becomes a problem. So, I can give you a logical argument that it can become a problem in 6 months. I can give you a logical argument it might be 6 years. But it will become a problem, and we're, like most problems, you're better off dealing with the problem than letting it happen. Yeah. And so I hope we are a little more thoughtful about that.
You weighed in strongly in support of the Fed when, we had officials from the executive making comments and sort of attacking the Fed, asking them to cut, etc. You think that's kind of sort of eased off a little bit, or how do you see this?
It'll start. I've always said that there's no American president who ever said, I want higher rates. So obviously they want short rates. President Trump has come out and said, I believe in an independent Fed. Yeah. He's quite strong about his opinions, but being independent is an important thing. The Fed is not really independent in other matters, supervisory, regulatory. I think there was too much of that, and they should have their ears cut back a little bit. But look, presumably, hopefully we'll pick a good Fed chair. Some of the names I think are quite good. I don't want to go through each one. And we'll see.
Weaker dollar, if I may so put it, is the strongest consensus right now. Do you agree?
I think there are, all things being equal, which they never are, you want a stronger dollar, because it generally means a stronger economy. But now, tariffs, trade, and all these other things that have some counterfact, and, there are people who are reducing their U.S. dollar investments, which I expect will continue over time. So it'll add to a little bit of the weakness of the dollar. And there are a lot of people in the United States who like the weaker dollar because it's good for trade. So we'll see.
Artificial intelligence, Mr. Dimon, is the other one, right? Hundreds of billions of dollars being invested there. You think there is a risk of capital misallocation? It's a bit of a, I don't know if this is excessive, but...
So let me put it this way. AI itself is real. Yep. We have 2,000 people doing it, 500 use cases. I worry less about large models and small models, and whether the costs will go up. I think the costs will be coming down. I think people are putting a lot of money behind it. So it is real. But in almost every real investment boom, you've had people who didn't do it right. So when cars boomed, a lot of car companies went bankrupt. When television boomed, a lot of television companies went bankrupt. When the internet bubble, that was real too. But I remember level 3 laid enough fiber optic. It took like 15 or 20 years to use it all.
Yep.
So parts of it may very well be in this kind of bubble thing, but parts aren't. So, but I separate that from the real, and we're going to be using it for a million different things. And so my mindset is more than using it. It'll develop over time. We're using large language models and small language models, open source models and closed models, and whatever works best for our company and our client is how we're going to do it.
The U.S. itself, you think it's a lot of economists were saying that, well, recession in the second half, it's not happened. I mean, high frequency data, hard data is still coming in very strong. Combined with, maybe the loosest financial conditions we've had in a while. Just wanted your thoughts about how you're looking at the U.S. right now.
There's a lot of conflicting, data itself is not perfect. There's a lot of conflicting data. But right now, unemployment is still low. Consumers, both low end and higher end, are spending their money. At the low end, they're a little stretched, and credit losses are going up a little bit. So it's not a disaster; it's a weakening. I don't know if that's just a weakened economy or not. You have a lot of stimulus coming in the tax package, and you have a lot of I'm not going to call it stimulus, but spending on AI. So a lot of capex is up, but it's almost all AI, data center related. So, I hope it continues. And I'm a little more cautious on inflation than other people. That may not go away so quick because of the global deficits around the world. Those have an inflationary effect. The remilitarization of the world, the restructuring of trade, those things are all kind of inflationary. And maybe, less immigration in the United States, could help push up wages in the United States a little bit, which is not all bad because, a lot of people, deserve a wage increase.
Okay, things are getting volatile now for the markets. The Nifty is once again below 25,200. We just attempted a recovery from midday lows of sub 25,100. We had gotten to levels of about 25,250, pretty much at where we had started. But once again, the markets are slipping. Remember, this is the Nifty weekly expiry. And now, while the Nifty Bank is holding up with a gain of about 250 points, you've got HDFC Bank down about 0.5% and ICICI Bank reeling, seeing some cuts. So that's weighing at an index level. And outside of that, a couple of these metal names are weakening. So Hindalco, JSW Steel, Hindalco is now dipped into the red. And then Sun Pharma, Tata Consumer, Cipla too are some of the drags today. But the other big story is that rupee has hit a fresh all-time low of 88.8 against the dollar. And this is on the back of continued foreign fund selling and a weak sentiment after the US visa fee hike. Lata is now joining in with what she's picked up. Lata?
It is a big one-day fall of about 0.55% at its lowest when the rupee went to 88.80 versus 88.31, which was the last close. Actually, it started off lower, a good at 88.41. And when it broke 88.45, that was kind of a support. We had touched that point on September 12th. So it was seen as a support level. Once it breached that, then everyone was into scamper and buy dollars, importers, corporates, everyone, people who were sitting short or stop losses triggered. People were expecting some kind of a fall on Monday because of the H-1B visa news. But probably because of FTSE rebalancing, some flows came in. Finally, when the numbers came for Monday, it was a fairly big 2,900 crore of sell by the foreign funds. That also could have worsened the sentiment, which was anyways, the hike is that the expectation is that future remittances will be affected. But not the immediate flow because, it impacts only for the lottery, the H-1B lottery from next year. But nevertheless, that is a negative sentiment. Then we had the CEA himself telling us that the government and the Reserve Bank are not very upset by the rupee's fall because it actually compensates for exporters as well for importers. Steel stocks are up today. Why? Because, imported steel becomes expensive. It protects domestic industry as well. Finally, today was not only a rupee fall. Although the rupee is the worst performing currency this year, today the fall was also seen in the Indonesian rupiah and in the Filipino peso. And towards close of trade, as the dollar index fell a bit, some of these currencies, including the rupee, recovered a tad. The overall opinion is that all the bad news of the rupee is in the price, and probably either because of tariff news getting resolved or in the fourth quarter, actually some appreciation of the rupee is expected.
Okay, all right. Thanks a lot for that, Lata. Well, time to slip into a short break. On the other side, we have Jay Bal of Cash the Chaos who will be joining in.
Welcome back. After 2 days of losses, the markets couldn't make quite headway on the way up. We were trading in the green in the morning and sometime about 20 minutes back. But in the last 30 minutes, markets have dipped once again and now 36 points lower. Jay Bala of CashTheChaos.com is now joining in. Jay, what are your thoughts on the markets just in the near term and the recovery that we've seen in Nifty Bank?
Hi, Rima. Thanks for having me on the show. See, I'm bullish on the markets, but as long as the markets aren't able to 25,669, it's a worry for me. The markets crossed the 25,400, the short-term resistance, and then it's pulling back. The bulls still have an advantage, but if the Nifty were to drop below 24,800, 24,750, the thin advantage that the bulls hold, that will be lost. So I don't want to see the markets below those levels. And the Bank Nifty is doing well because, like I pointed out last time, SBI managed to close about 837 and it's at 870. And is very likely to push towards a fresh 52-week highs at about 905 and odds. But unfortunately, the benefits the banking index is drawing from SBI is being offset by ICICI and HDFC Bank.
Okay, all right. Hi, Jay. Good to see you in. What about the tech index? You're enthused by it? You believe that it could bounce from here?
Yeah, as long as 34,200 holds for the Nifty IT index, it's it's a good sign for the Nifty IT index. Despite negative news, it's managing to hold the critical support. But it's tested that twice and managed to bounce from there. I shouldn't go back there one more time. It'll weaken the support. So I would like the Nifty IT index to cross 3,800 really soon. Then it'll make an attempt for 43,000. So it's a bit of 50-50 at current juncture, but the odds are very slightly towards the markets the Nifty IT index holding about 34,200.
Do you want to take us through some stock calls, some recommendations?
Yeah, please understand that the markets are at a very advanced stage of move from the April move. So you might want to position appropriately. I have two picks, one from the real estate and data center space, that is Anand Rathi. I have a stop loss at about 511, and at current levels, it's moving, looking like it's likely to move towards fresh 52-week highs about 950. So around 660, you want to buy about 10% of what you want to buy, and then if the stock were to pull back about 625, 600, then you want to add. So go a little bit easy here. The second one is Anvolia contracts. Again, very interesting setup on the medium term and the short term. Stop loss at about 870 for a price objective of 1560.
Okay, all right. What about the metals pack?
Yeah, I'm bullish on the metal space. Besides the auto index, which has clocked fresh all-time highs today, the Nifty Metals Index is looking positive, but not as positive as the Nifty Auto Index looked a couple of months back. But if you look at something like Hindustan Copper, it's probably making a march towards 400 plus. You want to keep a stop loss at about 275.
Okay. On the global picture, you believe the US markets, which have had a fantastic run, we're in the late stages of the bull run. Is a correction imminent?
That's right. If you look at the NASDAQ in particular, the momentum is quite strong. But looking at the price structure from the August low, it probably has got one final sequence of higher high to come through. If the index were to pull back, that will be the penultimate leg of the move from the April lows. I'm anticipating the S&P to hit about 6850 and start a correction. The NASDAQ spot index to hit about 25,000 thereabouts and then start a correction. It's in the late stages of the move, but still there is no sign that it's stopped. But my analysis is that it's very close to coming to a corrective top. But once the correction is through, we'll probably see a year-end correction, Q4 correction, and then the bull run will resume in 2026.
Okay, very quickly on the currency space, what are the levels you're looking at?
Yeah, in the Indian rupee, like I posted on my Twitter handle in June that it's likely to scale 89 against the dollar, and it's doing that. 89.5 is a very important resistance, and we have one final push towards 89.5 possible. When it comes to the dollar index, it's possibly put in a short-term bottom, if not a medium-term bottom. And the dollar index is likely to rally to about 103. On the Fed day, it made a fake-out low below the July 1st low. And this is signaling that there is a possibility that dollar index is likely to rally somewhere about 102.5 to 104.9.
Okay, all right. Thanks a lot for that, Jay. Just stay with us. The markets forward team as well will like to have a chat with you. But let's start winding down. It was a dullish day, actually. We had a weekly expiry as well that did play out. No respite for some of these tech names. You had Tech Mahindra that was lower in today's trading session, and that was, in fact, down close on 2%. Trent as well came in for some profit taking. That's down 2%. SBI Life had an off day. And Ultratech Cement as well down close on 2%. On the flip side, the banks did well. That was the bright spot today. So you had the Nifty Bank that was up 270 points. You had Axis Bank that was up 2.5%. Bajaj Finance was up close to 2%. The sector that was shining today was in fact steel. JSW Steel, JSPL, You had Tata Steel and SAIL. All of them ended well in the green. From the broader markets, a few stocks that deserve special mention. You had Adani Total Gas. Well, the brakes were put out there. The stock has seen a big run, but it was down 7%. Hari-Om Pipes was down close to around 7%. You had Dreamfolks that continues to trade with a cut of close to around 5%. Power Mech, that stock, in fact, was down close to around 4.5%. There was a large trade that took place a few days ago where Motilal Oswal Mutual Fund had sold close to around 1.5 lakh shares. It appeared that was a clean out, but today as well, the stock was under some pressure, 4.5% down on that name. What did well? You had SmartWorks Co-working, that was up 4%. Transport Corp as well was up close to around 3%. So though the Midcap index was under pressure today, ended with a cut of around 0.3%, there were select stocks that did pretty well. Well, on that note, we'll wrap up on closing bell, but you stay with us. The team of Markets Forward will join in soon.
Market closes in the red, but sharply off lows led by banks. Financials see a big buying. Nifty holds on to 25,000 despite the slip, and Sensex closes near 82,000. Most broader indices slip into red. PSU banks, metal and auto stocks among top gainers in this week market.
Maruti sees its best customer response in 35 years with 80,000 inquiries and near 30,000 deliveries on the first day of the festive season. Hyundai too records its highest daily billing in 5 years. Sales of small cars see a notable jump.
Euro Pratik makes its D3 debut at 11% premium to its issue price of 272 rupees. The management tells CNBC-TV18 the company is set to grow faster than the industry, which is growing at around 16%. Adds it's a bottom-line focused company and has expected growth to come in from its new catalogue launches.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vamakshi Thoria and with me is my colleague Vivek Iyer. Vivek, hi. It wasn't as terrible a Tuesday as, one would have imagined given the first couple of hours of trade. We managed to recover quite well from that point of time. Nifty Bank saw good uptake, but on the flip side was auto stocks that actually saw some bit of cool off from the day's highest point.
That's right. Good afternoon, Vamakshi. So not a terrible Tuesday, like you mentioned. We recovered quite smartly in the intraday session, but to end the day, the Nifty ended with a cut of, with a minor cut, a 30-point downtick is what the Nifty saw. The Nifty Bank, like you mentioned, outperformed, and within that space, the entire PSU basket did quite well. What also did well was actually the Nifty Metal Pack, and all of the metal stocks today did quite well, along with the PSU names, not only the PSU metal stocks, but even some of the names like HPCL, BPCL, oil marketing companies, all of them did quite well. Well, we have a power pack lineup, and here's a lineup of what we have in store for you today. We start with the top movers and shakers of the day with Riya Bhatia. Festive cheer hit automakers, stock surge in trade. Shares of KEC International too gained after the company secured a significant order win worth over 3,200 crores. Meanwhile, the Nifty Metal Index surged too. And last but not the least, we delve into the key market events to watch out for in tomorrow's trading session.
Well, on to our first segment of the day then. Riya is joining us so now from the big ball with all the top movers and shakers of the day. Riya, over to you.
Well, yes, I'm actually starting off with the top gainers of the day. First, we have GMDC, Tata Investment going up by around 11% to 10.5%. Even Deepak Fertilizers, Hindustan Copper were in focus today, up around 3.5 to 4.5%. KEC was up around 4% after an order win worth about rupees 3,243 crores in the international T&D business. Reflex Industries went up by around 17% after the board approved a demerger to form Reflex Mobility Limited with a proposed independent listing going forward. MK Global hit an upper circuit of 20% after Kirti Doshi acquired a 21% stake in the company worth around rupees 227.5 crores via Antique Securities. Axis Bank was also up over 2% after HSBC raised its target price on the stock to rupees 1,340 with a buy call. Moving on to the stocks on the downside today, top losers included some Adani Group stocks that saw some profit booking today after the big up move that we saw yesterday and during the last week. Adani Total Gas was up around 6%. Adani Power was down around 6%, pardon me. Adani Power down around 5% after hitting an upper circuit of 20% yesterday. Even AWL Agri down around 4% and LT Foods and Sammaan Capital also saw a fair bit of losses today. Defense stocks also sulked in today's trade even after positive commentary coming in from the Defense Secretary last evening. The Nifty India Defense Index was down over 1% at one point in the trading session, although we did see some bit of a recovery towards the closing of the session. The biggest losers included Axis Cates Tech, Bharat Dynamics, Paris Defense, Solar Industries, Cochin Shipyard and Mazgon Dock. MTAR Tech, Apollo Micro and Nibe, although were up around 2.5 to 3.5%. Some stocks were also at their 52-week low. These included Praj Industries, Root Mobile as well as RK Forge.
Well, thank you so much, Riya, for giving us a neat wrap of all of the top movers in the session today. Well, we'll now go across to our guests, Jaybala CMT at cashthechaos.com and Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital. Thank you so much, gentlemen, for joining us. Well, Jay, let me first come across to you. Well, a very topsy-turvy session, also given the fact that today was the expiry session as well. How do you look at the markets from the current levels?
Hi, Vivek. The markets, the bulls hold a slight advantage over the bears at current stage, but the Nifty needs to cross 25,669 really quickly. Otherwise, the mild advantage the bulls still hold might get lost, and if the US markets, which are really close to completing the bullish move that started from April, that might start a Q4 correction. So we want to see the Nifty cross 25,669 before the US markets correction set in. So yeah, we want to see the Nifty hold about 24,750 and then quickly cross 25,669. And the banking index, thanks to SBI, is doing slightly better than the Nifty. But still, the important resistance for the banking index is 56,160. So once that's crossed, the things can start looking good for the banking sector too.
All right, but the other sector that was in focus today was the auto pack. Now, festive cheer has hit the auto sector. Sales and inquiries run high across the sector, with Maruti reporting best customer response in 35 years, and Hyundai recording highest single-day performance in the last 5 years. Sudarshan takes stock of the sector. Over to you, Sud.
So it's a strong start to the festive season for auto companies, especially four-wheelers. The biggest car maker, Maruti, has come out and said that it's the best start in that company has seen in the last 35 years. And also it goes on to say that if the momentum sustains, company is going to have a very strong festive season, and there is a possibility that company might run out of certain inventory in certain segment. So talking about the enquiries, company has received enquiries of more than 80,000 with the billing of almost 25,000. It goes on to say that there is a possibility that billings can increase and cross 30,000 very soon. So since September 18, the day company had announced, had passed on GST cut and also announced additional benefits, since that day, company has seen enquiries of almost 75,000 per day, and with bookings of 15,000 units per day, and that is also an increase of almost 50%. The biggest positive for Maruti was the inquiry and the bookings that company has seen for the entry-level segment, where the growth is more than 50%. It's the same trend for Hyundai, which has seen dealer billings of more than 10,000 units, and company had said it's the highest ever single day bookings that company has seen in last 5 years. As far as Tata Motors is concerned, it has received enquiries of more than 25,000 with billings crossing almost 11,000. So we'll have to see if these companies manage to sustain the momentum to the entire festive season. As of now, it's a good news.
Thank you so much, Sudarshan. Clearly good news coming in as far as the auto pack is concerned in terms of inquiries as well as deliveries, like you mentioned. Well, another stock that was in focus today was KSE International. At one point of time, that particular stock was up almost 8%, but cooled off towards the end of the session. What was the news flow over here? The company actually secured its largest ever EPC order win. In fact, the company announced that it had received orders of over 3,200 crore, and this came in the international T&D business. What did these orders include? The orders included a 400 kilovolt transmission line, and this came in the United Arab Emirates. And along with that, the company also secured orders coming in for supply of towers, hardware and poles in the Americas region. So now when you're looking at this particular order inflow for Q2, the YTD order intake for the company stands at 11,700 crore, and this compares against the company's own guidance of close to 30,000 crore. When you're looking at the share of T&D, close to 70% of the YTD order inflows have come in from this particular segment, again indicating that the pipeline is quite strong, especially when it comes to this particular space. No other than KSE Vamaxi up almost 2%, but cooled off significantly towards the end of the session.
Absolutely, Vivek. So at least off to a good start this year in terms of order inflows for KSE. Sudeep, I would like to come to you now and would like to get your take in on the auto pack, because that is one sector that did extremely well. What's your opinion on stocks like Maruti, which have done quite well over the last couple of sessions, ever since this GST rate rationalization announcement came through?
Well, I think, this is pretty much on expected lines, because what was happening was Maruti was suffering because the entry-level car demand was low. We know there was a consumption slowdown, and there were some challenges with rural income and income in the low-income households. But that pressure is getting off. The rainfall has been good. The agriculture has been good. Interest rates have come down. And on top of everything, I think this GST rationalization gave the added incentive for incremental purchases during the festive season, which has begun yesterday. So I think things are looking good for Maruti and pretty much the entire entry-level segment vehicles, whether it's the four-wheelers or even two-wheelers. I'm yet to see the two-wheeler numbers, but I believe that companies like Hero MotoCorp, which caters to the low ticket size vehicles, should benefit also in this momentum. As far as Maruti is concerned, we have maintained our positive view. But considering the valuation, we would recommend this from a long-term perspective, not a very, very short-term. We also like M&M. We believe that while this may not catch the festive wind at the lower end, but fundamentally the stock looks good, and I'm sure they will also benefit out of this GST rationalization.
Well, thank you so much for your view there. Sudeep, Jay, let me bring you into this particular conversation as well. Clearly, the Nifty Auto Index has been a significant outperformer ever since the GST rate cuts came in. At the current levels, do you see further upside? And if you do, what are your preferred picks in this particular space?
Yeah, I've been pointing to auto index being the star performer since July. And the Nifty Auto Index hit fresh all-time highs today. But it's cooled off from the all-time highs. My projection was for 28,500 to 3,500 for the Nifty Auto Index. But today's price action is a little bit, not so great. But we've got the fresh 52-week highs. If I was bullish, in fact, I'm bullish. If I'm continuing to be bullish, it'll be on the two-wheeler space, not on the four and three-wheeler space. So I would believe Hero Motors and Bajaj Auto might have much more upsides to work with rather than M&M, Maruti, and Tata Motors. Well, maybe Tata Motors in the four-wheeler space, but yeah, Hero Motors and Bajaj Auto might have more upsides to work with. So the four-wheelers might take a back seat for the moment, and then the two-wheelers could play catch-up with the four-wheelers.
All right. Thank you so much for that, Jay. But, one sector that was shining in trade today is the Nifty Metal Pack. This was largely on the back of anticipated price hikes in steel and structural changes in China and India. Nigel is here with some of the key drivers behind the surge. Nigel.
Well, that's right. Metals are shining bright, and there might be a sparkle in store in the coming week. Let's break it down for you then. The hot rolled coil is trading at around an 8% discount to China parity and 3% below the free trade agreement parity. And so Nomura forecasts that steel prices could rise by up to 5% from current spot levels in the second half of FY26. Point number two, demand tailwinds, well, they are in favor of an upsurge. In China, October marks the start of a seasonally strong demand rebound. And in India, you have restocking cycle that's expected to get a bit of a booster shot. Point number three, there are structural shifts both in India as well as in China. In India, the safeguard duties have been extended for 3 years, and GST cuts in the key categories could spur demand growth from year on. While in China, a move towards anti-involution, which is quality over quantity, that's gaining momentum. So let's take that point forward. In fact, China's output cuts are now turning up, in terms of getting aggressive from year on. Just to give you a couple of data points, between January as well as July 2025, China's crude steel production dropped by 2%. But things could get even more aggressive from year on. Nomura predicts 9% cut in output between August and December 2025, as Beijing has mandated an annual cut of around 5%, which amounts to around 50 million tons. Point number five, there's a watch on stimulus. All eyes are on October. The hopes are that there could be some stimulus on the property side, which could spur demand as well. And finally, India's ferrous market is rock solid. The steel production consumption is growing at high single digits, while imports as well have come down by 50% since the announcement of safeguard duty. All in all, things are shining bright. And in fact, in the next couple of weeks, we could be hearing about a steel price increase.
Well, thank you so much for that, Nigel, and we'll keep an eye out for when you let us know when that particular price hike does come about. Sudeep, let me bring you into this particular discussion as well, especially when you're looking at the metal pack. There's been a little bit of momentum in this particular space over the past few weeks. Where do your preferences lie? Do you like the ferrous or the non-ferrous space here?
We do like the entire metal pack. Ferrous does look good. Look, I think what is most important out of the stuff Nigel was talking about are two things. One is the involution in China, which is the focus on quality versus quantity, and the production cut which has happened systematically in China during the current fiscal. That definitely is very useful from a demand point of view. Of course, the safeguard duty imposed by India, an extension of that for 3 years, is good news for domestic manufacturers. But even important compared to these two are, of course, the expectation of stimulus in China for the housing sector, building sector, which will lead to incremental demand in China. So I think things are looking good, and one can look at the steel companies. We do like Tisco for Tata Steel for a very, very long time, and we maintain our view. one can look at another company which is a bit aggressive position considering what is happening around it, but it is still a aggressive position which can be looked at. That is Vedanta. I think there are challenges in terms of regulatory issues there, in terms of demerger, but we believe that is in the pipeline, and the valuation wise it does look good, and sum of parts value is definitely higher than what we are buying today at.
All right, so positive on Tata Steel as well as Vedanta, and for Vedanta, despite the kind of challenges that you see. Thank you so much for that, Sudeep. But Jai, I'd like to ask you about GMDC. That particular stock, saw a very sharp bump up in trade today. In fact, the stock, I believe, is sitting at a record high. How does this stock look like on the charts, and where do you think this is headed?
Yeah, it's looking very strong on the momentum and price. So I'm sure this is not the peak for the stock. But when it comes to risk reward, this is not the best stock. But you might be better off positioning on a copper play through Hindustan Copper rather than GMDC. So if you place a stop at about 275 and hold Hindustan Copper, you can probably expect about 411 to 425 for Hindustan Copper.
Well, thank you so much, both Sudeep as well as Jai, for joining in, giving us a view on the markets as well as various fundamentals as well. Well, before we head into a short break, we leave you with commentary from JP Morgan's Jamie Dimon on inflation and other growing concerns in the US.
I've always said that there's no American president who ever said, I want higher rates. So obviously they want short rates. President Trump has come out and said, I believe in an independent Fed.
Yeah.
He's quite strong about his opinions, but being independent is an important thing. The Fed is not really independent in other matters, supervisory, regulatory. I think there was too much of that, and they should have their ears cut back a little bit. But look, presumably, hopefully we'll pick a good Fed chair. Some of the names I think are quite good. I don't want to go through each one, and we'll see. I hope it continues, and I'm a little more cautious on inflation than other people. That may not go away so quick because of the global deficits around the world. Those have an inflationary effect. The remilitarization of the world, the restructuring of trade, those things are all kind of inflationary. And maybe, less immigration in the United States, could help push up wages in the United States a little bit, which is not all bad because, a lot of people, deserve a wage increase.
Welcome back to Markets Forward. Let's take a look at the key corporate voices of the day. First up is Shree Cement. The management said it is set to pass on GST benefits to customers to help boost demand. It is confident that GST rate cuts will further spur industry growth. Further, the company guided the volume growth to be around 6% in FY26. Meanwhile, the company expects EBITDA to remain in line with last quarter's levels. Further, Shree Cement is focused on organic growth. However, it is open to acquisitions.
Next up on our radar is Sichasai Technologies. The tech-enabled solution company's IPO opened for subscription today. While speaking to CNBC-TV18 earlier today, the management said it will use 300 crore rupees for debt repayments. Further, they also added they're expecting payments business to grow at a 25% CAGR.
And before we wrap, we bring you key market events to watch out for. Ria Bhatia is standing by with the key events to focus for tomorrow.
Well, yes, let's take a look at the key events to watch out for tomorrow. We have the crude oil inventory as well as new home sales data coming out of the US. Back home in India, watch out for 2 board meetings tomorrow. Piccadilly Agro is going to consider a fundraise and SMC Global is going to consider a bonus issue tomorrow. There are also 3 IPOs opening for subscription. Jain Resource Recycling comes out with its 1,250 crore IPO. EPAG Prefab Tech comes out with its 504 crore IPO. And BMW Ventures comes out with its issue size of over 231 crores. 3 other key events to watch out for. US President Donald Trump is set to deliver a keynote speech at the 80th session of the United Nations General Assembly. There's also the ECB non-monetary policy meeting tomorrow. And lastly, watch out for the World Bank president as he speaks at the Bloomberg Global Business Forum tomorrow.
All right. Thank you so much for that, Ria. Lots to track in trade tomorrow. But with that, it's a wrap on this edition of Markets Forward. We will be back with more news and updates on the other side, so don't go anywhere.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines you're tracking this evening. The Indian rupee sinks to a new low. $1 is now worth nearly 89 rupees. Stock markets end with marginal cuts thanks to a recovery in bank stocks. Gold prices hit fresh record highs and silver prices hover around 14-year highs. Investors keep an eye on Fed Chair Jerome Powell's speech later tonight for potential signals on the interest rate trajectory. One of the world's most powerful bankers, JP Morgan's Jamie Dimon, says the US economy is weakening, but it's not a disaster just yet. Expects investors to continue reducing their dollar holdings, says he is wary of inflation and the US has not attacked the fiscal deficit problem yet. That's an exclusive. External Affairs Minister Jaishankar meets top American diplomat Marco Rubio in New York, says they discussed issues of current concern. This was the first high-level meeting since US imposed 50% tariffs on India and the recent hike in H-1B visa fee. Commerce Minister Piyush Goyal is also in Washington to hold trade talks. Top tech companies in the US push back against Trump administration hiking the fees for H-1B visas widely used by Indian citizens. The industry body representing Apple, Microsoft, Google, Meta and others call on the White House to work with the industry so they can attract the best global talent. Jaguar and Land Rover extends the factory shutdown after a suspected cyber attack. Production will remain on pause till the 1st of October. Company promises to provide more clarity as the investigation continues. Maruti sold 30,000 vehicles on the first day of Navratri as GST cuts take effect. Hyundai also records the highest daily billing in 5 years. Small car sales see a surge. Global semiconductor giant Nvidia pledges to invest up to $100 billion in ChatGPT maker OpenAI. The plan includes building large data centers and creating power capacity of about 10 gigawatts. At least 7 people are dead after heavy rains batter Kolkata. State government declares Durga Puja holidays 2 days ahead of schedule. Waterlogging in several roads disrupts traffic. Train services also affected. Karnataka High Court imposes a stay order on the state government's decision to limit the price of movie tickets to 200 rupees. The interim relief was granted after Multiplex Association moved the court, calling the government's decision arbitrary. All right, let's start with the day's market action. The market closed in the red but sharply off lows after banks staged a major recovery. Midcaps underperformed, keeping the market breath in favor of declines. IT stocks continue to remain under pressure while metals witnessed a sharp recovery. Right, the rupee hit a fresh all-time low against the US dollar. This on continued foreign fund sales and weak sentiment after the US visa fee hike. Lata Venkatesh is here with more. Lata, what's pushing the rupee lower?
It is a big one-day fall of about 0.55% at its lowest when the rupee went to 88.80 versus 88.31, which was the last close. Actually, it started off lower, a good at 88.41. And when it broke 88.45, that was kind of a support. We had touched that point on September 12th. So it was seen as a support level. Once it breached that, then everyone was in to scamper and buy dollars. Importers, corporates, everyone, people who were sitting short or stop losses triggered. You know, people were expecting some kind of a fall on Monday because of the, H-1B visa news. But probably because of FTSE rebalancing, some flows came in. Finally, when the numbers came for Monday, it was a fairly big 2,900 crore of sell by the foreign funds. That also could have worsened the sentiment, which was anyways bad after the H-1B visa fee hike. The negative about that fee hike is that the expectation is that future remittances will be affected, but not the immediate flow, because, you know, it impacts only for the lottery, the H-1B lottery from next year. But nevertheless, that is a negative sentiment. Then we had the CEA himself telling us that the government and the Reserve Bank are not very upset by the rupee's fall because it actually compensates for exporters as well for importers. Steel stocks are up today. Why? Because, you know, imported steel becomes expensive. It protects domestic industry as well. Finally, today was not only a rupee fall. Although the rupee is the worst performing currency this year, Today, the fall was also seen in the Indonesian rupiah and in the Filipino peso. And towards close of trade, as the dollar index fell a bit, some of these currencies, including the rupee, recovered a tad. The overall opinion is that all the bad news of the rupee is in the price, and probably either because of tariff news getting resolved or in the fourth quarter, actually some appreciation of the rupee is expected.
Right, thank you, Lata, for that update. Onto the commodities market. Gold continued to rally today to touch an all-time high. The strong rally in the yellow metal is driven by the US Fed's rate cuts and safe haven buying. Similarly, prices of silver hit a record high. Continuing weekly gains for the 7th week. All right, on to a CNBC-TV18 exclusive. One of the world's most powerful bankers, JP Morgan's Jamie Dimon, has said that the US economy is weakening, but it's not a disaster just yet. Speaking to Prashant Nair, he said that he expects investors to continue reducing their dollar holdings. He added that he is wary of inflation and the US has not attacked the fiscal deficit problem yet.
A lot of conflicting, data itself is not perfect. There's a lot of conflicting data. But right now, unemployment is still low. Consumers, both low end and higher end, are spending their money. At the low end, they're a little stretched, and credit losses are going up a little bit. So it's not a disaster; it's a weakening. I don't know if that's just a weakened economy or not. You have a lot of stimulus coming in the tax package, and you have a lot of I'm not going to call it stimulus, but spending on AI. So a lot of capex is up, but it's almost all AI, data center related. So, I hope it continues. And I'm a little more cautious on inflation than other people. That may not go away so quick because of the global deficits around the world. Those have an inflationary effect. The remilitarization of the world, the restructuring of trade, those things are all kind of inflationary. And maybe, less immigration in the United States, could help push up wages in the United States a little bit.
External Affairs Minister S. Jaishankar met U.S. Secretary of State Marco Rubio in New York. The two met on the sidelines of the United Nations General Assembly. This comes as Commerce Minister Piyush Goyal is in the US for the next round of trade talks. Both meetings took place amidst tensions between the two nations after the imposition of 50% tariffs and the H-1B visa fee hike. Sanjay Suri has more on the meeting between Indian and US officials.
According to the State Department's account of the meeting, Rubio reiterated that India is a relationship of critical importance to the United States. The State Department, in its account, said that Rubio also expressed his appreciation for the Indian government's continued engagement on a number of issues, and a lot of these were listed out by the State Department: trade, defense, energy, pharmaceuticals, critical minerals, and other items. The US read of the meeting said both ministers agreed that the United States and India will continue working together to promote a free and open Indo-Pacific region, and including through the Quad. So clearly, the State Department saw the meeting as quite comprehensive, substantive, and positive. And Rubio spelled out particularly that the US is very much on board for the Quad going ahead. And this is entirely in line with Rubio's earlier statements, where he has emphasized time and again that India is one of the most important relationships for the US. Following that meeting, Jaishankar also similarly, though more blandly, posted on X that both sides had agreed on the importance of sustained engagement in priority areas. He said that the conversations covered a range of bilateral and international issues. The State Department was a little more specific on the meeting. The challenge clearly is whether such goodwill can spill over into resolving the many hurdles that have serially come to stand between India and the US. The 50% tariff, half of it as punishment for buying oil from Russia, the prohibitive fee now for the H-1B visa, the US revocation of its waiver on trading through Chabahar port. There's clearly a lot of friction and confrontation that this indicated new resolve has to take on and tackle. To that end, Commerce Minister Piyush Goyal is also here in the US for talks aiming at some sort of breakthrough over the tariffs issue past the current impasse.
A few days after the Trump administration imposed a $100,000 fee on new H-1B visa applications, the U.S. tech body has urged the government to reconsider the move. Ashmit Kumar joins us now with the details. Ashmit, please take us through what the industry body said.
Well, an important development this. Bear in mind that the IT industry has already spoken out with respect to their concerns and challenges while facing this $100,000 fee. Now we understand it's the turn of the US-based ITI Council, or the IT Industry Council based out of the US. Just for context, as far as the ITI Council is concerned, this trade body represents some of the largest tech players operating out of the US, including the Big Six. By Big Six, we mean the likes of Amazon, Google, Apple, Microsoft, Meta, Nvidia, the Big Six. They are also members of this. And importantly, these are some of the companies which are some of the biggest employers of H-1B workers. So the comments coming from them become substantially significant in light of the recent developments. What they're saying is, what the ITI Council statement essentially says is that they are important. It's important for the United States, if it wants to take a leadership role as far as innovation is concerned, in terms of developing technology is concerned. That is only possible if the best and the brightest are coming to the United States to innovate in the United States. That's one key message. They follow it up with saying that they're urging the US administration, the leadership in the United States, to work with the industry on ensuring that the best and the brightest are able to, in fact, move to the United States, to move there. And there's also a word of caution that AI leadership, the race is on. The only way the United States, that America is winning that race, if that innovation happens in America, and thereby essentially cautioning that if there are roadblocks that are mounted on the way for smooth migration of talent, of the best and the brightest, that could also come in the way, that could hamper the AI aspirations that the US has in terms of taking a leadership role in the technology moving forward. So a word of caution coming in from ITI Council based out of the United States.
All right, thank you, Ashmit, for that. Shifting focus now, Jaguar and Land Rover, a subsidiary of Tata Motors, has extended its factory shutdown till the 1st of October. The shutdown began after a cyber incident on the 31st of August. Sudarshan Kumar has more on this. Sudarshan, please tell us more about the cyber attack and the impact on JLR.
So cyber attack and its impact on JLR. So pause, and the pause again. That's the story of JLR over last 3 weeks. So on August 31st, for the first time, it was announced that JLR's production was shut due to cyber attack. And after that, the next release came from the company on September 2, in which company has talked about this cyber attack and saying that it's working on to restart the operations. But after again, another update comes on September 10, in which company said that it was working with cyber security specialists to restart the operations, and for the first time it mentioned that some data was also impacted in this cyber incident. Next update came on September 16, in which company has extended the production pause till September 24, and that time also it said that it's working with a forensic team to restart the operations. Today, another update company has released. Now the pause is extended till October 1, and it's saying that it's looking to restart the operations in a phased manner. This is what company has said. But what about the news agencies? So BBC has reported that due to production pause, JLR is likely to be impacted by almost £5 million per day. And this cyber attack has come at the worst time, because after recently UK government had made some policy changes, and because of that, September was very important month. Telegraph has reported that even if company has extended the production pause till October, but it believes that production pause may be extended till November. Now, why all these things are very important for Tata Motors? Because JLR contributes almost 70% to its total consolidated revenue. So we'll have to see how much time more JLR takes to start its production.
Right. Thank you, Sudarshan, for that update. Moving on, shares of several automakers accelerated in trade in intraday's session today. This on the back of strong demand spurred due to GST rate cuts. Maruti sold 30,000 vehicles on the first day of Navratri as GST cuts take effect. Meanwhile, Hyundai also recorded its highest daily billing in 5 years. Small car sales also saw a surge. Onto a CNBC-TV18 exclusive, JSW Motor CEO Ranjan Nayak has said that the group's first car will be a plug-in hybrid SUV and will be launched in the second quarter of FY26. Speaking to CNBC-TV18, he added that the company will announce a $1 billion fundraise this week. He also added that JSW MG Motor will continue as a separate entity, but Chinese car maker SAIC could dilute its remaining 49% stake.
See, I mean, the Shanghai Auto and JSW both, they have got a very strong sense of Indian market. They have got a long-term vision of Indian market. In joint ventures, both the partners, in any joint venture, both the partners keep discussing about various forms of dilutions depending on the alignment of the goal or alignment of the aligning their immediate priorities. So we are we are basically in the discussing. So maybe dilution of Shanghai Auto will happen or another private equity partner will come. So it depends on the situation how it evolves.
All right, time for a short break. Coming up next, global semiconductor giant NVIDIA pledges to invest up to $100 billion in ChatGPT maker OpenAI. More details when we return. Welcome back. Heavy rains and flooding crippled Kolkata, killing at least 7 people in the city. The heavy downpour brought life in the city and surrounding areas to a near standstill, affecting traffic, public transport and daily activities. The Met Department has predicted similar showers for Kolkata and neighbouring regions around the 25th of September, threatening to dampen Durga Puja festivities. Floods in North India and excessive rainfall in parts of peninsular India have damaged several crops. Farmers are staring at losses of over 5,000 crore rupees. However, state governments have claimed that farmers will be fairly compensated. Santya Gora reports.
Floods in North India and West India affecting Rajasthan, Punjab, Haryana, Uttarakhand and Jammu and Kashmir displaced people, claimed lives and affected hundreds of villages. Farmers are facing massive damage as multiple crops have been destroyed.
The crops that are seeing a meaningful, tangible impact, they are focused in Rajasthan because some of the crops there are quite localized. Rajasthan has a very high share in these crops. So for example, green gram, there we're seeing impact is there. There is yield damage. Bajra, and Rajasthan has more than 40% share in the Bajra crop. There we're seeing some impact. Again, Jawar, where Rajasthan accounts for 1/3 of the production, there we're seeing impact. Other than that, moving from Rajasthan, if we look at Punjab and Haryana, there we see meaningful impact in case of paddy. Punjab contributes to about 12% of India's paddy production.
The scale of damage is evident from Punjab alone, where crops on 1.48 lakh hectares have been destroyed, and experts estimate farmers are staring at losses of over 5,000 crore rupees.
So for Rajasthan, crops like Bajra, we're seeing losses to the extent of about 800 crore. Green gram, which is moong, losses to the tune of about 1,200 crores. In case of paddy in Punjab and Haryana put together, we're seeing losses of around 3,500 crores. And in Telangana for cotton, the loss could be to the tune of about 300 crores. So all in all, we're looking at about a 5,000 to 6,000 crore loss to farmers because of these floods.
Heavy rainfall also hit Maharashtra and Telangana. In Maharashtra, crops on about 18 lakh hectare are affected, with farmers demanding the state government declare a wet drought. State governments have begun their surveys as in Panchnamas to assess losses and promise farmers proper compensation. But farmers remain doubtful, citing past instances of delayed, insufficient or no payout despite eligibility. In Mumbai with camera person Deepak, this is Santya for CNBC-TV18.
Some international updates now. France has formally recognized a Palestinian state at the United Nations, a move joined by several European countries. President Macron called for renewed efforts towards a two-state solution. The move was praised by the Palestinian Authority but rejected by Israel and the US. Israel warned that it might respond by annexing the West Bank. Meanwhile, Arab and Muslim leaders are set to meet President Trump in New York to discuss a plan for peace and post-war governance in Gaza. Russia and Ukraine continue to trade heavy drone strikes overnight. Ukraine says it shot down 132 drones, while Moscow claims over 100 Ukrainian drones were intercepted. The UK Foreign Secretary said Britain will confront Russian aircraft violating NATO airspace. Poland echoed that warning too. Meanwhile, President Zelensky is in New York for the UN General Assembly, rallying global support for peace talks. The ABC network has said that Jimmy Kimmel's show will return, ending a nearly week-long suspension over the late-night talk show. The network had suspended the show last week after conservatives criticized Kimmel's monologue comment about Charlie Kirk's assassination. And US chip maker NVIDIA has announced a $100 billion investment into ChatGPT maker OpenAI overnight in a bid to deploy AI data centers to train and run OpenAI's next-gen infra. As part of the circular arrangement, OpenAI will use the investment to help pay for new chips produced by NVIDIA. Here's a report.
NVIDIA plans to invest $100 billion into ChatGPT maker OpenAI and supply it with data center chips. The companies announced the move Monday, marking a tie-up between two leaders in artificial intelligence. A source close to OpenAI says the deal will involve two separate but intertwined transactions. NVIDIA will invest in OpenAI for non-controlling shares, and the startup can then use the cash to buy chips from NVIDIA. The chipmaker will invest an initial $10 billion and then start delivering hardware as soon as late 2026. On Monday, the two companies signed a letter of intent to deploy at least 10 gigawatts of NVIDIA systems for OpenAI. They aim to finalize partnership details in the coming weeks. NVIDIA shares closed around 4% higher after the announcement. OpenAI has been working to build its own AI chips as a cheaper alternative to NVIDIA, but a person familiar with the matter said its deal with NVIDIA doesn't change those plans or its partnership with Microsoft, which has invested billions in OpenAI since 2019. NVIDIA's investment comes days after it committed $5 billion to struggling chipmaker Intel. Analysts say the scale of the new OpenAI deal means it could attract the attention of regulators, though the Trump administration has so far taken a relatively hands-off approach to competition concerns.
And with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC-TV18.
Hello and welcome. You're watching Festive Centimeter and I'm Manisha Gupta. The festive season has begun in India and with it comes the age-old tradition of gifting something sweet to the loved ones. From bustling offline sweet shops to the rapidly growing online delivery platforms, we're all spoiled for choice. Over the years, India's love affair with sweets has only deepened. But the way we consume and purchase them is undergoing a big transformation. From traditional sweets like laddus, jalebis to modern delights like figs burfi and rasmalai tiramisu, or health-conscious options like low-sugar, sugar-free and guilt-free sweets, to innovative packaging and premium gifting options, the Indian market is adapting quickly to changing consumer behavior. Joining us now to discuss the expectations from the festive season is Sid Mathur. He's founder and director at Delhi-based Khoya Mithai. Sidai, thank you so much for joining in and happy festivities to you. Well, it clearly has been a big market trend change that we've seen over the last few years. What can we expect this time around and what are you readying yourself for?
Well, to be honest, I think the market trends are a few. So number one, we've seen over time that a lot of people want to sort of go beyond mithai. So there's always now from a mithai space, we are now looking at gifting, so the mithai, of course, is the main component. But I think one part is that gifting part or the element of creating some sort of a hamper, we're seeing more and more. And the other part that's definitely quite prevalent is the customization. There's a lot of customization now going on. A lot of people don't want to take something that's off the shelf. A lot of people want to design their own boxes. They want to design their logos. They want to choose a ribbon. And sometimes we even specifically make mithais or savories made to order for them.
All right. Sid, clearly it is the era of customization, even for packaging for that matter. Would you say this change has come in the last 4 or 5 years and do you see it sustaining? Also, would you say bespoke really is the buzz right now and people are willing to spend that extra for that?
Absolutely. I think that over the last few years, there's been a resurgence of mithai to be acceptable again. I think when we started the brand, our idea was that at one point it was only good enough for sort of kings and courts, and it became almost something that became the lowest common denominator, something that was almost commoditized. I think now with a lot of people getting back into recreating the magic of mithai, we've seen this trend happening where people are now primarily looking at mithai, but adding a lot of value-added products, like what I mentioned, across the board, across different products, a lot to do with nostalgia, a lot to do with, we have a chicky product, for example, that's very, very popular. And we also have a good bench strength, so we are able to create a lot of bespoke products and a lot of bespoke packaging.
So I would agree with that. From a whole generation that moved on to chocolates from traditional mithais, would you say it's moving back in now to traditional mithais again?
Yeah, I hope so, because I always say when people ask me, tell me about your brand, I say it's like going back to the future. So, at one point when I was growing up, mithai was wonderful. It was great. And you would look forward to so many different types of mithais that you would eat as a child. And over time, I think that became almost, like just something that was very sugary, something that was very rich, things that were not packaged well. And the importance has sort of gone. And I think that's a lot of that has come back now. So I 100% know that mithai is getting a massive makeover. And I think that it's allowing the entire market to recreate a lot of magic that we may have lost over the past 20, 30 years. And it's quite wonderful to see a product that is actually has so much history, so many wonderful anecdotes, so many brilliant stories coming back again. And it's honestly a great feeling.
Sid, is it also about sugar-free, gluten-free, guilt-free even? And how are you tackling with those kind of demands?
To be honest, of course we have a wide sugar-free range, and we do have a lot of products that are healthier. I think the key word is, I think for us, we have a stronger hold on the north part of India. And here people like healthier. I'm not sure if they like healthy. As soon as you say healthy, they're like, what do you not put inside? they immediately second guess the product. So we do have a lot of products that are healthier. We're using a lot of great ingredients. A lot of times we are using baked products instead of fried. And of course, we have a sugar-free range. But to be honest, that accounts for a very small part of the sale that we have in the year.
Sid, you're also into food consultancy and you have some eating joints as well. With the way you've spread yourself out, what's the plan going forward with Khoya Mithai?
Well, we have partners in every business, and at the moment we are spending a lot of time and attention on Khoya. Khoya has a huge growth potential. We do have a couple of restaurants. One's called Bomba, one's called Nico. Both of them, if I may say so, doing quite well and growing quickly too. So I do find enough time to manage all of it. But I think that anything that has to do with food is in our veins, and we just really enjoy it. It's barely a day of work, to be honest. It's a lot of fun.
So it's always interesting to ask the person, the head of the business, really, on what their favorite product or what are they most enthusiastic about. So within your spread, which is your favorite?
You know what? That's unfair, but I would say keeping Khoya in mind and festive season coming around the corner, I think the premise of the first thing we ever created and we ate and we thought, oh, you know what? I think we can taste the difference in this mithai, and let's now move forward with the brand. And that was a coconut laddu, because as a child, I used to love the coconut barfi, but it was very syrupy and super sweet, and we tried to make a better version of that, or a version that we thought was a little bit more relevant for today's audience, and that was a coconut laddu. So till today, it's something that's very close to my heart and typically in my stomach every few days.
All right. So from laddus to beverages then, and that's yet another area that you work with, and savories is another thing that you added along the years. How is that business doing?
We have come to realize that as we evolved over time and people went from, okay, give me a mithai, now give me bigger box of mithai, now give me more mithai, and then we switch into a lot of different products. Savory has been something that we've really enjoyed seeing in terms of how our clients have reacted to it. It's done really well. And of course, I mean, everybody in the universe knows Haldiram's valuation of $10 billion, and majority of their sales comes from savories. I think savories is a key part of our growth also going forward. We went from a range of 6 savories to 18, and we're still growing and improving on that. So we're really excited about the savories and a lot of our other products that we have. And I feel that we are taking a lot of time and effort to create products which actually have nothing that in Khoya has any preservatives, additives, colors, flavoring, essence, none of that. So so what you get is a much better version of what you may have been able to have in the house, and hopefully that taste will prevail and we get repeat orders.
So Sid, even as you are flourishing in the space that you are, how would you look at the competition as more brands enter the space, whether it is about regional, local, national, even international brands are now eyeing India, especially during festivals?
No, I mean, I honestly, I love it. I just love the fact that more people are getting into this segment. I feel that it was overlooked for so long, and I honestly feel wonderful when I see other players that come into the market. I actually feel happy because I feel that it's getting the importance that it is. And look, there's a 90 to 100 odd thousand crores worth of mithai, business in here, so there's enough to go around. I'm sure that the pie is big enough for all of it, but I do really enjoy seeing what a lot of other people are doing. They're bringing different parts. Some are modern, some are doing different regions of mithai, and I feel everybody is welcome. It's really wonderful to see it. It actually makes it validates the product and the future of mithai for all of us.
All right, we're wishing that this festival is really, really sweet for you. Thank you so much, Sid Mathur, for joining in and taking us through, of course, that sweet journey of yours. But with that, we move on to our next guest of the show. And as the festive season brews across India, coffee is emerging as a premium gifting choice. Prices have softened by 13% in this week and nearly 8.5% down over the month. And this could give demand perhaps that much-needed festive push. Joining us now to discuss how much coffee India consumes is Praveen Jaipuriar. He's CEO, CCL Products. Mr. Japuriyar, hi, thank you so much for joining in. Well, first of all, how are you looking at the Indian markets when it comes to the consumption, and how are you reading at the demand growth as we go ahead from here?
So we kind of, divide the world into two markets. One is the mature market, which are largely the Western markets, which is the US and the European markets. There, the consumption pattern seems to be at a steady state. They are already evolved and well penetrated as far as coffee is concerned. So not much of new things is happening on a large scale. But yes, new patterns like, premiumization of coffee, specialty coffee. These are certain new trends that are emerging in these mature markets. And then we see the developing markets, which is largely the Chinese and the Indian market, which are, fast developing into a good coffee market. So right now, a lot of out-of-home consumption in coffee is happening in these markets. And slowly, when people start getting used to the palate, because in both these countries have been largely and traditionally, tea drinking economies. So it takes a while for people to get new taste on their palate, and as and when it happens, then the in-home consumption increases. So that's the pattern that is likely to evolve in these two economies, which is again good news because these are two very large economies, with largest two population in the globe. So that's good news because it will help drive the coffee consumption. So what we have seen is that the consumption patterns are evolving differently in different parts of the world, and we are pretty much at it because back end we are doing a lot of work on specialty coffee to feed into this whole new culture of specialty coffee that is evolving in the mature market and in the developing market, both through our B2B and B2C vertical. We are trying to make sure that we have a play here and help the coffee culture grow as much as we can. So that's again from a organization perspective, it's a good news that coffee consumption is growing, and this will help companies like us do better and better in the future.
Mr. Japuriyar, at CCL, how are you looking at the festival season? Are you coming up with coffee hampers, gifting different flavors? How are you approaching it? Can we expect more newer products from CCL?
So yeah, I think we are doing multiple things here. One is we have come up with a very, reasonably large gifting portfolios. We are targeting, B2B sales with these gift bags. We are targeting B2C sales with this bag. Recently, we launched our, premium brands, Burkall in the market, which is for the very evolved consumer of coffee. We have also launched flavored coffee. So lots of, food being one thing where people do look for lots of flavors. And these days, everybody has their own choices. In a family also, we see that, somebody prefers some kind of coffee, somebody else prefers something else. So we are making sure that we have a cup for everyone. And that's how we are looking to play in the festive season. We have new, campaigns going, lots of work happening on the quick commerce, e-commerce platform. So yeah, lots of work. We have our plates full, and we're looking forward to this whole festive season, especially in this whole regime where the GSTs have also reduced, which means that there will be an increased spending by the consumers. So we are looking forward to tap into all of these.
Oh, well, yes, absolutely. GST is a great enabler, as we have seen. That is the view coming in from various sectors. But also, how are you looking at the growth this year? What is the kind of Indian and global demand growth that you are seeing this year and perhaps the next as well?
So the global demand, because largely it is driven by the development.
And how would you...
Sorry, I just kind of, lost you in between. Your mic went into mute. Hello, I think your mic has gone into mute. Manisha, you were asking about the global demand and the demand in India. So we basically, globally, the mature markets, they grow at a very small pace because they're already very mature. The coffee is penetrated. So they grow at low single digits. So we are looking to kind of, make sure that we gain market share in these markets and keep our volume growth aspiration at around 15 to 20%. As far as the Indian market is concerned, there a lot of out-of-home growth is happening right now. we are not too much engaged in the out-of-home segment. We are largely into in-home segments through our B2C foray. And that is growing at a very healthy clip of around 30 to 40%. We are, we are hoping to continue the aggression here and the growth momentum, and we'll look to grow at similar pace in the Indian market. So that's how we have kind of, balanced our growth in the international and the Indian market.
Mr. Jupiter, finally then, going forward, are you also looking to launch tea, even for the sake of it, because India is a tea drinking nation, or are you looking at other products, or just coffee is it that you're looking at to continue to grow, or is there more in strategic pipeline?
Yeah, there are, and tea, not for the sake of it, but interestingly, we do a fair bit of coffee vending also. And when you do vending, you start kind of offering tea as well, because you have to offer the whole array, both tea and coffee. Let's say if you're putting a vending machine at an office, you have to kind of cater to both tea and coffee. So we kind of had to do that, and when we started doing it, we figured out that we kind of have developed the back end chain for it. And we said that, with the kind of distribution that we have created, the brand equity that we have created, it probably we could also, have a play in this category as well. So right now, nothing big. We are still selling institutions, but that play has started to grow a little big. We will definitely evaluate and see if we can have a play. Also, we were looking to supplement our coffee with a couple of other categories, because the distribution, when you start penetrating into more outlets, smaller outlets, more markets, you also need more product categories, because that's why most of the FMCG companies you'll see have multiple categories in their portfolio. So that's something that is there in our minds. We have been evaluating. We are right now micro testing one category, which is the snacks category, traditional South Indian snacks. So we are seeing if we could kind of enter this category. Right now we are test marketing into very few outlets in Hyderabad. We want to get our act right. Once we know that, okay, we have got the thing going, we will expand that. So hopefully in the coming months, you will hear more from us on that front as well.
All right, Mr. Jaipuria, thank you so much for joining in. So that's interesting numbers that you have put out for us, that India's B2C demand growth seems anywhere between 30 to 40%. I mean, that's a huge number there. And we are glad to know that from coffee, it's also about tea and perhaps some South Indian snacks that we can see coming in from CCL this festival season. Well, with that, it's time for a quick break, but don't go anywhere. We will discuss how consumers are buying gold this festive season, especially when it trades at all-time highs. This is on another side. Welcome back. And the gold prices have hit fresh record highs in India and globally. Silver is also at a record high in India. Factors supporting these gains include last week's US Federal Reserve rate cut and strong central bank buying. But the big question remains, will these elevated levels or prices dampen demand this festival season? And where are the gold and silver prices heading from here? Join us to discuss that is Sachin Jain. He's MD World Gold Council. Sachin, I thank you so much for joining in. And it really is the gold prices to talk first. Possibility of a $4,000 an ounce, and how soon do you see that?
So Manisha, first and foremost, my big thanks for having me on your platform. As you said, the gold has been on a surge, and already through the year, we've witnessed a 42% increase in return on gold pricing. Will this stay on? Perhaps yes, perhaps not. Our belief is that that all elements of why gold should have gone up are already being included, and hence we should see a slightly more stable increase and not a knee-jerk increase that we've been seeing in the past. What's also complicated in India is the falling rupee, and that's had again, an additional impact on the gold price rise. So while the gold went up by about 5.8%, the net impact in India has been about 7.8%. So that's been an additional one.
Sachin, what's your sense also on the imports this time around? Every year we saw anywhere between 600 to 800. Some years has been 900 tons as well. What is it looking like in 2025?
Certainly, Manisha, we think that the import volumes certainly will be lower than what we witnessed in the last couple of years. Whether it be dramatically low, we don't think so. But I think the real figures will be out with us over the next 3 to 4 weeks. But the range one could perhaps preempt right now would be in the range of 600 to 700 tons. As I said, over the next 2 or 3 weeks, we'll be able to give a more closer indication whether it's going to be more towards the 700 or the middle of 600 to 700.
Sachin, with the way the gold prices have been rising, I mean, as you said, 45% of gains in this year. How are you looking at the sense on consumer trends this season? Is it going to be investments in case of gold or anything else?
Actually, we've been Manisha, studying the consumer sentiment very closely. And earlier, our researches used to be more periodic in the sense of, every quarter. Now we've gotten more closely with what's happening in gold. And constantly what we've been picking up from the consumer is that the obsession on consuming and owning gold is at an all-time high. We think that's going to get reflected in the coming season. And while the price is going up, there was a whole conversation that affordability and other elements, and hence should we reduce the carriage? And I think consumer has repeatedly sort of confirmed to us in their consumer sentiment reports is that they intend to consume gold for what gold is, and that's the value appreciation. And this is a wealth and asset class. And hence, I think that consumers' footfall out in the market will be strong. Last 2 weeks of the Akshay Patra that we've seen in Shraddh, where the footfalls traditionally have been very low, but in 2025, we've seen last 2 weeks also, there's a lot of buzz being on the floor. And also all is indicating towards a very important, a very productive festival season ahead of us.
Sachin, you're also looking at the recycle market because that has been higher as well as compared to previous year. How do you see at that? How do you see that at the present markets, and where does it stand now?
Well, traditionally over the last couple of years, Manisha, the recycled market and I say recycling where gold converted to gold tended to be around 25 to 30%. Over the last 6 months, we've seen this almost touching plus or upwards of 40% in the marketplace, where consumers do not want to exit the category or still want to hold on to gold, but they're buying gold to gold, which is a great indication that people want to consume gold with the modern context of gold jewelry, with the modern designs and so on and so forth. And this is a very positive indication with how gold is responding, where consumers want to celebrate the ownership of gold with new modern designs, but don't want to sell it and exit the category.
The point is well taken, Sachin Jain. Thank you so much, as always, for joining in. So that's Sachin from World Gold Council telling us that the gold prices are still bullish from here, even as they have gained more than 40% in this year. Interestingly, as he says, India would be importing 600 to 700 tons of gold in 2025. And it is gold for gold. That means 40% of exchange gold is coming back into the markets to be renewed into new jewelry. So that's a trend that we have seen as prices hit all-time highs. But with that, that's a wrap on this special edition of Festive Centimeter. Thank you for watching.
More than a year after the JSW Group announced a joint venture with MG Motor India, the company is getting ready to enter the auto industry with its own product portfolio under the JSW brand alone. JSW Group has set up a dedicated automotive vertical with plans to invest $3 billion over the next 5 years. JSW Motor is separate from JSW MG Motor India. This group is setting up a major automotive hub spread over 630 acres in Bidkin in Chhatrapati Sambhaji Nagar in Maharashtra. JSW Motor is looking to focus only on electric, hybrid and future technology vehicles. We're now joined by Ranjan Nayak, the CEO of JSW Motor, who has spent close to 15 years with the JSW Group, working very closely with Chairman Sajjan Jindal on new and emerging businesses. Mr. Nayak, thank you for joining us here in the CNBC-TV18 studio. Let me begin by asking you, you already had a joint venture with the MG Motor company, which is only 1 year old. Why decide to enter the automotive industry on your own under the JSW brand?
Okay, thank you. Thank you for calling me. So let's take a step back and understand what the JSW Group's legacy business. So we have entered steel, ports, cements and other businesses. So three strategic reasons. One is the national strategic reason. Second thing is the opportunity, structural opportunity, and the third thing is the scalability. So if you look at our legacy businesses, we not only created the steel business, but we took it to the massive global scale by nudging the entire ecosystem, by nudging not only the suppliers, but also the competitors. So then now we made India as the best place to create steel business. Similarly, when the nation wanted the investment into energy, into renewable energy, we stepped into that in a massive scale. Like we created the massive, deepest port in the country. So in last 10 years, if you see, we have grown from $4 billion, $7 billion revenue to almost 25 billion. Our market cap has increased from almost 5 billion to 45 billion, almost 10 times. So next 5 years is very important for us. So we want to grow by more than 50 billion in revenue and by more than 150 billion by market cap. So then which is the sector? The question comes. So the same principle, if you apply it to auto business, is of national interest. There is a structural shift in the technology and the consumer demand. And the third thing is the scale. So why national priority? India, if you look at India, we import almost 150 billion worth of oil, whereas we have plenty of solar and wind energy, which is aligned to the EV business. So, and the second reason is the once in a century opportunity where the technology has shifted massively.
Right.
And the third reason is the consumer's mindset to have a Swadeshi brand, as PM Modi told yesterday, 2 days back. So these are the three reasons. And if you look at the scalability, we are producing around 4 million cars per year compared to 30 million cars. Plus, there is a huge domestic opportunity, plus opportunity to export to the other markets.
All right. So that's a very important summary as to why JSW Group is making its foray into the automobile business. Could you also give us a sense? There are, of course, media reports which suggest that you're looking to invest $3 billion in the automotive industry, in your own automotive foray over the next 4 to 5 years. Could you give us a sense of how much money has already been invested by JSW Group into JSW Motor? How much are you looking to raise? And what is the total kind of investment you're looking at in 5 years?
Right, it's a good question. So in the phase 1, we are setting up a 60 JPS plant that is almost 500,000 cars per year in phase 1 in Sambhaji Nagar. So we have already acquired the land. The construction is going on in a full swing. We have all subs has been ordered. So we are expecting the first car to be rolled out in the second quarter of 2026. So once this phase 1 500,000 cars capacity is built, we'll start expanding to another 500,000. So that will be combined as a 1 million car. Simultaneously, we have signed an MOU with the government of Odisha, so wherein Bhubaneswar will be allocated around 900 acres of land. So that will come in phase 3. So in total, next 5 to 6 years, so we'll have a 2 million car capacity. And in the initial phase 1, so it's almost $2 billion of capex. Out of that, as we are speaking, the financial closure will be done in this week. So one of the major, national bank is providing the debt, and it will be a mix of debt and equity funding. So the work is going on very smoothly, and parallelly, one of our JSW Group companies, we have taken a land in Nagpur where we will be setting up the lithium-ion cell manufacturing in due course of time. Then parallelly also we are investing, we are making various joint ventures and working with our ecosystem suppliers and the startups. So how to Indianize the whole technology.
There's a major funding announcement this week itself, you mentioned?
Yeah, right.
And how much would
expected?
that be?
So that will be almost $1 billion.
Okay. Funding announcement for this project.
Right.
Okay. I would like to ask you, when you speak about the first products being rolled out in second quarter of calendar year 2026, are you speaking about cars, or this is commercial vehicles? What are we looking at?
See, if you look at, actually I should have answered you in the first instant itself. If you look at, we have got 3 ventures in the auto. So one is the entry into the, joint venture with the Shanghai Auto in JSW Motors. So that capacity we are expanding from 100 to 200,000 in due course of time. And second venture is our commercial buses and trucks. That we have taken a 100-acre of land in Sambhajinagar, where we're building the state-of-the-art facility. The third is JSW Motors. This is passenger cars, and we'll be concentrating on the new energy vehicles, which will be combined. Majorly will be electric vehicle, plus your other powertrains like your range extender or plug-in hybrids. So these are the 3 major powertrains we'll be focusing, and this is primarily a passenger car only.
All right. So the first product that will be launched in quarter 2 of 2026 will be a car.
Yeah, absolutely.
Electric car?
Electric car.
Electric car.
Electric car or plug-in hybrid, depending on how we integrate the whole the technology. So maybe a plug-in hybrid.
Maybe a plug-in hybrid. All right. Also, if you could give us a sense of how many cars do you plan to launch in 2026 or maybe in the next 2 years?
So in 2026, we have a clear sight of 3 to 4 products. And in 2027, maybe another 3. So our intention is to, every quarter we should bring one model. Because if you look at, India and China, so China, they sell around 30 million cars. Out of that, around 17-18 million is new energy vehicle. And they have consumers have around 400 to 500 models. But in India, there is seriously, 20-25 models are available. So consumers don't have that kind of options. So we want to do that first. So we want to bring as many models as possible. So every quarter you can expect a new model.
JSW Group has also been looking to strike joint ventures for its automotive business, separate from JSW MG Motor. Could you give us a sense of what's the status of those talks with Chinese counterparts or European companies?
See, actually, as far as JSW Motors is concerned, we are not looking at any joint venture. We are definitely, as other OEMs, major OEMs, they share the technology. So we are looking for the technology adoption, and it will be adopted within India. So we are looking at the sharing of the technology. So JV is not in the cards.
No JVs, but you're looking to possibly buy the technology from them.
Of course.
Okay. And has that already happened?
No, it's happening. It's a very normal course of business. So today it will happen with a European firm. Tomorrow it will be with a Chinese firm.
So could you give us a sense of maybe for the first phase, where have you adopted technology from?
So we are still discussing, but mostly it will be one of the global leading exporter. So they are exporting our almost 1.5 million cars per year. And if you look at globally EV technology, looking at meeting our consumers' demand, China is the best place actually. So looking at their ecosystem, looking at the development in the technology. So the core technology may come from Chinese partner, but it will be adapted with the global technology and with the Indian mindset. So it will be localized fully.
Right.
So we aim to start with around 70-75%, which is a significant localization, and over the years it will be 100% localized.
Right.
So that is what our intent, and it's very much required to control the cost and to give the to localize the the technology while we are developing the capability.
There have been some media reports about how SAIC is looking to probably exit India, sell its stake to JSW Motor. Could you give us a sense of what are the negotiations going on? Is JSW likely to announce an increase in ownership in MG Motor India?
See, the Shanghai Auto and JSW both they have got a very strong sense of Indian market. They have got a long-term vision of Indian market. In joint ventures, both the partners in any joint venture, both the partners keep discussing about various forms of dilutions depending on the alignment of the goal or alignment of the aligning their immediate priorities. So we are we are basically in the discussing. So maybe dilution of Shanghai Auto will happen, or another private equity partner will come. So it depends on the situation how it evolves.
How are you preparing the organization for JSW Motors' own big bang entry into the automotive market? What about hiring? Could you give us a sense of the kind of numbers that you're looking at in terms of bringing people on board?
See, this automotive actually is all about people actually, and the bringing the right people. On board. So that is the biggest enabler to keep this business up. So immediately we are looking at almost white collar engineers is around 1,000 or 1,200 engineers will come on boarded, and our blue collar worker will be around 5,000 to 6,000 workers, who all of them will be trained properly. So the hiring is going on a great way. So fortunately, India has got plenty of talent actually, young and energetic. So we are going. Yesterday, I was reviewing with our HR team to how to drive the campus and all these things. So we are all. This is a very exciting time to build the organization.
Final question before I let you go. A teaser for our audience. Will the first car be a SUV? Will it be a sedan, or will it be a affordable hatchback? How would you like to price it? How would you like to position it?
So the first car, most probably we're still looking at various options, but most probably the first car will be an SUV. It will be one of the best in class. I cannot tell more than that. So, and it will be at attractive price point, which will definitely, the people will aspire, the young India will aspire. Young India will take pride in while driving those cars.
All right. And it will be either a hybrid or it will be an EV?
Most probably it will be plug-in hybrid. But there will be a range of EVs will come after that.
Welcome back. You're watching News Center. Global sportswear giant Puma is betting big on India, right from investing in running culture beyond cricket to expanding its footprint across online and offline channels. I caught up with company's managing director, Karthik Balagopalan, and began by asking him about the key growth drivers for the company.
What we see in India is that, India is becoming a lot more sport focused and sport conscious, which is great. And this is exactly what we're also betting on, for us to become a sporting nation. So we are investing heavily in sport, and especially beyond cricket. We're also investing a lot into running. So running is a big focus area for us, right? And what we have actually done is that we do think that from a macro perspective, running is one of the fastest growing sports in the country. We are supporting it. We're investing heavily into running. So not only from a, let's say, our product assortment point of view, but also in terms of the races that we support across the country, and everything that we're doing from the entry level runner to the elite runner, right? So we have about 4 races across the country, right from VDHM, which is in Delhi, to the half marathons in Bombay and Bangalore, and also the iconic Ladakh marathon. So we are betting heavily on this. We also extend that by also having, let's say, weekly runs. We've have runs across the major cities, nearly one a week. We work with top run coaches across the country. So I think for us, like this participative sport is very, very important, and we think this is only going to accelerate even further going forward.
Right.
Recently,
Karthik, if I were to ask you about the kind of growth that you're expecting from India, or you're hoping for in the next few years?
I'm sorry, I can't really divulge growth plans right now for the future. But yes, India is one of the fastest growing markets for us, and we are extremely bullish on the market, and also Puma in India.
You know, I know it's very difficult to divulge immediate numbers, but just to ask you about the global situation and how it's impacting brands like yours, especially in light of the tariff uncertainties, the trade deals that India is negotiating with US and Europe. How do you think Puma stands to gain as a result of these trade deals which are in the pipeline?
We have, also balanced our sourcing strategy by having also with, let's say, BIS now in place. We were already early in the local sourcing field. So we are well positioned, in order to not only ensure business continuity, but also take advantage of any deals that we may crack in the future.
Right. Could you also give us a sense of how do you plan to expand the footprint in the country? Are there specific strategies you're going to deploy in the next few months and years?
We are very well distributed in the country. We have one of the largest distribution footprints. We continue to remain, to observe the key trends in the market, and we will make investments in places that where it's proven for us. Right now, like I said, our distribution is and our revenue as well is equally split between online and offline. So we have managed to again balance both channels, especially in a digital first market like India.
All right. Thank you very much, Karthik, for joining us for this call and giving us your view on how Puma plans to grow its footprint in India and the kind of campaigns and strategies you're looking to deploy. On to our CNBC-TV18 exclusive now. Smartphone exports from India have risen 55% on an annual basis during the April to August period this year. Industry sources have said that India's smartphone exports to US alone have risen a whopping 193% during the same period, with Apple accounting for lion's share of the exports. Ashwin Kumar has this exclusive.
Well, despite the global uncertainty, smartphone shipments from India, exports from India to the rest of the world are clocking some handsome growth figures. We're given to understand that for the period of April to August of 2025, we're given to understand for this 5-month period, Indian smartphone exports have gone up to $11.7 billion. That's a growth of 55%. Specifically to the United States, a big market that Indian smartphone makers are catering to. For the Indian shipments to the United States alone, that's gone up from $2.88 billion in April to August of 2024. That's gone up to almost $8.5 billion in 2025. That's a growth of 193%. Now, bear in mind, as far as shipments to the United States are concerned, Apple is a large contributor. What about Apple shipments, Apple exports to the world? Well, that's gone up to $8.5 billion, clocking a growth of 77%. And that's up from $4.8 billion, again, in the same period of last year. Speaking of shipments to the United States, what industry experts tell us is that the months of August and September are a bit of a lean period. There's a lean patch in these 2 months that has been witnessed. But even for the month of August, the numbers clocked as far as shipments to the United States are concerned, it was up by almost 250%, clocking almost $1 billion in exports of smartphone exports from India to the United States. And that's for the month of August alone. And finally, we're given to understand that in light of this pace that has been shown in terms of exports, this overall export figure for the whole of FY26 is likely to go up to as high as $33 billion, which will be substantially higher as compared to $24.1 billion that was clocked in FY25.
With that, it's a wrap on this edition of News Center. More news and updates continue right here.
Well, we are coming to you from the sidelines of the JP Morgan India Investor Conference, and I'm sitting down with perhaps the world's most famous banker. Jamie Dimon is CEO at JP Morgan Chase. Jamie, great to have you with us here.
Good to be here.
Really appreciate it. And it's been exactly 11 months since we last spoke. And I mean, oh boy, news flow has been tremendous, ups and downs and whatnot. But I want to start with India and US. When we last spoke, and I think even 2 quarters back, expectation was that India really would be in the first in the line to get a deal. It would perhaps be a favorable deal as compared to some of the other competitor exporting countries. It's been exactly the opposite. I mean, what do you make of it?
Well, first I want to say I have to come to India to be on CNBC, but this conference has gone from, from a small conference to almost 1,000 people here and 200 companies. We've seen enormous growth in India, and we're very optimistic about India in a million different ways. And the president and your prime minister clearly like each other, so which I think is good. I don't know what derailed it. I do think the Ukraine, Russian oil has been part of it, so I would take the president at his word on that. I'm still optimistic. In fact, I think Scott Bessent or the president recently said, no, we're going to get something done with India, and I hope we do. I think it'd be very important.
How will this work out? Because I mean, I think the Indian side has been very clear. I'm not asking you exactly what happens, but there has to be an off-ramp, right? Yeah. To knock those 25% off and then maybe work down the remaining 25% as well.
I'm not involved in negotiations. I don't know. Yeah. I do think they want to do something on the American side, and I think they want to do something on the Indian side. Yeah. And so I'm hoping that they resolve it intelligently. I think it'd be good for both parties. And I think, India is a great friend of America. It should be. I know it's non-aligned, and it should stay non-aligned, but with their non-alignment, we should be their best friend.
And before coming in, I was watching CNBC, the squawk, and there was H1B, which was the big talking point headline. And it's kind of now sort of going into services as well, which so far it was not. It was mostly about goods. So is it expanding, or you think this is also all part of negotiation and it will finally settle down?
I think it'll finally settle down. That caught everyone off guard. And so we had a lot of phone calls over the weekend. What does it mean? And from what I understand, it means new H-1B visas. And a lot of H-1Bs go there because they need the expertise. And so I'm sure a lot of people will be going to the American government explaining why we believe it. I believe in merit-based immigration. As a matter of fact, I would beg the president, he has accomplished border control. That's great. I mean, I think all nations want real border control. That helps make a nation. But after that, we should have, good immigration. And I've heard him say publicly, more merit-based immigration, good seasonal worker stay, DACA stays. That if you get a degree in America, we should stamp a green card onto it. I agree with those kind of things, and so we'll hopefully be engaged in the government in this too.
During President Trump's first term as well, I think a lot of industry bodies went and sort of lobbied. There were actually lawsuits, etc. But there was a fair bit of pushback. Do you think there will be this time as well? I mean, with regards to services and H-1Bs?
Well, I wouldn't combine the two because services are different than H-1Bs. I think there'll be some pushback in the H-1Bs, yeah. And like I said, I haven't spoken to him about it, and I mean, I was basically flying over here when I heard about it, or so we'll see.
The other thing, of course, Mr. Dimon, is it's called HIRE Act, right? Which, again, it's in the Senate. We don't know if this goes through or not, but which proposes a 25% tax on offshoring. I mean, global capability centers, and JP Morgan has got a large presence here, but it's not so much about JP Morgan's business here. But how do you think about something like that?
I've heard about that act. I don't know about it. Trade is a very complicated thing. And I hope we get it right. I think there's been a lot of negotiations since then. I think Secretary Bessent, Secretary Lutnick, the president have been engaged in it. I think they've come to more reasonable positions. So look, we're a great believer in trade. I think if there's trade that needs to be fixed for national security, it should be fixed. And I think if there's something terribly unfair, it should be fixed. There is unfair trade. Sometimes it's non-tariff barriers, sometimes it's quotas, sometimes it's tariffs itself. But this one I'm not completely aware of. I don't know. A lot of services, we provide a lot of service to other countries too. Right.
But your broad view is you should look at these things as a transient phase and it will settle down.
I hope so. I really don't know. I hope so.
Okay. Let's talk about the U.S., Mr. Dimon. How has your view changed?
Yes. About all that. The most important thing to me is that the Western world stays strong military and economically and together.
Right.
That free and democratic society. That is the most important thing. And to me, I would be, when I'm looking at trade, I would incorporate that in my thinking. Keep the Western world together economically. So,
let's talk about the U.S. itself. You think it's you know, a lot of economists were saying that, well, recession in the second half. It's not happened. I mean, high frequency data, hard data is still coming in very strong. Combined with, I mean, maybe the loosest financial conditions we've had in a while. I mean, just wanted your thoughts about how you're looking at the U.S. right now.
There's a lot of conflicting, I mean, data itself is not perfect. There's a lot of conflicting data. But right now, unemployment is still low. Consumers, both low end and higher end, are spending their money. At the low end, they're a little stretched. And credit losses are going up a little bit. So it's not a disaster, it's a weakening. I don't know if that's just a weakened economy or not. You have a lot of stimulus coming in the tax package, and you have a lot of, I'm not going to call it stimulus, but spending on AI. So a lot of CapEx is up, but it's almost all AI, data center related. So, I hope it continues, and I'm a little more cautious on inflation than other people. That may not go away so quick because of the global deficits around the world. Those have an inflationary effect. The remilitarization of the world, the restructuring of trade, those things are all kind of inflationary. And maybe, less immigration in the United States, could help push up wages in the United States a little bit, which is not all bad because, a lot of people, deserve a wage increase. So,
you've always sort of warned the world about very high deficits, deficits in America, fiscal deficits in America. Do you think as estimates of, tariff intake comes in, hundreds of billions of dollars, depending on who you ask, are you a little more sanguine about where this is going, direction of travel, with regards to deficits out of America?
Well, in the short run, okay, I'm a free trade guy, so I'm hoping that, other than unfair trade and national security, and I hear that from a lot of people in the administration too, the current numbers have, the tariffs may collect $400 billion or so, but the one big beautiful bill has a lot of stimulus coming next year, and which is good, an offset, and dereg. I think like in America, like in India, I think the regulations of the world have slowed down investment, permitting, building things. Like anyone you talk to in any industry will tell you, it's almost longer to get permits and fight litigation than it is to build what you're trying to build. So I do think that's a positive. So I think we need a growth strategy. I think that America and every country say, how are you going to grow? Growth is what allows you to pay taxes, pay your social safety nets, which means you need jobs, you need business, and that, I think that's good that they're pushing that. I think too many governments were not pushing that. Other than that, the deficit's going to have to come down one day. Growth is one way of getting it down, but eventually we're going to have a Simpson balls type of thing to make more rational decisions about the deficit.
The direction has changed in that sense. This administration coming in compared to where we were earlier, where we were going.
The administration is more growth, more pro-growth, but we haven't really attacked the fiscal deficit problem yet. Growth will do some of that. I don't know if it'll do all of it.
Okay. Yeah. Your call on the...
But the other thing about the deficits, and this is global, this is like every nation on the planet, and everyone's got very high debt levels too. I don't know when that becomes a problem. I can give you a logical argument that it can become a problem in 6 months. I can give you a logical argument it might be 6 years. But it will become a problem, and we're, like most problems, you're better off dealing with the problem than letting it happen.
Yeah.
So I hope we are a little more thoughtful about that.
Absolutely. The Fed, Mr. Dimon, what's your sense? We've seen a cut. Is this a one-off in your opinion, or the start of an easing cycle?
I think people focus too much on 25 basis points. I don't know yet. If inflation does not go away, it's going to be hard for the Fed to cut more. And inflation seems a little bit stuck in 3%. Again, I give you some arguments why it's going to go up, not down. And obviously, if we go into recession, and that's why rates are being cut, that's not good either. So, hopefully you can have decent growth and maybe rates come down a little bit, but we'll see.
You weighed in strongly in support of the Fed when, we had officials from the executive making comments and sort of attacking the Fed, asking them to cut, etc. You think that's kind of sort of eased off a little bit, or how do you see this?
It'll start. I've always said that there's no American president who ever said, I want higher rates. So